and I only have 3 houses for sale next.
What changed?
Because the peso is just,
With you and
the
Gelsinger.
peso's been shredded.
You were just, I mean, by the way,
Well, the stock,
so appropriate.
the stock hit a level where it doesn't go down on a bad quarter. I call that a bottom. Now, David, I'm well aware that I've already said this.
Yes, occasionally I'm going to say the same things. My dear friend, my former partner, now that we're heading towards a divorce.
Community property, David, is great.
I own this.
When we come back, tech CEOs congratulating the president-elect on his victory. Bezos, Nadella, Cook, Benioff, as they get ready to deal with the new administration. Take a look at the pre-market. So many movers. Wolf, Bros, Lyft, Donut, RL, Tap, Hershey, Warner. When we come back,
Good morning. All right. Hope everyone had a good evening after a historic run-up yesterday. Make sure you check out the Gamma update. We have the FOMC today with a 97% odds of a 25 basis point cut delivered later today. The cut in December is currently about 66%. It was 75% about a month ago. 10-year yield is up 80 basis points September since the September FOMC cut. Seems like the rate market is confused, I would agree, which is leading to allowing for more potential equity volatility. What did we rally yesterday? 145 points on the S&P? That's a pretty big move. Okay, we want to stay above 5,900 S&P. I'm just watching NVIDIA at the moment. Okay, looking at the NASDAQ, the New York FANG Index, New York FANG Index, Apple is up, Amazon is up. Supermicro is actually pushing hard, not a New York FANG component, but watching that too. Google is up, Meta is up, looking good. Meta, let's take a look at Meta. The iron condors I took yesterday, suggested in the spreads channel, ARM and Qualcomm look fine. Those will be a profit. AMD turning, which is a good thing. I have an iron condor on AMD. I took the puts. No, I did not. Oh, that was something else. I belay that answer. Okay, Mobileye.
I think that there's a sense that they might do this to anyone. President Xi said some good things or made good wishes to Trump. So in terms of people,
okay, NVIDIA, Tesla. I want to look at Meta. Meta.
We know President Trump.
Okay, Meta bouncing off the 50-day.
Does like cordiality
And flattery.
Well, that was the term I was going to use, but I was
Meta is currently 576, so we're on the move. Meta's pushing towards 580.
Nothing. Exactly. Bezos obviously controls and owns Blue Origin, which competes with Elon Musk's SpaceX.
Right.
To some
Money
extent.
Magic
So
levels.
that's important as well, you'd imagine. Yeah.
Let's see, Meta,
Well, it'll be
Meta,
interesting
Meta,
to see.
Meta.
Remember the original, the first
575, 580.
council briefly, then it kind of disbanded.
Didn't work out. Maybe they tried to
So a lot of those puts on
It's dead.
Money Magic's
Former
chart
Secretary
is looks like they'll be losing some value as we ease up above the 575 call wall. Okay, so that's a good thing.
We do have, I think, a piece of sound from Mnuchin this morning on Squawk. He was asked about some of the top priorities for the
Meta.
incoming White House. Let's see if we have
So 580 would be next. Yeah, Apple's looking good. Apple's looking good. Okay, Apple 225, 230.
I think a lot of people were convinced that this is it, that he's going to really come in with the real agenda that he had, and those people that he had.
If you're not using Money Magic's levels, you're doing yourself a disservice.
You know what, I dealt with them when I was.
I say that all the time, but it's a fact. Anybody that's used it
And I'm seeing many of the guests
knows what I'm talking about.
who were on that show being spokespeople, and they were far more reasonable than people realize. It doesn't necessarily mean that they're all going to get.
Money Magic for, I like to keep this open. His chart, I keep it open on the screen so I can very quickly reference prices. So if I'm going to go into, say, Apple, I know that 225 is a level that may meet resistance. So why would I want to buy calls there unless it moves above 225? The answer is I don't. So
General Kelly was so outspoken. I almost feel like the generals want to maintain a level of independence that Trump doesn't like, whereas the corporate people are used to being subservient.
Right. Well, he did. I mean, Rex Tillerson obviously had been the CEO of ExxonMobil and became Secretary of State in the first part of his first administration.
That didn't work.
But yes,
so
you mentioned
well
General
either.
Kelly, who was his chief of staff for a period of time.
okay, so did you add something? The chart's getting longer and longer. Let's see. Oh, you got Super Micro on there too. Okay, I see what you did. Okay.
They distinguish
You've
themselves
got
as
all of the,
but let me say,
okay, that looks, oh, you got gold and silver there too. That's right. That's been on there for a while. I just wasn't paying attention.
It's trade. It's
Looks
treasury,
good.
You know, it's National Economic Council.
here's one I'm going to throw it in. Is there any
Audio's low? That's because I'm facing away.
a repeat.
What, from the current administration?
Yeah, I'm just asking. No. Oh, okay. There
Or
we
you
go.
mean the way in which Harris said she would bring a GOP around?
Exactly.
No,
Exactly.
not a chance.
Not a chance. No.
Okay.
Just put it out.
Mic check, mic check.
Look at
Are you
Kramer's-
still in the running, or are you done? You gonna stay here?
I have no comment.
Especially after our split now, or, we're negotiating the terms of our divorce?
Mic check, mic check. Okay, see, I'm right on top of the mic now. So, okay, Meta looking pretty good. Meta's at 570, 577. Looks good. Meta.
Is not a charm. And the third is real bad.
We'll get Kramer's Mad Dash and countdown to the opening bell as this rally rolls on. Take another look at the pre-market, still holding gains. Squawk of the Streets back in a moment.
Okay, let's get ready for the opening bell. We got about 6 minutes to go. 6 minutes to go. Okay. Yeah, I believe in karma. Everything you do, there goes Tesla. Tesla breaking out. Launch mode. I definitely believe in karma, do good things. Do good things. Good things come back to you. Okay, somebody just like whacked it back down. Whack-a-mole on Tesla. Check this out. Check out Tesla. I had a nice pop there. Somebody whacked it back down. Bastards. Trying to break out. So you can see the supply that's right here, right along this level. Okay. That was a previous high. We keep banging up against that previous high from what's today? Thursday. From Tuesday. Wednesday. Okay. Volume was pretty decent. You see the volume? Looks pretty good. Pre-market. Oh boy. Tesla, Apple still pushing. Meta still pushing. Meta looks good. Okay, just keep in mind Meta. We've got levels at 575 and 580. We're above 575, so 580 looks pretty good. Yep. Breadth is good. Good morning, Corey. Okay, so real quick, I just want to check.
Take a look at some S&P gainers. You'll see,
We got 4 minutes to go. So here's your support and resistance levels. It's running along the bottom of the screen too. Okay. Okay, futures still grinding higher. Okay, jobless claims were at 830. We're still grinding a bit higher. Let me bring up financial juice. Let's see. 1107. Okay. All right. Hope everyone's ready. We got about 3 minutes to go. First 15 minutes, I don't do much of anything except take profits off the table as a regular basis. Okay. Let's go to financial juice. See what the jobs numbers look like. Okay, so initial jobless claims, actual was 221, forecast was 222. Previous was 216, so a little bit more. Revised number was 218, so still some jobless claims out there to be reckoned with. And a very strong economy. Okay, what do we have today? 4-week bill auction. FOMC. The major thing is FOMC today. Okay, so we're grinding a bit higher. Let's see. I don't think I have any SPY calls or anything, right? No SPY calls. Okay, 0 day to start the day is very tight. At the highs, we were achieved, 145 points, I believe, yesterday. Vald was pretty elevated. Up volume greater than 2.5 to 1 across the board. Qs were 3.5 to 1 at the close and 3 to 1 on the IWM. IWM was very strong. Okay, major levels are 50 points in either direction from right where we are. Okay, we could rally right into FOMC and then lose a lot today after that big gain yesterday, or just keep going. So, being we're up right now, I don't know that I'm going to trade S&P cash. I'll be focused on Qualcomm. I have some calls there. Monitor.
But one that is not challenged is Ralph Waldo.
Okay, Qualcomm.
Has done such a good job. And also working with Ralph. These numbers are powerful. North America is very good. Europe is.
Okay, watching that.
I said it before, I'll say it again. Very strong.
Mobileye is up.
Numbers are good.
Mobileye looking good.
What I liked about this data
Palantir doing fine. Qualcomm. Okay. Meta's going. Meta's going. Qualcomm. Well, profit taking, looking for a bounce in Qualcomm. Qualcomm Iron Condor. I'm gonna go ahead and close that for 40 bucks, 30 bucks. Okay, Qualcomm. I closed the Iron Condor for 30 bucks. Qualcomm closed Iron Condor for 30 bucks per contract. Expires tomorrow. Okay, Qualcomm looking good. I have some verticals too, looking for a bounce. I'll leave those alone for now. Let's see what ARM looks like. ARM Holdings, I have Iron Condor on ARM. Okay, that's on the move. Okay, let me go take a look at that real quick. ARM, okay, ARM, sorry. ARM Holdings. This is the Apple Iron Condor. ARM. Okay, we're right in the middle, so I'm just going to go ahead and sweep that one and take a profit there as well. Those worked out really well. Let's see, where are you? ARM, okay, ARM. Ooh, that's a big winner. ARM, that's a big win. Nice. Nice. Close that for 4 bucks. Okay, ARM. ARM, Iron Condor. Close it for 5 bucks. Nice profit.
And let me give you the other side. Now, this happens to be informed more by
95 per contract overnight.
What he'll say to you is right now it's operating at about a fifth grade level, and it's just going to get, it's going to eventually through graduate school, and that's what these iterations are. I think if we had Mark Zuckerberg here, which is highly unlikely, but believe me, I'll do my best. I think we would say, look at Meta AI, which is going to be the number one, not ChatGPT. It is so suffused, Carl, with video. It's so exciting. A lot of times I just find myself with a few minutes to kill. I put things into Meta AI.
Qualcomm, okay, that's good. I just need to get, there goes Meta. Apple zipping.
You should be using what Mark Zuckerberg has done with the latest. By the way, Amazon is the same.
Take some profits. Take some profits into strength. FOMC today. After a historic 145-point run yesterday. Okay, so I'd be taking some profits off into strength. I think that makes a lot of sense. ARM, let's see, why is that not filling? ARM Holdings. Oh, it's up to $8. All right, let me go ahead and change that to 8 bucks. Let me go 8 bucks. All right, so I'm out of the ARM for 8 bucks per contract. So $92 contract, $92. Okay, ARM, adjust to 8 bucks to close. Profit $92 per contract. Not bad, not bad. Love it, love it, love it. Okay. Okay, ARM's out. I'm out. Okay, so that's good. So depending on what these do today, I'll probably buy some call verticals or something. Okay, what's AMD doing? AMD hanging out at 146 and change. Today is day 7, was it? Lee Star, you said? AMD. Okay, Tesla, Meta. Okay. Meta. FBL, where's FBL? Where are you? FBL. Okay. Looks good. Nice profit there. Super Micro. Move back down a little bit. Google. Google. Nice profit on Google. Okay, I got November 15th, 180, 190s on Google. Let's see if we can get a little bit more out of this. All right, Google's looking good. If you've ever paid attention to your P&L in the morning, okay, in like the first hour, have you ever paid attention to your P&L? And you could be up like, I don't know, $5,000, $10,000, depending on your positioning. By noon, a lot of times you'll see your P&L maybe drifting a little bit lower. And not taking profits in the morning, I found, is one of the reasons. So I like to take profits in the first 15, 20, 30 minutes. Sometimes I'll wait an hour, but I like to take profits in the morning. Wait for those dips, B and C, get back in on the dip, play the market. If you're into day trading, you don't have to be into day trading. You could be a swing trader and just be fine. But, that's what I like to do. I've noticed that quite a bit. I always think about it, but I never talk about it. All right, Tesla pulling back. So Tesla popped up. You could have had a nice little profit there, a little higher profit, I should say. Tesla. Okay, what else do I want to do here? Google. Okay, Google, maybe I'll take that off. All right, I'm going to take it off for a nice profit. Google. Got more time. Let me take a look at Google. I might not want to do that. Google's moving. Okay, so I'm going to leave that alone. That looks really good. Can we see 183? We'll run into some resistance around 183. What's the money magic levels on Google? 177.50, 180. That's on Google. 177. Okay, we got 177.50, 180 for Google. Okay, looks like we're going to bounce. A lot of these are going to bounce. NVIDIA's ripping. NVIDIA looking good. Took NVIDIA off too soon. Always better in hindsight, right? Still wouldn't change anything. I still like the idea of taking profits off in the straight. Netflix looks good. Okay, I'm going to take some Netflix off into strength. Okay, I have NFXL. All right, so NFXL had pretty big position in this. So I'm taking this off into strength. Netflix is moving higher. Reason why I'm taking profits into strength right now and into the morning is because we have FOMC today. We had a big move yesterday. I wouldn't be surprised, as Brett was pointing out, that we pull back a little bit after maybe achieving some higher levels. S&P 500. Okay, so 59.50. What did we hit so far? 59.54. S&P looks really good. ARM is still going. So ARM, I'm probably going to buy some calls in ARM, but I'm not going to do it right now. I'll wait. Let's see, ARM on the daily. Okay, ARM. All right, so I took this off for $92 per contract. Nice gain. Okay, this looks like it's going to keep going. The numbers were pretty good, right? ARM holdings. Let's see what the numbers were on ARM. We want all 4 metrics to be green. Okay, ARM holdings. Looking good.
Salty snacks down 17.
Okay.
I do.
So ARM Holdings, let's take a look at their earnings. Beat expectations. All right. So earnings growth isn't that great. Revenue's okay. They beat top expectations. They came in with 30 cents versus 25, 844 million. Okay, I might skip ARM for now. I might do more credit spreads instead. Okay. Okay. Tesla back up to the highs. I'm going to take more profits off the table. Okay, Netflix was looking good. Netflix. Okay, Netflix is probably going to keep trending. So what I want to do is I'm probably an ABCD pattern today. I'll get back into Netflix. I'm bullish Netflix. I just want more time. And buy some options. Maybe after FOMC, we'll see. ARM Holdings, that's done. IWM, what's IWM doing? IWM. Okay, Doji.
That Bancel did himself a use of service by talking about multiple vaccines for different types of cancer and personalized vaccines. And that has
NVIDIA still going. NVIDIA looking good. Okay, NVIDIA looking really nice. NVIDIA follow through. Note the Bollinger Bands are opening up on NVIDIA. NVIDIA.
Say again. Lilly was down sharply yesterday.
Lilly right now has lost the mojo. That's a technical term. No mojo.
Okay, NVIDIA is opening. Bollinger Bands are opening. Expect a fast move. Expect a fast move. Okay, so Bollinger Bands opening up on NVIDIA. That's a critical thing that I focus on because volatility is picking up. That means prices are moving. NVIDIA, we've got 147, 150. We're above 147. 150 is the next level. So you know what dealers are having to do right now? Dealers above 147 will need to buy shares to hedge. If above 150, short squeeze.
No, I did because Jensen Huang spent a lot of time in Denmark. A lot of time being 18 hours.
Okay, so above 147, we've got dealers needing to buy shares to hedge. They don't want to push it too far because they want to keep it below 150. But if we do get above 150, wow, we're starting to haul ass right now. Okay, that looks good. Okay, NVIDIA. Big move on NVIDIA. Maybe an ABCD pattern to sell into. Tesla chopping around. Tesla on a dip. Bobby T, congrats on that. Apple bought some verticals yesterday. What's that look like? Apple. Okay, that's looking good. Apple, let's take a look at Apple. Okay, nice gap up on Apple. Okay, we're testing the 50-day. Apple testing the 50-day.
You know what? The interstate highway system is now open to full self-driving. You guys handle with the off-ramps, but Interstate 80, 90, whatever. They're all
Apple testing 50-day and call walls. Okay. Meta is still rising. NVIDIA.
Do you think Jensen Huang, who's spending less time sleeping, Jensen Huang or Elon Musk? No, Elon does.
Looking good there.
I mean, not enormously, but he
Okay. Nicely, Star. Okay, TLT with a little bounce. All right. So we got the nuclear stocks. Let's see what they look like. Oklo grinding higher. Nano Nuclear. SMR has earnings tonight. Okay. Qualcomm is done. No, I got the verticals on Qualcomm. FBL looks good.
Work from home and how diligent curious. Frankly, both of us think it is. He shared that. Just it was interesting, and of course, like everything.
Okay, pull back on the S&P. Okay, Mobileye, MBLY. I meant to look at this through the lens of Appel's triple MACD. Okay, these are all bullish. Okay, I'm looking at the MACDs. Okay, short term, intermediate, that's the normal 1226 that everybody watches. And then the long term, which is 1939. That's what Gerald Appel, the creator of MACD, suggested using for the long-term trend. If you're a swing trader, this is a very important setup. I know acceleration. I saw your charts this morning. I believe those are 3 MACD setups, right? Let me go back to his chart. Pretty sure that's what he had. MACD. Where did I see that? Yeah, there it is. Okay. MACD 1939. Yeah, you got, okay, so you got the triple MACD setup. Great, because I know you like to swing trade a lot. And what you got, stochastics, you got 5 and 14. Yeah, that's good too. Very good. You got ATR, you got CCI, on balance volume. Very good chart. It's a little vertical, right? And you're using you're using Ichimoku, man. You're using everything. Wow. Impressive. Cool. All right, Mobileye looks really good. Mobileye, you got the 50-day. No, that's the 200-day. 200-day overhead at 2275, 76. So that's going to start turning up. Wow, look at these freaking. Look at these FANG stocks. Wow. AMD also pushing higher. AMD. Okay, looking good. So I closed all of my iron condors except for AMD and IWM. IWM I did adjust. Okay, I sold the put. No. I sold the puts. I bought the call. I mean, I rolled the calls. I rolled the calls out to the end of the month. And I currently have 240, 250 IWM. Okay. So all MACDs are turned up. So we're getting close to 240, 250. I'm looking for a little fade so I can take this one off. Qualcomm. I'd like to see a follow through on Qualcomm. NVIDIA's at the high. Qualcomm, a little fade. Okay, looking for a bounce. Qualcomm's numbers look good, right? Qualcomm. I want all 4 metrics to be green. Okay. All 4 are green. So I'll hold on to Qualcomm. I probably won't trade verticals on ARM, although you probably could scalp it. Momentum traders will be in it. But as far as the swing is concerned, ARM, I'm less interested in ARM only because the metrics tell me to focus on Qualcomm. I like to see all 4 of these green. If you look at Qualcomm, looks really good. ARM Holdings. All right, so I'm just looking at the statistics, plural, from Earnings Whispers. They've been published for like 25 years, I believe. So you want to see all 4 of these green. You want to see earnings growth and revenue growth, and you want earnings beats. You want profits to be moving up and to the right, increasing over time. Let's look at NVIDIA. NVIDIA was off a little bit last time, right? NVIDIA missed expectations. Okay, so their earnings growth slowed down, but it's been crazy high. I think it was like 600% or something like that prior to the last quarter. So that's why that's numbers that way. Let's look at Meta through this lens. Meta coming back a little bit. Okay, Meta. Okay, all 4 are green. Okay, Apple, same thing. Apple. It's just one more thing to check. You know, it doesn't take long to just go to Earnings Whisper and check the earnings, make sure everything is hunky dory. Okay, looks good. Apple's hanging in there. Apple. Okay, Apple. Okay, so most stocks are at highs doing the same thing right now, taking a breather. We got fair value gaps. Fair value gap is a 3-candle pattern. Okay, you take that big candle right there. You see the one before it and the one after it. The one before it, the one after it, candle 1 and 3 don't overlap. So you get this box with a line through it. That's just telling you there's a fair value gap. If you remove this one big candle, you have a gap to fill, and we'll probably come back and fill it before moving on. There's another one down here. Okay, we'll see. But Apple looks fine. Just looking for a follow through now. Apple. Okay, look for a follow through on Apple. Still early. Apple, I have December 225 calls and a vertical 225, 230. What's Supermicro doing? Supermicro chopping around. Amazon looking very strong, and I don't have a position at all in Amazon. Let me take a look at Amazon, see what that looks like. First thing I want to check is cyan on your TTM. Okay, you can see the Bollinger Bands are opening up. Let me get rid of the morning. Okay, so big Bollinger Band explosion there. Let's go out in time. Let's go to the 30-minute. Okay, 30-minute. All right, it's riding the upper Bollinger Band. TTM is bullish. I prefer to buy over here when we're in the squeeze and look for a follow through. So I'm not going to chase this. Amazon, let's go to the hourly. Okay. And let's look at the daily on the right. Daily. Daily looks good. I'll check the TTM over there too. You can see Bollinger Bands are opening up. So we're bullish there. You could scalp it, I guess, but I'm not going to chase this. Amazon looks really good. NVIDIA hanging in there, holding at the highs. NVIDIA. Okay, Mobileye doing well. Let's take a look at Mobileye's TTM on the hourly chart on the left and the daily on the right. We're breaking through resistance. You can see the 50-day is turning. That's the 50-day over there on the right. Okay. So where are we right now? If you would just take one look at this chart, where would you think you are presently? If you said starting phase 2, you're absolutely right. Phase 1 is the accumulation. Okay. Phase 1 is accumulation. That comes at the end of a move to the downside, markdown below the 50-day, price action stays below the 50-day most of the time. Okay, we got lower highs and lower lows. Now, what's to say this doesn't turn out to be like this right here? Okay, another flat base area and drop again. Well, that's what we're looking for. We're looking for proof that it's not. So we'll come back up and we'll hit some resistance up here at 24, 25, something like that. But this looks like accumulation. You can see the volume as well. All right, so we want this to go this way. All right. Looks good on Mobileye. Okay. Tesla chopping around. Apple looks like it wants to keep going. Apple. Okay, that's the daily. Oops, daily you're looking at there. Daily. Okay, what's Bitcoin doing? Bitcoin, we don't want to see that follow through again too. Okay. Markets look good. Better than I anticipated, given the move that we saw yesterday. It'll probably quiet down into FOMC now. So that's why I like to take some profits off end of strength. Let's see what Jason and Joe K are talking about. High tick 700 plus 700. All right, we're looking for tick to turn. Cumulative is what I'm thinking. Okay, we closed using the 1 hour. Okay, let's look at the 15-minute. Okay, that needs to turn up. So tick right above the 0 line right now. So we'll probably slow down. The markets will probably slow down. Okay, you can see Apple with that liquidity grab right there. That wick with the rectangle around it. See that? That's a liquidity grab. All right, so institutions try to get people to chase this. They grab shares right here. Does it pull back first? Watching this. Let's go to the 15-minute. Okay, we're still looking very strong on Apple. Looking for a follow-through. Amazon looks good. So I want an ABCD pattern on Amazon. If I'm thinking about buying Amazon, I'd rather have an ABCD pattern. Okay, I don't have a position right now, so I'm not chasing it up here. I'm looking for a B and C. You can see the fair value gaps overhead. So those will most likely get filled because they're early in the morning. The later in the day that a fair value gap occurs, the less likely they get filled.
Costco's big break. I mean, they made a very significant misjudgment, I think, in terms of thinking somehow unions and the Democratic Party were
They didn't even win Michigan.
Clearly,
The
they're not
Teamsters didn't get, but their antipathy toward corporations. They eventually look back and say they had the same populist view of the 1890s.
AMD. Oh, looking good, AMD. All right, so I'm going to buy some calls on AMD. AMD is looking good, making me smile. Okay, we're headed back up. We got an ATR of 5 and change on AMD. So now all I need to see is, okay, I don't know that I'm going to get an ABCD pattern here. Maybe I'll do a little scalp on AMD. It's going. All right, take a little risk. I'm going to take a little risk here. I don't usually do this, but it's 10 o'clock and it's trending. And this is day 7, wasn't it? Or day 8? 1, 2, 3, 4, 5, 6. Today's day 7. So we tend to look for 8 days, 7 to 8 days. It lets the oscillators all recycle. Okay, I learned that from Johnny over at Day Trading Radio. I don't know where he learned it from. I'm sure it wasn't off the top of his head because he does refer to a lot of other traders like Jeff Cooper. I know a lot of you know Jeff Cooper from Hit and Run Trading, his book. A great trader in his own right. Okay, AMD looks like it's going to go. So I just can't do it. I can't chase it. I will get an order ready, though. See if I have something. I like the Thinkorswim ability to save a trade setup. I like that. Okay. I'll look at tomorrow's calls. Maybe we'll do a quick move. Okay. I mean, there's a pretty narrow spread on the 149, 150s. Okay. Can we get to... Yeah, it's a little stretch. I can't see us getting to 150 real quick. AMD, let's look at money magic levels before you do anything. You're not going to miss anything except probably 146, 150. All right, so we're above 146. We'll probably see 150 today. All right, so go 149, sell 150, 250, because we know we're not going to get there. All right, I'm going to scalp these and see if we can get anything out of this. Let me see if we can get a little pullback first. All right. Okay, AMD. Okay, look for a little dip here to buy AMD, maybe.
It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on next gen investing.
Available
Okay, what's
anytime,
Boeing doing?
Anywhere on any device.
Boeing, a little bounce on Boeing.
Power your portfolio with a swap
I did buy some calls on Boeing, so been off on those for the last couple of days, but they're December 155, so I'm not too far out of the money. There goes Tesla. Tesla, boom.
Schwab Bank Investor Checking built for investors, named highest in client satisfaction by JD Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide.
Okay, so what's Starbucks? Starbucks, we're looking for it above 100. Okay, Starbucks not there yet. Okay, there goes Tesla.
Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop.
Okay, Tesla, nice move. Yeah, hot toad. Tesla. I bought the dip on Tesla yesterday after selling the first 15 minutes. Nice. I believe Bobby T, I think you said that you bought the dip. Nice one. TSLL. Bobby T. Nice job there, Bobby T. I'd like to know what you had for breakfast. Good. Looks good. Tesla.
Yesterday's big rip kind of cooled off a little bit this morning, but we're shifting the action into tech. That's when things get exciting.
Wow.
Giants leading the
Tesla
way
looks
here.
good. Tesla.
Up, chips up 2%. Meta, a key winner this morning after.
Okay, let's take a look at Tesla. Before I do that, I was going to look at Bros. You guys looking at Bros?
Everything was up yesterday, basically, except
BROS. Bros. Oh, big one. You can't chase that. Can't chase it. Amazon's still going. Okay, the markets are very strong, so it looks like institutions keep buying, and you've got dealers having to cover their ass by buying shares. You know, when you get above a call wall, the dealer wants you to stay below the call wall, so they'll do everything they can to try to keep things below. But once you get above, the dealers have to buy shares in order to hedge their short call positions. You're buying calls, so you're long. They're short those calls they sold to you. Gets above that level, guess what? They got to buy shares to hedge, and that creates a feedback loop. And you see these stocks rip to the upside, like we have with Tesla right now. Tesla coming out of a squeeze too on a 15-minute. Oh Lord, what are we gonna do? Won't you buy me a Mercedes Benz? My friends all have Porsches. I miss Janis Joplin. Every time I think about some of her songs, they come to mind, you know, in some life moments. Okay, Microsoft. I need Microsoft to catch a bid. Okay, all right. All right, so believe it or not, we've got about, unless I got something wrong here, let me just scroll. All right, so yeah, okay. That's what it was. We got about 30% red on the NASDAQ 100, about 70% green. Let me look at the market watch. Breadth, if you looked at what Corey posted this morning, advanced decline percent for all the majors, big caps, mid caps, small caps, and the NASDAQ 100 were bullish. Okay, let's leave the Russell 2000. Russell 2000 is about 50-50. All right, so there's more sellers than there are buyers on the small caps right now. So they're taking profits on the small caps. Let's look at the S&P. NASDAQ first. NASDAQ 100. We've got 70 advancing, 30 declining. So definitely got a nice move on the NASDAQ 100, S&P 500. Let's check that real quick. S&P 500, 260 are advancing, 240 are declining. So it's about 50-50, a little bit more than 50-50, 55% green. Okay, so 0-day is riding the upper Bollinger Bands. We've got 9-1, 10-1 up volume on the Qs. Qs. 10-1 up volume on the Qs. That's big. That's probably we're probably going to see these continue, these stocks. So don't sell too soon. Okay, I wanted to do something with Oracle. I got a vertical. I want that to bounce. Okay, I want ARM. I want an entry on ARM. Nothing yet. Okay, Amazon. I want entry on that. Nothing yet. Okay, Amazon. Meta. Little dip there on Meta. Little flag. Okay, Nvidia still going. Wow. Nvidia. Okay, let's keep an eye on Nvidia. You know that's going to be more or less leading today. Look at the buy order blocks yesterday coming into today. The squeeze over there on the right was a shorter time frame, 5-minute. Okay, the 5-minute squeeze. You see that? That was your buy right there yesterday on Nvidia. We saw that on the dip. Some of you were trying to buy the highs. You probably would have done fine, but I just don't like buying the high of the day. It's just not my favorite thing to do. Futures continue to go. Wow, this is going to be a banner day. Keep an eye on TTM. That'll tell you when to start selling. Okay. For example, look at Nvidia. Look at the chart on the left. You see this TTM? See how it's still opening up? Once it starts to show blue bars, look like up here at 1 o'clock yesterday. See how the blue bars showed up? See how we went sideways? That's what you're looking for right now. If you want to sell into strength, the age-old question from new traders, I'm in now. I'm making money. When do I sell? I always sell too soon. Keep an eye on TTM. That's going to help you out a great deal. The one on the right is the daily. You can see that's gone from dark blue to cyan. That's telling you NVIDIA is probably going to keep going. Now, what could hold it back? Well, what could hold it back is the calls overhead at 150. All right, so we got a call wall at 150. So the dealers have to keep it below 150. If we get above 150, dealers going to have to do what they're doing right now on Apple, Amazon, Tesla, Microsoft, and a few others. It gets above the call wall, they got to buy shares in order to hedge their positions. They're making the market. You're goosing it to the upside. Cat just looked at me. Her name is Goose, named after the second in Top Gun, Goose. I thought it was a cool name. She likes it. She answers to her name. All right, so we're looking really good. Keep an eye on TTM. Okay, I don't need to tell you. I got 10 stocks I'm watching there, 15 over here. Just watch TTM. That'll tell you when to start taking some profits off. Looks really good. Okay, you got 1618 on Tesla, so you might want to sell some into strength on Tesla. Watch your TTM. That'll change colors from cyan to dark blue. I might take some off into strength that I bought on the dip yesterday. Tesla, TSLL. Yeah, that looks good. All right, I'm going to take a little bit off here, keep some on. All right, Tesla just took a little bit off of TSLL. Shares. I'll keep some. I'll keep a couple hundred shares for more upside. Looking for Bitcoin to bounce. Coffee's good. Dunkin' Donuts, vanilla fufu. All right, let's go over to. I have to say, I'm very impressed that the media outlets aren't like crying over the election like they were back in 2016. That's a big change. I'm glad to see they are focused on the markets and less on bickering about who won. Like Joe Kay said, I thought it was a really great really great quote from Joe Kay over at Option Hawk. You know, now of course he was a Harris fan, but I haven't seen him bitching or moaning. What he did say was pretty enlightening. Doesn't matter who's in office, it's about earnings. And that nothing could be more true this time of year in this particular environment. Earnings have been beating for the most part. Multiples look good. Trump media is fading off there. Bitcoin starting to bounce. It's all about earnings. It's not about who's in office. Yeah, it could help or hinder, but earnings are what drive the markets. If a company's not making money, it's not going to be driving higher. Okay, Nvidia continues to move. Wow, what a day. Okay, I'm completely focused on TTM right now. All right, so I have several positions. I have Nvidia going into earnings. I have the 180 call for December. Okay, on dips, I want to scalp it. Those 180 calls are up quite a bit. All right. You might say, why'd you buy way out of the money? It's because someone else bought a crap ton of Nvidia out on December 20th. Let me go look at Nvidia. I'll show you how much is there. Nvidia. That was pointed out, I believe, by Leestar, right? December 20th. The 180s, where are you? 139,800 contracts at the 180 strike. Okay, I have a position. That's my position. My position is in. What's the name of that song? What condition my position is in? There's always a song for everything that happens.
Some of that could be tied to the pound as well, which they did cut in BOE, but they didn't necessarily come out.
First, no, that wasn't it.
I think that you saw some firming up in some of those other currencies. Of course, the dollar index is only going to perform based off how it refers to other, or the dollar is only going to be priced based on how it does versus other currencies. And strength in the pound, strength in the euro is certainly influencing that. You all see it in the Aussie dollar, you see it in the yen. So it's a broad-based strength against the dollar today. Kind of look at that the same way I look at the Russell too, which is huge move yesterday. Sometimes it's just natural to cool off a second, let things catch their breath.
Jerry Lee Lewis
said this yesterday.
Okay.
The more things change, the more they stay the same. So to your point about, hey, maybe it's not about policy shifts and stuff. Maybe it's just the fact that we're through the catalyst.
Okay, looking good. Keep an eye on your TTM. Okay, you see it on the bottom. All right, Tesla's starting to consolidate at the highs. I took a little bit off into strength. Amazon is not going to give it. Not going to let you get in. Amazon is just ripping to the upside. Supermicro going. There goes Supermicro. Supermicro's on the move. Supermicro, short covering. Supermicro, short covering Mondo. Okay, we're at almost 24 now. Our Supermicro is running. Okay, nice move off the low yesterday. Supermicro, shorts covering. You can see the volume. Look at the volume. Cool. Sorry if you've been trying to get my attention this morning. Good morning. Good morning, Stephen. Good morning, David in Texas. Rick.
As investors are hoping that we're seeing a pickup there. And then expense management, that's been a real focus for the company over the last year or so. Expectations going into revenue, earnings per share about 88.
That's pretty funny. That's funny.
6.17 billion, up about 11%. Worth noting over the last 2 years.
They know where their paycheck comes from.
Earnings estimates by about 75% of the time, revenue
Rick.
about 88% of the time, and hasn't always, of course, equated to the stock jumping after the results. Right now, Block is guided for a 17%.
Okay, so Supermicro, look at the TTM over there on the right. You can see that if this starts to turn, you can see more heavy short covering.
Q3 estimates are coming in about 63.94 billion compared to just 61.94 billion in Q2. But if you're watching this chart, you can see, the revenue has really grown since 2017 and beyond, right? So they were at about 2.2 million in revenue. Now they're about 22 million last year. A lot of that.
Yeah, I told him, Corey.
The Bitcoin-related revenue that they've seen. But expenses have also been up. Net income has kind of fallen year over year, hit a loss of 540 higher interest rates over the last few years has really caused this company to struggle some. Block has really been focused on cost efficiencies, and I think we're going to hear a lot more about that in this report. Announced, to limit their employees to about 12,000 last year. They've got this rule of 40.
I got a feeling deep inside. Oh yeah, I got a feeling that Supermicro could get an epic squeeze. Mondo and I both probably too big a position for my own good, but if I get back to about 26, I'll be at break even. And held on to this one. I just didn't think a company that makes the products they distribute to companies like, was it XAI, Tesla's facility, its servers, supercomputers, and NVIDIA. I can't see them being worthless. Yeah, they screwed up. Management probably needs to be ousted. Somebody come in there that sees the books and understands how much money they make. That would be really cool. But yeah, we could see a big, epic, short covering rally, which would be really cool. Okay, just keep focused on that TTM on your charts. Like, look at Amazon. Amazon, look at that. You can also start to see a parabola will start to form. Okay, see how we're starting to change direction right there? That's where, see all these fair value gaps, those boxes inside of prices, those candles? That's telling you this is probably going to come back a little bit. So Amazon, I'm looking for a BNC pivot. I'm still very bullish on Amazon now that it's lifted above 210. Once it got above 200, it was a buy. I just don't have a position, unfortunately. Tesla's going again. Tesla going again.
We'll see if he takes it. But so far, it's kind of been a give and take.
Yeah, that's true. Because most songs are written about life. Duh. Yeah, of course. Yeah.
No, it hasn't. And a lot of the fluctuation of Bitcoin has really plagued them. They started back, years ago with a small $50 million investment. Now they're sitting at,
Supermicro.
511 million last check in Q2. So it's certainly grown. If you ask them, they say it's there to facilitate sales and purchases.
Yeah, that's a good point. Those high put deltas, 80 delta, that sort of thing. That's telling you those are sells. Okay. People don't, traders don't sell an 80 delta. Traders don't buy an 80 delta put if they think prices are going to reverse and move back up to the upside. It's more likely they think the opposite, what they're seeing right now. Amazon looks good. Tesla still going, so I'll hold on to a few more shares. Okay, looks really good, Tesla. There goes Bitcoin. Bitcoin.
Let's trade with Joe Teagay joining us from the Rational Equity Armor Fund.
Bitcoin, don't forget me. Bitcoin's looking good too.
Maybe some sympathy with Bitcoin, maybe running up, but yeah, it does correlate with the consumer. I think it is super risky. I don't like the recent news that they're having a round of layoffs. It's not necessarily the best thing. I know they're a cost-conscious company, as they should be, but kind of is a bad omen heading in.
Okay, let's look at COIN, Coinbase. Okay, recovering, starting to move a bit higher, Coinbase.
A lot, and I don't want to sell into that narrative. I think that's a winning story today for the short term. It's not something I want to carry for the long term, but I think it's worth a trade. I think the potential for an upside move is there. I'm not thinking about a massive upside swing. Certainly possible, but I think I'd like to dip my toes in just for a little small upside surprise.
All right. Dipping your toe into which contracts? Tell me about it. Walk me through the trade.
Yeah, just something.
All right, CONL.
I want to own the at-the-money call, 78 call. Price targets around 86.
Okay, what's IWM doing? IWM. Okay, just consolidating at the highs. Burn off some theta. Okay, Tesla, very beautiful chart there on Tesla. Congratulations if you're still in Tesla. Got a couple of hundred shares of TSLL left. Okay. Wow, what a big change. What a big change in the last couple of days, right? So S&P, we told you, I think this is probably one of my favorite things to keep an eye on. Okay, something I learned from Hugh Carwitz, if you know who Hugh Carwitz is, pretty well known. He used to be the head of the trade desk at UBS in Japan. Intelligent guy. So one thing that he said a long time ago that caught my attention, which it makes a lot of sense. Okay, so the markets are moving higher right now. Okay, we just came off of 2 weeks of a fade or consolidation. Prior to that, we had 6 weeks up, which was pretty extended. I said this over and over and over again. I didn't think we'd get 5 weeks without a pullback because the average was around 4 to 5 weeks. A couple of times we had 2, these little, what I'm looking for is a move up and then a pause, move up and then a pause. In a bullish trade where we're above the 10 EMA, 10 EMA is up and to the right, which it is. The weekly changed direction at the end of the bear market in October of 2022. Most of you caught that trade, especially in TRBCX. Many of you caught this trade down here. I know Derek, you did, and a few others, buying the TRBCX. If you're long TRBCX, you're up over 110%, I believe. Okay. But the point is that you focus on the weeks. Okay. Because 9 weeks like this right here, that's pretty insane. Okay. But what you do here is you continue to take profits into strength and you day trade. And at some point, you're going to look for a dip back towards the 10 EMA and then the trend continues. But when you get to highs like this and everybody's talking about a rollover in the election and the FOMC and everything else, watch the number of weeks. We're only on week 1. So to get to my point, sorry, it took me 5 minutes to explain it. We're on week 1. The average is at least 2 to 4, I would say, 2 to 4. Can we get another few weeks? Looks like we could. Okay, all of the FANG stocks continue to move higher. Okay, so Tesla looking really good. Watch that TTM. Okay, still looking really good. Amazon, okay, so Amazon, see that? There's your blue right there. And what did it do? Started to top out. So if you got the question in the back of your mind, I'm in Amazon the past 2 days, where do I sell? Maybe you take a little profits here. If we get any kind of dip like we did over here, okay, on the 6th, this pull back, TTM turned down, we consolidated for a little while, and then we took off again. So watch TTM. That's going to help you out a lot. It's based on volatility and momentum of volatility. Okay, so that's Amazon. So I'm looking for a BNC pivot on Amazon. Microsoft looks good. Cyan bars still grinding higher. Okay, Meta. Okay, Cyan bars. Look at the TTM on the daily. So we're not done yet. We're not done yet on Meta. You see that? Okay, so the left side is telling you how to scalp it. Look for the BNC pivots. Look for that blue elder stick. The right side chart, the daily, is telling you the trend is up. So I'm looking to buy the dips and sell the rips. What are dealers doing in a positive gamma environment above 2,800? Dealers will buy the dip too. So that's your answer. Buy the dip, sell the rip. Do what the dealers are doing. If you're day trading, if you're swing trading, I'm saying Meta get back above this pivot over here. And if we check Money Magic levels, we got 575 and 580. 575 and 580. Okay, so we're above 580. So what do you think the dealers are having to do right now? Okay, Meta is above its upper call wall. So that's telling you what dealers are doing. Meta is above 580, should keep going.
Certainly 2018, it's been the largest crypto blockchain sensitive company, or sorry, ETF focused on those companies and, Bitcoin itself. So had a big run yesterday and it's been one of our best performers this year. So the other block, we just talked about Square and their block individual symbol, but BLOK, the Amplified Transformational Data Sharing ETF, certainly riding the crypto wave here.
So BLOK, $44 right now, a huge run off the lows in 2022 to 23 of like $15. The high from back of the COVID mania closer to 60 with Bitcoin at highs. Where's that gap coming from? Just some stock underperformance there, and how do you tweak that fund?
Okay, looking good.
Who's doing the best in the crypto world?
Yeah, it's a great question. We've chosen to have this be actively managed. So, during these crypto downturns, the managers go more risk off, and that simply means focusing more on blockchain companies that are a little less sensitive to crypto. And then, they go risk on when Bitcoin is.
All right, looking good.
To move the portfolio to more sensitive equities, which would be crypto mining companies, crypto exchanges, even actually owning crypto ETFs like spot Bitcoin ETFs. So this is really more of a risk managed way to approach this very volatile sector. And I think the results speak for themselves. It's the largest of its kind in the ETF land, going back to 2018, to offer investors exposure to blockchain and cryptocurrency, but do so in a risk managed approach.
All right. MicroStrategy number 2 in there right now. How's that not number 1, Christian?
Yeah, well, managers are continuing to buy and sell every single day in the block ETF. So the nice thing about a block ETF versus maybe buying a Bitcoin ETF.
Okay, Amazon's giving you that BNC pivot. All right, Amazon.
Dedicated here. So
okay, Amazon giving you that ABCD pattern. Okay, you got your second dark blue bar. That's telling you profit taking. How far we go? I don't know. But you definitely don't want to buy. You don't want to buy the high of the day or chase. That's always a mistake from my experience. Okay, Bitcoin, BTC, USD, Bitcoin. That got a nice rip too. Notice the supply overhead. Man, if we can break above 76,000, that would be awesome. Tesla still going? Tesla. Where are you going, Tesla? Oh, Tesla. Oh, what a beauty. What a beauty, huh?
Which is, the original cybersecurity ETF, and certainly with election season and
Meta's still going, looking good. Looking good. I can't emphasize this enough. Okay, you should be concentrating on buying dips when you got 1 week up with an average of 2 to 5 weeks, 2 to 4 weeks. Let's say 3 weeks. Somewhere around 3 weeks. Can we get 3 weeks? Well, we got 1 week for sure. We got the OFOMC coming out. He's going to cut rates, 97% probability of a 25 basis point cut. Just don't chase. That's all you have to do. Make sure you're buying a dip. If you're not buying a dip, question yourself. Okay, Bitcoin looks good. Tesla still going. Tesla's going to hit 300 today. Holy smokes. Tesla going to be 300.
Small and mid-cap miners, you can see a lot of potential leverage on silver's return. So that's another one to keep an eye on that kind of, again, went down yesterday.
Coinbase.
Today in terms of a rebound.
Right. Yeah, looking pretty good.
Yeah, see, Money already mentioned it. Money already mentioned it. So there you go.
The precious metals have been pretty up and to the right. What about when you look
wow.
at the fixed income side?
Wow.
The rates related stuff, macro related.
Obviously, if you've been around for a couple of weeks in this trading room, You know, this is a very unusual circumstance that we're seeing right now going into FOMC. Not saying that we're going to pull back, but you know, taking some off into strength and let a few trailers for higher prices. That's the way I would play it. That's what I'm doing. Okay, what is Qualcomm? Qualcomm participating or still see profit taking? Still seeing profit taking. ARM Holdings participating. Okay, so it's a good thing I took off that Iron Condor at the open. Okay.
People are still looking for material income, and while
This looks good. Coinbase looks good. Okay, ARM Holdings going to give us a BNC pivot on our ARM Holdings. I'm only interested in day trading ARM Holdings. I'm not really interested in a big swing trade. I'll probably sell some put credit spreads on this dip.
All right. That one's been running for a while now. So, especially with the bond stuff and focus here with the Fed, I like it. I thought maybe that was going to be like a trade for folks upset by the election. Why? Christian, last call.
Okay. What happened to Woody? Why is he quiet? Why is Woody quiet? Okay. So this morning's jobless claims were 221,000 versus a forecast of 222,000. So pretty much in line. Tesla, wow, Tesla is just going vertical. Trump media fading off to, looks like it's headed towards zero.
When you look at the 2,500 or so companies in the Russell 2,500, many of them are profitable. They're focusing on high quality, profitable companies. And we've seen some really nice results already from them, including a holding like Trimble yesterday, which does a lot of systems navigation for infrastructure, et cetera. Reported some great earnings, was up 17% yesterday. An example of a high quality small cap stock producing some alpha.
Yeah, TRMB had a monster gap. We were thinking about doing it for overlooked yesterday. Good eyes on that. All right, small mid caps map. All right, thanks, Christian. Good to catch up.
Great seeing you, Oliver. Take care.
Absolutely. Thanks for looking at funds. CEO of Amplify ETFs.
Home Depot, nice move on Home Depot. If you bought Home Depot on a dip yesterday, Home Depot also looking pretty good. HD also good.
A firm which has had some hot and cold earnings, but lately more hot than cold. And Pinterest, which is like anyone's guess. Last earnings it bombed, and the one before that, it soared.
Oops, wrong channel.
Trading at Schwab.
Home Depot looking good. If you bought the dip yesterday, they got earnings next week.
Connect with the Schwab Trade Desk. Our team of passionate traders ready to
Tesla, yeah, I would take some profits off on Tesla too. I'm going to cut some more.
Plus, get 24/7 live help and access to
Tesla,
phone,
ditto.
and in-platform chat. Trade brilliantly.
Okay, I'm out of Tesla now. Okay, this is a crazy run this morning, so I'm going to take some profits off on some of these runners.
Catch me on Fast Market.
Okay.
Weekdays at noon on the Schwab Network.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
Mobileye.
Carl's Way is the best way. Is it?
Mobileye having Mobileye is just getting started.
Exactly.
Just getting started.
And I let them manage some investments for me too.
Mobileye.
Sally? No can do.
Look it up.
Let's see, Mobileye.
Where are you going?
Schwab. Schwab, a modern approach to wealth management.
Mobileye, there they are. Mobileye.
The Schwab Network app and join us to follow all the market trends. Schwab Network is available anytime, anywhere, on any device for free.
Okay, you see the Kirby over there on the left on Mobileye? That's telling you we're probably going to see a fast move in this area. There was very little volume trading. Okay, let's go take a look at Mobileye as well. MBLY. That's one that Susie mentioned last week. Okay, looking good. Okay, so intraday, we're starting to see a little BNC pivot, but the daily looks fine for the follow through.
Trade desk. Let's knock out the best first here. I think technically, pretty great run, Jay.
Chart, frankly, I think over the last year or so, but we've seen it substantially pick up. I mean, we're off of lows now by 115%. We've risen 80% on the year, over just 8% really for the month of November thus far. So it's been a phenomenal month, a phenomenal several weeks for the trade desk here as it continues to, see new and new highs on the year. We do expect revenue to fall between around 618 to 620 million. That would represent around 25% year-over-year growth. Now, as far as partnerships, that has been a strong point for the trade desk, like Netflix, Spotify, for example, which are continuing to hopefully expand this company's influence, though Netflix does plan to develop in-house and ad tech by 2025.
Okay, charts. Okay, we're still almost 9-1 up volume on the Qs, 5-1 on the Dow Industrials, 2.5 on the Nasdaq Composite, 2-1 on the Spiders, 1.75 on the New York Stock Exchange, which we should check out, by the way. New York Stock Exchange, when you're in doubt, you always want to check out the New York Stock Exchange. Look at that bounce. What a beauty. What a beauty. Almost 2-1 up volume on the New York Stock Exchange. What do you think they're doing? Looks like they're buying. Corey showed you new highs, new lows yesterday. New highs, new lows yesterday. Bouncing. It was a huge move yesterday. Yesterday we had over 450 stocks. Over 450 stocks making new highs versus new lows. And that's a net number. Okay, so you take new highs, take new highs, subtract new lows, and that gives you the net of 450 stocks. So that was really good. Advanced decline, moving higher. Green elder sticks. We needed a blue elder stick. We got that to start the week, and then we took off on Tuesday. So that looks really good. We know we're week number 1. We're on week number 1 on the S&P after a 2-week respite. Okay, Mobileye pushing back up. Mobileye. Amazon. I'm looking for a dip to buy on Amazon. I'll wait. I'm going to wait a little bit longer, maybe between 11 and 2. I got to take a couple minute break. I'll be right back.
Common as we head into earnings, but then just kind of throwing everything for a loop. Huge surge to the upside, breaking above our red trend line, back in the overbought area, making new highs above even the previous highs from all the way back here, you can see. So now, what do? Well, we have standard deviation channels, we have linear regression line of best fit, plus one channel. Guess where the high was today? Right around there, 130.77 matches up with high of 130.78. So that's, and I'm not saying this is like predictive or anything like that. This is just a general way to gauge where an extreme price is. Plus two channel up here, 146.50 if we keep going up. Old support over here at the levels of the gaps, 125 and about 120 or so.
All right, so trade desk is getting a little bit frothy in terms of the momentum, but I mean, look, breakout, and it's like gapping higher 2 days in a row, which is pretty impressive stuff. It does suggest the earnings should be pretty good. If they're not, then that stock could be in for a little reversal. They're gonna have to hit a good number here, I feel like, for sure. All right, Affirm, Jenny, a little bit more choppy, but lately it's been on ice. What, like quarter-long run?
Yeah, but also this name, I don't know.
All right, Tesla starting to hang out.
125% over the last 12 months, while being basically unchanged on a year-to-date basis. That just goes to show the volatility.
Meta.
That's ridiculous. Where, in the last 3 months of the last year were that accretive to this company that we're 2024 is illustrating basically unchanged. It hasn't felt that way, of course, if you're in a firm, because anyone knows his name's volatile. And there was a lot of thinking that these stocks, like SoFi, for example, a firm would see a Trump bump, is what they're calling it. But we are about 15% for the week, modestly pulling back today ahead of earnings. I will say this name is one that tends to move pretty substantially. Market is implying right now a $7.70 move in either direction. So that would be substantial, I mean, for a $50 stock. But as far as earnings expectations, we are expecting about a
Super
34%
Micro.
rise in terms of their top line. Right now, Street
Okay, airlines. I see Save. Spirit Airlines is moving.
continue to come down. And I think that the buy now, pay later right now.
Okay, that gapped up.
The entire space is attempting to consolidate, where we're seeing a lot of these companies being bought or sort of find like their niche parent companies. But still, again, 34% growth is healthy. We're also expecting right now around 33% per diluted share. And I was reading a note out of Deutsche Bank that expects that they'll give the higher end of their guidance. And they said that this, again, has a company that's been able to really handle the overall interest rate environment, so that they only see operations improving now as we go into hopefully a more favorable administration, but also lowered interest rates, I think is huge. I will say that knowing this company and using it too much myself, you're never using this if you're in like a cash-rich position.
What's Palantir doing? Palantir.
You can't afford what you were buying. And
Okay, a little dip in Palantir, getting a little downgrade. Palantir.
Some credit risk for that reason. If you have people that are continuing to make these exorbitant purchases that maybe they can't actually afford. So there is that risk always as far as like the delinquency business, but it doesn't seem like that's slowing things down anytime soon.
Jobs holding in, people still spending, rolling that debt. Yep, okay, it's working so far. And the firm, I mean, has seemingly convinced the market the last few earnings. Last one in particular, that they've got a good, sustainable, safe model right now.
Yeah, very abrupt 180 with that last earnings, because you can see here that for a while, and kind of here's what Jenny was
Watching
talking about.
Palantir to turn back up.
And then, we topped out near 52.48. Then we trended downward here, and kind of just the way the year started and matched up. That means we didn't really have a lot of net movement on the year, but you can see kind of connecting the highs and the lows here, parallel lines here. Conventional trend lines are usually drawn across the highs. Oftentimes when you duplicate it and put it across the lows, you'll find it matches up in kind of an interesting way here. But as I said, a very abrupt reversal on earnings here, a big gap upward. Now it's the opposite. We're in an upward channel.
Tesla's still hanging out at the highs.
And these highs. We actually fell a little.
AMD with a nice follow through.
Also where our upper line of our channel would top out. So they kind of
Day 7, AMD. Home Depot looks good. Home Depot cruising higher. Home Depot.
We're below the 50 level, which is this high all the way back here. Our red line, that's about where we closed yesterday, and we're below that level now. So we haven't really been able to hang on as well as you might have hoped here. RSI compressing, it's in a triangular shape, back in positive territory.
Home Depot looks good. Buying the dip yesterday proved to be a good idea. Home Depot.
Here would be support, 46.14, our green line. We've got our yellow 21-day EMA, a little bit below that. And just real quick, too, once again, standard deviation channels. If we were to move to the upside, this is the level we'd have to cross. That's where the +2 channel comes in, same level, 50. Once again, the same level we had trouble breaching. +3 channel comes in near 57.
Okay. All right. So the breakout here has been real. It's held on. It's established a new channel, even though it's a wild one. I mean, firm is still a volatile stock.
Bitcoin's looking really strong. Bitcoin.
What, like $8?
Okay, don't forget about Bitcoin.
So, I mean, it is one that you got to be buckled up and ready to rock.
Bitcoin on the move. Wow, that's impressive. Coinbase. Okay, trying to break higher. Coinbase.
Even more weight than we originally thought. So a key area between like 42 to 43.
So a lot of moving averages now acting as support, but they are kind of down there low. I think volatility basically is the name of the game. If a firm is able to break out further, then
Mobileye.
really, really impressive, because it already seems like it's really stretching.
Looking good. Mobileye. Okay, so let's go down the list of stocks on the top of the NASDAQ 100. Meta's number 1. Meta exercising its bullish follow through. Stochastics MACD, perfect setup if you're looking for a decent entry. Not right here, but look for BNC pivot now. Yesterday was a good bounce off the 50-day. A little risky because there was elevated volume. But MACD and stochastics reset. RSI is rising. Tried to get through 50 yesterday. Now it's following through. Meta looking very strong. Of course, all the New York FANG stocks are doing the same thing as we like to look for. New York FANG, whenever these are all doing the same thing, okay, you got 3 white soldiers at highs, which is really unusual. Unusual strength. You usually see 3 white soldiers like over here at the lows. Okay, at these pivot lows. These 3 white soldiers more impactful a lot of times at lows, but this is going. So that's telling you shorts are covering, new money's coming in, and there's catalysts, a new president. Okay, so what we need to do now is to look at sectors and go back to 2017, the first year of Trump's presidency, and analyze these different sectors and see how they performed. I think that'll be very helpful. You already got people buying these sectors, anticipating.
Because you're just skewing to such, again, a niche demographic. I think it's like me, honestly.
Okay.
I do use Pinterest, but I know that I'm few and far between as far as like Pinterest active users.
Yeah. All right. I mean, I feel like they still have a lot of untapped potential commerce-wise. And I mean, would you agree with that, Jenny? Like, they still, it feels like they've just been really slow moving in terms of like monetizing their platform.
I think they need to get like somehow more influencers on this platform, honestly, because the people, I hate to say it, but people flock to like the TikTok thing,
2017.
Pinterest doesn't really have that same appeal.
So we know the S&P 500 rose during his the first half of his term, went sideways a little while, then rose into 2020. Tesla's still going. All right. Tesla. Wow. Wow. Look at this market. Wow.
Green line right here, crucial. That was the high point we had before our big gap up on earnings back here. That was also where we had a severe break to the downside during the next earnings. Now,
also on the earnings.
yeah, exactly. Now it's a ceiling here. So around 34.30 is where we.
Okay, the put side of AMD's Iron Condor is doing exceptionally well.
Crossed above all 3 moving averages, crossed above volume profile, point of control. RSI bullish, but still not really making progress beyond those old highs. Look for a push above like 65 or so. Potential resistance here, red line 36.11, post gap down high, and then ultimately up here around 39.80. So around 40 would be ultimately where you'd want to go.
All right. So pins, getting a little bit kind of squeezed in here, but if it does break out, it could be pretty fun if it gets back above that green line. Just they're gonna have to deliver something good. Otherwise, it seems like more likely they get stuck in the range. A lot of volume building up between 32 and 35. Lots of trading. It feels kind of cozy in there right now. So maybe have to
AMD.
Thanks, Rick. The context on the charts. Thanks, Jenny, for the info. Coming up, market meetup time. Equities now all higher. There's that Russell. Was looking for the flip earlier, and we got it.
AMD, nice follow through. Meta, wow, looking really sharp, Meta. All right, so these New York FANG stocks are doing really well. Okay, Meta, nice reversal off the 50-day. Google pushing higher. I still have this vertical over here that expires tomorrow. Is it tomorrow? Google. Yep, looks good. Google. No, the 15th. Okay, so that's wrong. It's the 15th. AMD looking really sharp, looking good. AMD.
Well, we've got stocks now up everywhere. The Russell's a little slow start, but did flip positive.
Bitcoin doing really well. I'm
Joining
gonna
me
do
now,
something with
Diane
Coinbase.
Curran, Director of Schwab Advisor Services.
It's up against
You're up
resistance.
again, Diane. Follow through here today.
Yeah, definitely. You're seeing that today across the board, as you mentioned earlier when we started the session.
Oklo's up 12%. That keeps going. Oklo. Okay, Oklo looking really strong. Oklo, I have the 26 call vertical, 2630 call vertical. That one's making a nice run for it right now. Save.
Adding to their advanced Nvidia up a little less than 2%, Meta up 3%, Apple up 1%, Amazon up 2%. So you're seeing some gains across the board, and you're also seeing this resetting of targets coming out of the different banks and brokerages today. Evercore ISI joining some of that resetting group.
The airlines, travel and leisure, strong, big move yesterday. What about the banks? JP Morgan. Okay. Wait, that's yesterday's candle. Why is this not updated? Morgan Stanley. That's weird. They don't have JP Morgan updated? Oh, there it is. Okay. Inside day. So I'm looking at doing adding some bank exposure. I'll wait for a couple of days for this to flag out. Maybe put in a base up here at the highs. KBE. KBE, the S&P Bank ETF. KRE, the regionals. Regionals doing the same thing. All right, so I'll be looking at some exposure there. Okay, Tesla.
Mike, S&P chart. Give me the technical look. Is 6 an inevitability?
Mobileye. Okay, Oklo's still going. Oklo, if you got any of these small nuclear reactor companies, Oklo's on the move. I have a position in this and Nano Nuclear. Okay. SMR has earnings tonight after the close. Okay, Nano Nuclear. Okay, these are all up on the day. SMR has earnings tonight. So if you have profits, you may or may not want to take some profits off in the strength, depending on what happens with SMR. I think these are probably going to keep going. So this is something I would like to hold on to for a long time going forward, provided regulations aren't abusive. The markets look good. We're about to make new highs on the futures, coming into the 11 o'clock hour. I'm your host, Cousin Vinny, coming to you from theclosingprint.com on a glorious follow-through Thursday. FOMC, 97% probability that the Fed is going to cut rates 25 basis points. The probability of a 25 basis points in December has dropped somewhat, I think down to about 65%. That'll change, obviously, all depends on what Jay Powell has to say. You know, I really disliked Jay Powell in the beginning when he started his rate cuts, and all during the process with all these Fed governors were constantly saying the same thing over and over and over. Every single day, it just seemed like we had Fed speakers repeating the same thing the Fed chair said a week ago. You know, it was just annoying as hell. So we'll see whether or not he can keep his seat with the new administration. Everybody seems to think no. But I think he's done a good job in negotiating, especially considering the printing presses.
I have no idea how he's going to respond to some of this stuff. Hopefully, he doesn't brush it all off.
Exactly. I mean, I think a big part of what the focus is going to be today when it comes to the Fed is the actual press conference.
Printing money. That's the bane of our inflation problem.
When you look at the CME Fed Watch tool, it's nearly 100%.
If Milton Friedman was still around, you'd have him on every single day talking about the Fed printing money. Elon wants to cut $2 trillion out of the budget. 2 trillion with a T. That's pretty impressive. There's got to be a lot of waste.
I think we can expect to hear some questions about the election and the potential impact to Powell's tenure. We know there's been criticism there, so I think we'll see some questions on that front.
Hey, Mike, give me the 10-second rate story. 4.5%, that's our limit?
Percent is the critical number. That's the downtrend long-term resistance level we tested yesterday, moving back from those highs. Above 4.5%, housing historically has gotten a little bumpy, so that's the number to watch.
All right, there you go. Hey, nice. There you go. So I'm never intended to do the 20-second drill, but we just invented it. Thanks, Mike. Thanks, Diane. Thank you for joining Morning Trade Live. Nicole Petalini's coming up next. Trading 60 in New York ahead.
Okay, Netflix trying to get above the 790 call wall. Netflix is pushing higher. Tesla's relentless. Tesla is relentless.
Let's break that down for you. Every day from our studios here in Chicago and on the floor of the night, we deliver more than 8 hours live programming. We kick off every day bright and early at 8 a.m. Eastern with a futures show breaking down commodity markets, futures, and technical trends. At 9 a.m., I'm in studio hosting a 2-hour opening bell show, Morning Trade Live. It sets the blueprint for traders for the day and invite top analysts and investors to determine what's driving the early action, how to interpret the news.
Look at Oklo go. Tesla. Shit. It's going to keep going. Tesla. Expansion day breakout. Yesterday popped. Followed through. Breaking out above resistance. So you got a major base on the weekly time frame. Look at this move on Tesla. Can we get it back up to 400? Probably. Wow. Okay.
At 3 p.m., I'm here to guide you through the closing bell. We construct the best narrative explaining the day's action, which trends held or broke, and prepare for tomorrow's earnings and other market-moving events. Spend some time with the Schwab Network. I promise you haven't seen anything like it.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power.
Home Depot. All right, jockeying around Home Depot.
Get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money.
Home Depot trying to go some more.
Your investor checking account is linked to your Schwab One brokerage account. You can manage your checking and investing in one.
What's Boeing doing? Boeing finally turned the corner. Okay. Let's see Boeing. What's Boeing doing? Boeing.
Get more with Schwab Bank Investor Checking, the checking account built for investors.
Okay, Boeing, nice move on Boeing. Need to get back above the 50-day. Highly unusual. The second follow-through day after a huge move yesterday. My gut keeps telling me, keep some holding some shares and things, but also considering taking some profits off in the strength. 6,000, not too far up. Let me see. I don't think Brett moved the call wall, did he? I forgot to check that. Let's see. Call wall 6,000. No, it hasn't changed. All right. So looking for the call wall to start moving higher. Yesterday at the close, excuse me 1 second. Yesterday at the close, Tom Lee was on, and they were talking on CNBC about his year-end targets. And he said, yes, I need to readjust my targets. He could see the S&P rising another 5 to 10% by year end. So I believe his target was 6,000 something. I know it was 6,000 something. 6,000 might have been 6,100, something like that. Anybody know for sure? He's looking at 5% on top of that to 10%. And that's based on earnings. And you've seen Charlie Bolello posting, if you follow Charlie at all, you know that he's been posting earnings have been good, that, multiples are expanding, and that we should look for more upside, that he's looking for more upside. Okay, Microsoft's still going. So Microsoft, a couple of you looked at Microsoft yesterday and correctly noted that this one is still held back somewhat, that we should see a follow through. Microsoft is a pretty decent risk reward, is what I was searching to say. Risk reward on Microsoft is a bit better now, considering everything else is at highs. Okay, Nvidia's at highs, Tesla's at highs. So you don't want to chase these. If you're thinking about one of these big names, big tech, it's probably Microsoft, and Microsoft will probably keep going. What's the Microsoft levels on Money Magics? Okay, Money Magic survey says Microsoft is 425, 430. So we're coming up against 425 right now. We'll probably stall right here and give you an ABCD pattern entry. All right, you're probably going to get an ABCD pattern entry. So I'm going to put in an order for when I take my son to school, which is going to be pretty soon. Let me do, when are their earnings, Microsoft? Microsoft already had earnings. That's right. We had a 9 Condor. Okay, Microsoft. Let me just take a look at Microsoft's earnings report. They beat expectations. Okay, so this is what you want. If you're bullish a stock and it hasn't gotten back up to highs, 10% earnings growth, 16% earnings growth, revenue growth. All 4 metrics are green. They beat the high estimate. They came in with $3.30. So they beat by 22 cents. Okay, so that's a good beat. And that's a reason to think long on a stock like Microsoft. Okay, but I don't want to buy it at the high. If you want to buy at the high and you don't want to risk missing it, you can scale into it. Scale into it, perhaps. What do they have? Year end? The 27th is the last day. It's a weekly for Microsoft. Okay, I'm going to set up a order for Microsoft. I'm going to set up an order for Microsoft for a follow through. This looks really good. Okay, Microsoft on the move.
economy is going to have to digest 5% Fed funds rate next year. I call it the effective lag Fed funds rate, right? The Fed funds rate that we're going to feel in 26 in the real economy was set 18 months ago. The Fed cutting rates today.
All right, Microsoft is ripping there.
For 18 months out, which means spring of 2026. They're late.
Right.
Objectively looking at the dual mandate, they've got basically inflation's not a problem and the labor market's down. So they should be cutting as rapidly as they possibly can to that 275. So whether they do 25.
Microsoft looks good. Looking for the follow through. Okay, looking for a dip. So let me put a limit order in at a lower price. Okay, Microsoft, let's see. Microsoft. Okay, I'm just going to create an order here for, I don't think I'll get filled. Let me go, say, 180 on any dip. Okay.
What should the Fed do today, and what should the Fed do December 17,
No.
18?
Well, let's be honest. I think the Fed understands what we just talked about, and they
Yeah.
need, and the pivot that the Fed did in September was dramatic,
Okay, 180.
substantial, and should not be discounted. So whether they do 25 today or not, as long as they get rapidly as they can to 275, and then I would suggest pause. But here's the point: we don't know what this looks like when they get to 275. We've got an economy that was hooked on extreme fiscal policy. And we have a new administration coming in that wants to basically make the government more efficient and make it, and reduce the amount of government spending. And so how does that play out into 2026?
All right, so watch Microsoft. Looks good. S&P at the highs. Okay, let me take my son to school.
Maybe not. I don't know. We have to wait and see. I mean, you know that he's more interested
All
in trying to see what the Fed does, maybe more so than prior administrations. In the meantime, if the economy is functioning, you look at the stock market, we're almost at 6,000.
All right, I'll be back around 12 o'clock.
The stock market and risk assets are going to anchor off of what the Fed is doing, right? And so when you have a period of time of liquidity, right, risk assets do very well. And so we would expect the NASDAQ to do well, Bitcoin to do very well, and risk assets to do very well. The real question comes in 26, when the Fed has really started the main part of their rate cutting cycle has been done. And you're sitting there and we're looking at fundamentals, and we're looking at earnings,
Right.
and what Mr. Trump is going to do with this administration.
So then we'll have to wait and see at 2026. In the meantime, how about what the Fed's doing with the balance sheet? You know, they've been running off the balance sheet, right? That's one of the tools. And there's been talk about maybe they should just do the mortgage-backed securities and not the treasuries. I mean, any thoughts on money printing and how the Fed is doing things in that matter?
The Fed needs to stop, period. The Fed needs to basically stop taking liquidity out of the system. The Fed has to be honest with itself and say that we're going from a wartime-like economy with 125% debt to GDP, with almost 25% of GDP is caused by government spending, and we're going to go back to normal times where the private sector is going to be driving economic growth. When you do that, like after World War II and World War I, we get a growth scare. They've got to stop, pause, get to where they think is neutral, and then watch and observe and make additional steps. They're not there yet. They're not even at the point where they can pause. So they should just stop contracting the balance sheet and get to 275 as quickly as possible, and then stop.
So don't bother with the balance sheet at all. Just leave it where it is.
Just leave it where it is. I mean, there's just too much noise going on. We've got so much transient economic data going on. They really don't know, right? And so we really don't look. My opinion is that the fact that, which is I think it's missed, is that Mr. Trump's a moderate. He won on a centrist economic policy. You don't win the swing states in the popular vote being extreme. Joe Biden and Harris were the ones with the extreme modern monetary theory policy. I know it's going to freak a lot of people out, but I might be wrong. So why not wait to see what the cabinet says and let's
Right.
look at what the policies are moving forward.
What about recession? Are you concerned about recession or American hardship anywhere in here in the next few years?
My base case is a soft landing because of the innovation. I honestly
Okay.
think that with the new Trump administration, innovation is going to be unleashed. Think about the fact that Elizabeth Warren is no longer the head of the Senate Banking Committee. That's why regional banks are taking off. That's why Bitcoin's taking off. We've also got $1 trillion estimated to be spent on AI. So the United States is the place to be. And if we unlock innovation, right, we have a renaissance in front of us, right? But it's the timing, right? If they don't implement the strategies quickly enough on the Trump administration, and Powell and the Fed are late and continue to keep the foot on the brake and take their foot off the brake and just let the economy and the private sector breathe. There's a lot of risk there, but my base case is soft landing.
That's good news. And I know you were talking about Musk in your notes that would go into your innovation story there to unlock that. Thank you so much. It's great to chat with you. Appreciate it. James Thorne, Wellington Altus. Thank you for being here today. Plenty more to come here on Trading 360. Up next, it's the big three. 3 stocks, 3 charts, 3 trades. Rick Ducat takes us through the technicals. Alan Nuckman takes us through the trades for Marathon Digital, Mobileye, and Marathon Oil. We'll be right back. He's Alex Coffee. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. Time for the big three. 3 stocks, 3 charts, 3 trades. Rick Ducat will take us through the charts. Here to take us through the trades, Alan Nuckman, Chief Market Strategist at BullseyeOption.com. Great to see you both. Alan, I know you're watching the markets at new highs, looking at those technicals. What's been jumping out at you on the S&P or any trends you're watching?
Well, for me, there's nothing new here. The trend, I wasn't expecting the trend to come to an end. We're in a momentum market, and now we've seen a relief rally. And let's look for this to continue and extend itself. But this is just a larger overall run up. It doesn't matter what administration we're in. You know, we've rallied 50% in the last couple of years, and you know, it looks like we're off to the races.
All right. Now, first up, your first trade's going to be with Marathon Digital. Why did this one jump out at you?
Well, crypto, again, I'm no crypto expert. I'm no trading bro for sure, but I can read a chart and it's got a very positive chart. Obviously, it traded between 50 and 70,000. When you look at Bitcoin, it broke out of that range. So that targets 90,000, which is still up above. So, you know, we're within this close of the all-time highs even before the election. So it's got its own internal strength and so forth. So crypto plays, I've looked at Riot. We've had Clean Spark. So we've talked about numerous crypto plays from a risk-reward standpoint. The crypto miners haven't participated in this rally until recently. So I'm looking at Mara, traded about from 19 and a quarter. It's been between 15 and 20 for, you know, a long period of time. You're also seeing leverage buying. You're also seeing bullish divergence where it made a new low but not new highs. And so it's got all of the indicators that I like. You know, breakout of this this range targets 25. And so I'm looking at a position there with a 15 call, a call down to support, trading for about 650 right now. And I think there's a lot more upside because the miners are significantly discounted to their previous highs or even their 2022 highs. And so there's a lot of upside potential there, just looking for a bottom-based breakout.
I mean, we had so much fun watching anything related to Bitcoin this week.
Yep.
Yesterday, we were talking about Coinbase up 20%, Bitcoin at new highs. We've certainly seen a lot of action in the group and volatility too. How about we have Rick Ducat take a look here at the technicals, please?
You know, Nicole, I couldn't help but notice all three of our companies start with the letter M today. And I started noticing that there was a lot of M-type patterns in these charts, which are important for technicians to keep an eye on. And I'll tell you what, there's actually three good examples in this particular chart. First, all the way back here, big rally to the upside and give us this M-type shape. This would be kind of a bull trap type shape here, where we had a significant surge to the upside, then a strong, drop to the downside, and then another rally, but it doesn't get as high as it did previously. That's a sign of waning enthusiasm. And in this case, it did eventually translate into a collapse. But it also gave us a consistent bottom to watch. This green line here near about 1485. So that's one way you can use these kind of M shapes. Similar situation here. In this case, though, the M, the second high, was actually higher on an intraday basis. But if you look here, we never managed to close above the previous closing price here. So even though we had some fireworks, it didn't really work out. We had the same kind of collapse here, giving us another repeated low point to watch. That's our pink line here, 2250. You can see how many times it's proved a stopping point over and over again. Now, more recently, we have another M, zigzag type shape here. And this shows us that we're range bound. We're stuck in a range here, but we are kind of pushing out to the upside. We're breaking above our red line today. We're still kind of within a channel, but we've pushed above all our moving averages, our volume profile point of control, and a downward slope on our RSI. So looking, the bulls would be looking for a breakout probably to this, red line 2250. Then eventually these old highs, they're 28.
All right. Thank you for that. I like the M theme too. You're not wrong. Alan?
Yeah, I came up with the M theme. I was just, looking for the stocks as I do, looking for the setups that I look for. And it all happened to be that they were, started with the letter M. So I guess it's M good as far as these chart patterns go. And it's about risk reward. To get back to the Bitcoin miners, I can't talk enough about risk reward and how much of the market's already taken off. And these haven't. And I think I can look at these kind of like the gold miners, which were stuck for a while, and then when gold made new highs, the gold miners started to firm up. Same kind of thing is happening here. It's got a little lag behind it, but I love the risk reward in these Bitcoin miner plays.
All right. Next up, we have Mobileye. Tell me a little bit about that.
Again, it's just a chart. I'm seeing leverage buying coming in, and it's been trading sideways between 10 and 20. So we're above the 15 midpoint, so that should send it to the 20 range top, and then a breakout above that sends it to 25. Bigger picture, that we could, a breakout of that 20 sends it to 30 actually. So again, it's about risk reward here. Some stock that hasn't taken off just yet, but I have my indications that a bottom is in place. And so I'm looking at a February 15 call, again, the bottom of that range, trading around $4, a couple dollars in the money. It's got 3 months of time. It is positioning for that breakout. And that's what I like to do. And that's what I've done on this show since the get-go is buying options with plenty of time that are in the money, and then when it does make this technical breakout move, it's a confirmation I'm on the right side of the trade, and then it'll build on it. But again, these profit from just modest moves in the underlying stock, these options can do very, very well.
Okay. Let's see what Rick Ducat has to say about this chart, which, by the way, up 11% today, makes it trickier to trade, I'm sure. Let's see.
Another chart that could be making a turnaround here to the upside. But, to continue our M theme, these M's show the range-bound price activity. Right here, it gives us a clear boundary to the upside and the downside. You can kind of see that shaded box here. Once again, same deal here. A zigzag type of price pattern that took place between roughly 25 and 33 or so. And then we did eventually break to the downside. That's why we look for these repeated areas of support and resistance, because the moves, when we do eventually breach them, can be very energetic here. Now, just a couple other things. We saw bullish divergence here at these low points. We kind of had a more consistent bottoming area near about 1210. That's also roughly where our volume profile point of control comes in, so around 1275. So this was a very significant area, a lot of activity. Could mean the bottom is in here. Upward sloping trend line, taking out our two moving averages, yellow 21-day and orange 63-day. RSI bullish, not quite above the overbought area, but making a new high over the previous high. Resistance area between our two red lines, this gap level, 1845 to 20, then our old range, 25 right here. That would ultimately be where volume starts to pick up again. And we'd be back in our old range with that M shape.
All right. Let's see. Final thoughts here on this one, Alan, please.
Yeah, it's again just about the risk reward in this particular positioning, and I like his phrase energetic. I call it a coiled spring, and a coiled spring, when it pops, it's built up that energy to continue that explosion. Now, today we've seen already a breakout move on this stock. When I researched it, it didn't have this breakout move, so let's see how it follows through. But that's why I use options, because I'm looking at the big picture to see how it develops and builds on this in the next coming weeks and months.
Yeah, I mean, it's worth noting, too. We're covering a lot of lift today. Mobileye had that partnership. They announced that they have the deal to boost availability of robo-taxis. So this is some good news here for the two companies.
And if you go in your archive here, the last time we did this Big Three show 2 weeks ago, Lyft was my number one Big Three stock. So I didn't know the connection, but there we go.
Who knew, right? But you were on it. You're telepathic. Okay, let's take a look here at Marathon Oil.
I wouldn't use the word telepathic. I would say that I like to position for success with high probability, and I've got my indicators to put me on the right side of the trade. All right, let's get into MRO. So I wanted to stick with the M's. This is the worst of the M's. This is Marathon Oil's been between 25 and 30 now for 8 months. And so we're in a bull market. At some point, these oil companies are going to participate. It wasn't that long ago that Exxon made all-time highs. Oil has disappointed me again and again and again, and we don't have enough time for me to give you the number of agains that's disappointed me on the upside. So a breakout of this range targets 35. It's just math here. I'm looking at a March 25 call. Got 4 months of time. It's traded at 450. It's 350 in the money, so I have the right to be long from 25, which is, a discount to where we are. I don't think there's that much downside in the oil market. I think that sector still has a lot of potential, and it just hasn't done it yet. So we also have the OBI in the fact that we also have the money flow into this stock. So someone's building some long positions here. So I'm going to follow the money on this stock and see if this M can shake it up a little bit.
All right, let's see if Rick looks at these technicals and finds it to be the most worrisome of the three, let's say, or maybe least strong. I don't know. Rick?
I guess you could say perhaps maybe the least strong, but I would describe it as the most range bound. Once again, continuing our final, M theme here, we had our gap up. this gave us our green line to watch, 25.55. You could draw a ton of M's here. You know, you can see that we've kind of repeatedly, you know, zigzagged up and down here. Very obvious range. The low point that I just mentioned was tested repeatedly and held between like 25.50 to 26 or so. That would be kind of the buy range for traders that as traders have been looking at it. And to the upside more, we have the high point, 29.75. That was our around where our best close. That was kind of where we topped out a few times beyond that. But also when you look here, you can see this darker red line here. Once again, a frequent point for price to either close or have trouble staying above. We didn't really make hardly any progress above that area. I notice as well, the boundaries are where the volume starts to drop off significantly. So this is our range. These are the boundaries to watch, 29 to 25.55. Volume profile point of control, 27.70. Once again, frequent stopping point for price too. But for now, we're above our moving averages, but we're near the top of the range, so to speak here. RSI halted at a repeated ceiling as well here, you know, but we could see a breakout. Those are the levels to watch.
Okay, Rick, thank you for those charts and your insight there. Final thoughts, Alan Nussman.
Well, an MRO, the simple measured move target of 35, this option would gain 100%. So, you know, it's looking for a modest move. And I just want to finish up with we're seeing obviously a market melt up, and so everything remains very, very positive. And we're going to get a rate cut today. So again, it's not my job to pick a change in the trend. I want to just go with the market momentum, and we've got plenty of that right now.
We probably think you have a crystal ball or something. Thank you, Alan Nussman, bullseyeoption.com. Rick Ducat there on the charts. Appreciate you both. Thank you. Coming up next, we're going to spotlight Rivian ahead of the earnings that are due out after the close today. Now, the stock is down over 50% on the year so far, but there's been some optimism about this company and its cool cars and all that, EVs. Trading 360. We'll be right back.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. It's time to spotlight Rivian ahead of the company's earnings that are due out after the close today. Carl Brower, executive analyst at iSeeCars.com, is with us to take a look. The stock is currently trading at $10, but has taken a beating, though there are plenty of people who still think this is a great company with great expectations ahead. What are your expectations? Let's just start for today, from this afternoon.
Yeah, I think it's going to be kind of a tough environment for EV startups like Rivian and Lucid going forward, because we know with the new administration coming in, there's going to be less incentives and regulations that are trying to push the electric vehicle sales. That doesn't mean there won't be electric vehicle sales or electric vehicle interest, but they're not going to have the kind of support that they're getting right now through government help and regulations.
So some concerns about the future, administration, how that may go. They are reportedly due to report the first quarterly revenue drop. That may happen. What may be pressuring the company?
We've seen EV sales kind of plateau. They're still growing, but they're not growing nearly as fast as, for instance, new models and new capacity keeps entering the market. So it makes it harder for each individual model because there's more models and more capacity throughout the industry every day. And when you combine that with, again, this likelihood of fewer incentives to sell these vehicles, it's just hard to see any one company or one model really growing a lot going forward. I think higher priced vehicles, especially, they've got a solid audience, but I don't think they're going to grow big volume Rivian until they get a more medium, lower priced vehicle like the R2 or the R3. That's over a year away. And I'm just wondering what the environment otherwise is going to be like for EVs once those vehicles hit.
Right. I mean, when you think about the landscape, you mentioned the new administration, we did see that Rivian and Lucid pulled back while Tesla was gaining. This was yesterday and today, actually, as well. So, is that sort of the new thing? You don't expect that EV growth will occur going forward?
Yeah, I just think that we're going to be kind of at the levels that we're at now. I mean, I'd like to think it'll grow a little bit. It's already slowed its growth a lot in the last 6 months. And I don't know if it's going to keep growing once these incentives go away. And it could even pull back. And people are wondering if, Elon's, in quote unquote with Trump will help give him some kind of an advantage. And he does have a lot of scale. So he's certainly better positioned than startups to do well in a retracting market. But I think all the electric vehicle makers are going to be facing challenges.
I mean, Rivian itself faced some challenges with a supplier sort of misstep. It was categorized as they had to delay. They had parts shortage, and so they did face some delays and production cuts because of that. That's maybe a one-off. I don't know. You tell me. But that could factor into this kind of quarterly report, no?
Certainly those things will play a role on a quarter basis, but I think, like you said, those are kind of like little things here and there. Those are transitory things. The larger concern is the long-term outlook for electric vehicles. Now, the two other interesting potentially factors are if there's tariffs to keep outside EVs from coming in, that might help stave off, competition from China. That could eventually help a company like Rivian and other domestic-based EVs. I think more interesting would be something like further alignment between Rivian and someone like Volkswagen. There's already been some alignment there. The brand is powerful enough and it's desirable enough. It's not going to vanish, but I wouldn't be surprised to see it get more alignment or even closer relations with a larger existing automaker.
Oh, that's interesting. So maybe we'll see that, some sort of partnership or even mergers and acquisitions or something like that. When you think about some of the other car makers or what people are looking for in the big picture, we saw General Motors do a lot of hybrid. We've talked about Ford a lot. When you think about our big three here at home and what people want, what do people want? And do our car makers in the United States meet the bill?
Hybrids and plug-in hybrids are really where I'm seeing a lot of potential because there just isn't that leap to pure EV reliance on range limitations and public infrastructure to charge the car. Hybrids don't ever go that far, and a plug-in hybrid especially can serve like an EV 80-90% of the time, but never have range anxiety. And look at BYD, right? They've done really well recently, and what have a lot of their sales been? Hybrids, not pure electrics. So, and GM is backing back into hybrids. They probably should have never gotten out of them. We're seeing Toyota do quite well because they never did get out of them and they've only gone further into them. I think they were once again kind of seeing things better than a lot of the other automakers the last few years. So hybrids is where it's at, and plug-in hybrids, the technology is getting less expensive and lighter all the time. So it's easier and easier to integrate hybrid technology into an internal combustion car.
Yeah. I mean, we're always looking for cars to have a lower price point model to be, that's an issue for Rivian. Do they have a lower price offering vehicle for folks that who may be more willing to buy into that? That's one issue I think people have discussed. Over at IC Cars, I'm sure you're doing a ton of research. How about some of the other things such as pricing, affordability of cars in general, or even the likes of a pickup truck versus a smaller vehicle?
We've definitely seen prices slowly moderating, but we're still seeing the average new vehicle selling at above MSRP, not far above, but maybe 5 to 7%, which confirms a couple things. It shows that there's still enough demand for new vehicles, and I think maybe some restrained production. I think the manufacturers learned during COVID that selling fewer models at a higher profit isn't such a bad thing, and the dealers certainly love that too. So we're seeing ongoing, strong demand for new cars, new enough to keep the MSRPs above, the transaction price above MSRP in general. But there are deals out there where during COVID there were no deals. Now you can research and find the occasional new car with a lot of incentives to buy. And used cars, it's similar. It's a moderation slowly of those prices, but they're holding up quite strong. They're down anywhere from 3 to 5% year over year. But the last 2 months they were down less. They were down just under 1% this past month. So maybe the flood damaged cars in the eastern part of the United States led to more demand for a turnaround. Plus, less leasing a couple years ago probably means less supply coming in the used car market today. So used car prices also holding up.
Okay, that's a good sort of fun fact. Not so fun when you think about a flood, but an important fact. Carl Brower, ICCars.com. Thank you so much, and we'll watch for Rivian today after the bell, folks. Thank you for that. Coming up next, Disruptors. George Sills is standing by. Let's take a look at ARM Holdings after the earnings, and shares have rallied higher from pre-market lows after a strong earnings report. He'll explain a look at that report for us. He will also give us an example trade right here, Trading 360 on Schwab Network.
Join me, Oliver Rennick, alongside Schwab Network's options experts as we explore the second derivative. Gamma On is a brand new limited series to take your trading skills to the next level. Subscribe to Schwab Network's YouTube channel now. Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage and insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern. Available anytime, anywhere, on any device for free. Only on the Schwab Network.
Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. A look at developing stories. Like to welcome in Diane King Haller is with us, senior markets correspondent here on Schwab Network, looking at shares of Lyft that are doing well today. Obviously, the smaller player in comparison to Uber, but some good news and good outlook.
Yeah.
Let's hear more about the quarter.
Shares of Lyft getting a lift today. Have to incorporate that pun on a day like today. All right, the company beat a variety of metrics. It beat on both the top and bottom line. Adjusted EPS came in at a loss of 3 cents a share. Street was expecting worse than that. Revenue topped $1.5 billion. The Street was looking for 1.4, a little more than $1.4 billion. So it beat on both top and bottom line. In terms of the forecast, Lyft now expecting fourth quarter bookings to come in a range of 4.28 billion, so a little more than $4.25 billion, and 4.35 billion. If you hit those numbers, that will be up 17% on a year-over-year basis. So the Street liking what the forecast looks like. And Lyft, as you mentioned, has been playing catch up to Uber this year, so it certainly needed this victory today. You're seeing shares up more than 20%, and it brings its chart to look more like Uber's year to date. In terms of the road ahead for Lyft, Lyft talked about incorporating more autonomous driving capabilities in its platform. It will be doing that through a partnership with Mobileye and May Mobility. Now, it doesn't mean that there wouldn't be a driver in all of these cases, but, because, for instance, in certain states, you still have to have a driver in the vehicle. It talked about launching one of those partnerships where it would have this more of its autonomous driving capabilities in Atlanta in 2025. So it mirrors some things that Uber is doing already with Waymo. Street, again, really liking the results from Lyft today.
Yeah, unbelievable stuff. It's a move there, a nice guidance. And we just finished talking about Mobileye, which has a recent rate, which you're talking about with this deal. And so worth watching all of these names and how they're interconnected. You mentioned Uber and Waymo, for example. Thank you, Diane Hall. Time for our disruptors. George Soth is here, senior markets correspondent here, taking a look at ARM Holdings and those shares higher. Let's see, right now up to almost 6%. Some of your thoughts.
Yeah, it's actually a pretty good report, Nicole, and a pretty good trading day for ARM Holdings. They actually reported earnings yesterday afternoon. There was a slight dip initially, but it looks like the guidance the company provided seemed to be quite meaningful going forward. If you consider ARM Holdings and their technologies, they're essentially in most of mobile market share areas of the ecosystem for cellular devices. They generate their revenues from licensing and, of course, royalty revenues. And one of the things about the report was they beat both on the top and bottom line, because the expectations for EPS were actually down considering last quarter or for the same quarter last year, but they actually beat both on the top and bottom line. Albeit, if you look at the EPS, it was essentially higher by 30 cents. The expectations were 24 cents, but it was still down about 16% year over year. But sales were actually quite good. They were higher by 5%, beating the estimates at 844 million versus the 809 million. Now, when it comes to guidance, they slightly raised guidance for the fiscal quarter coming up, as well as for fiscal year 2025. But at the same time, if you look at the breakdown of the revenues, the royalty revenues, where they generate about 60% of their sales, were higher by about 23%, considering, again, the only 5% increase in total sales. And licensing revenue was actually down by about 15%, but the company denoted it was a beat based on the estimates. And what happens is that the licensing revenue eventually translates into royalty revenue, and that seemed to be quite compelling for the analysts, who are actually quite bullish in some regards, but some of the analysts are neutral on the stock based on valuation. If you look at Susquehanna, they maintain a neutral rating on the stock with a $118 price target. The stock is well above that level, but Barclays does maintain an overweight rating at 145.
All right, so how do you go about an example trade here for that?
Yeah, so when you look at the stock, overall it was a good report, beating on the top line sales as well as earnings. I think the valuation still is a little bit rich, and this is why if you look across the board at the analysts who cover the stock, they are raising their targets, but they're maintaining neutral. Even these targets are still below or right around the current price. It's still trading around 68 times next year's earnings, which is a little bit rich. So I don't think the stock is going to do much going forward, at least in the next few months or so. So what I'm going to do is sell some cash secured puts. So I'm going to go out into the Decembers and actually sell the $140 cash secured put. And earlier today, you could have received or sold that for about $7 a share in credit or $700 a contract. So in essence, all we need to do is have the stock stay above 140 between now and expiration in the next 43 days. If you do place this trade, you have to be willing and able to take ownership at 140, but your cost basis is the 133 because you have to take out the premium you receive on the option. So it's a bullish trade. You could also call it neutral, but it gives us also some flexibility to the downside. Because right now, like I said, the break-even price on this trade is about $20 lower than the current price.
All right, thank you for that. I mean, the high was 188. We're at 153. Thank you for that example trade. George Silas, always great with our disruptor every single day here on Trading 360. Thank you, George. Coming up, our 360 round, we'll dive into the earnings of Warner Brothers Discovery, also the stock, the highest level since February, the reaction. We'll get to that in a moment. Stand by.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Download the Schwab Network app and join us to follow all the market trends. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please. But there's Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we? No can do.
I'll get out there.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
It's time to look forward
Find the next trend.
from every click to every tick.
There's no fear of missing out on Next Gen Investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Debbie Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Welcome back to Trading 360. It's time for the 360 round. We're watching Warner Brothers Discovery, which is up about 10% today. We want to hear more. I mean, it was a surprise profit, which really shows it's all about streaming. I don't know. That's what the articles say. Let's hear what our pros say here in our panel. Dan Rayburn, streaming media analyst, and Kevin Leon, global director, industry and equity research at CFRA. Dan Rayburn, is that right? Is it all about streaming now? You tell me, and what stands out to you?
Hey, Nicole, good to see you again. Well, a couple of things here that I think are important to point out is that WBD raised pricing for their ad-free tier Max on June 4th, and they began launching in Europe in May in 20 countries. So not surprising that we're seeing growth here from an international. What I'd really like to see is ARPU. So the average revenue per user was flat at $7.84. So it's great that the D2C revenue was up 8% year over year and positive EBITDA. That is certainly good. The key points here, the advertising revenue increased 71% for D2C, so that's good. Pricing goes up, and they're growing in more countries. So as we've seen from the other streaming providers out there, this is all about growth internationally. That's really what they did in the quarter.
Understood. I mean, obviously there could be so much more penetration around the world with all these streamers. The competition is fierce, but there must be more room to grow all around the world. That being said, it's got to be done. And so where do we stand here with Warner Brothers Discovery? Ken Leon?
We have a hold on the stock. We have a $10 target. This has been a lousy stock to be in, and that's because of the disruption in the industry. The market, again, looking at streaming, but the plus 7.2 million subs this quarter came from outside the U.S., where they're getting like 30 cents on the dollar to what they charge in the U.S. We like it. The linear networks, broadcast, et cetera, that had a decline of 12%, and the advertising revenue that went to streaming, a lot of it came from the double-digit decline in the linear networks. So what we like here, of course, is management is steadfast looking at the future, which is expanding outside the U.S., as noted, Europe, Southeast Asia markets, but it's still a really tough business model. And there was not much said. They spent $200 million on the movie Joker with Lady Gaga. Didn't really do that well at all. The Penguin on TV streaming is the big hit, and I think that's what's pulling streaming subs. It's really a great TV episodes.
Yeah, it is good to note the Max streaming service subscriber growth. That's some good news there. I wanted to talk more about the pricing power, Jen. There was one that said there's a fair amount of room for them to raise prices because you were concerned about the average revenue per user. How much price power do they have?
We really don't know. We're going to see price increases across the board, of course, going at 2025 from many of the streaming services. But one thing we didn't get from Warner Bros. Discovery, which Netflix gave us in their latest earnings, was engagement. So Netflix told us the average engagement per day is 2 hours. So it's great that Max is getting more subs, but how engaged are they? That's something that we don't have right now. So we need to see ARPU go up over time. The fact that it was flat year over year is not surprising. When all of these services launch in other countries, it's always a cheaper rate than it is in the U.S. So that's something you really have to look at over, I would call it, the entire 2025 calendar year. I do expect ARPU will go up, but it's not going to go up by a large percentage.
With linear dropping, advertising dollars being redirected to streaming, that's certainly, and people are saying it really is still happening in a big way. People are cutting the cord. They don't want regular cable. I think some of the folks that I read or hear, they seem so surprised that it's still happening in the force that it's happening. I still have regular cable, but I guess I must be the last man on earth here. Ken?
So I think the other key catalyst here, particularly on the upside for Warner Brothers Discovery, could be the post-election change environment in terms of mergers and acquisitions or partnerships, Department of Justice, the FTC. Management on the call did speak to the need for partnerships so that they can right size and get to profitable growth in areas related to bundling of some of their content, whether it be on their platform or licensing it to others. So I think that's what to watch. Or will we see the big deal? A week ago, Brian Roberts, the management of Comcast, also talked about rationalizing or finding partners with Peacock.
I mean, okay, so let's talk about the potential tie-ups, because if M&A activity is going to be more likely under a Trump administration, let's review that once more, Ken Leon. You think that we could see a tie-up maybe with Warner Brothers and...
Well, it could be somebody else, but we've been in this conversation with you for over a year. It's from a position of weakness, not from strength. The bundling or partners might give them more more pricing power with advertisers, but I doubt it. Netflix overshadows this industry, as do many of the leading technology social media companies. So it's really a tough game to play. We're going to hear from Disney next week. That one's a little bit stronger, but they're in the same situation.
Okay. Do you have buy ratings on any of the names? Quickly.
We've had buys on Netflix and Spotify. They report next week. We have holds on Warner Brothers Discovery, Paramount, and Disney. And so far, those have been the right calls.
Okay. Dan, what tie-ups make sense to you for this bundling purpose?
Let me jump in right here. These companies have all been talking about partnerships and tie-ups for a long time. What did we hear from Paramount this week in a regulatory filing? Apollo proposed an acquisition for all of Paramount, but didn't offer a specific share price. Byron Allen never signed a non-disclosure agreement, so he couldn't get access to confidential information. Comcast wanted to do a joint venture between Peacock and Paramount, but passed because Comcast wanted majority control. So we've been hearing about these companies talk about tie-ups for years, and every earnings call they continue to say the future is tie-ups and bundling and partnerships. Which ones have actually happened to date? So far, none. So I think Wall Street is putting too much emphasis on partnerships. They're extremely complicated to do, and they don't always make sense from a balance sheet standpoint.
Thank you both. We'll have to wait and see, and looking forward to those earnings for next week as well that you mentioned, Ken Leon. Dan Rayburn, streaming media analyst, Kenneth Leon at CFRA. Great to see you both. Thank you. And thank you, friends, for joining me here on Trading 360 every day, 11 a.m. and 2 p.m. right here on Schwab Network, where you can download our free Schwab Network app, available in the Apple App Store. Tune in 24/7, schwabnetwork.com. I'll see you at 2 o'clock. I'm Nicole Petalidi. The Dow's down 12. Fast Market is next.
So what can you watch at the Schwab Network? Let's break that down for you. Every day from our studios here in Chicago and on the floor of the NYSE, we deliver more than 8 hours live programming to kick off every day bright and early at 8 a.m. Eastern with a futures show breaking down commodity markets, futures, and technical trends. At 9 a.m., I'm in the studio hosting our 2-hour opening bell show, Morning Trade Live. It sets the blueprint for traders for the day. We invite top analysts and investors to determine what's driving the early action, how to interpret the news, what's on the agenda for the session. Hey, Nicole, tell them about our shows at the NYSE.
Thanks, Oliver. Welcome, everyone, to our beautiful NYSE studio. We are here on the New York Stock Exchange floor, broadcasting live each day. I host a watch list, which provides investors a fun midday update on the major news stories and themes. Best part of being down here is we are right in the center of the action. The energy is palpable. The sights are unmistakable. It's back to Chicago now. Jenny Horn.
Thanks, Nicole. Hi, everyone. I'm Jenny Horn, host of Next Gen Investing. We all know how many new investors are beginning their trading journey and are eager to participate in the market. And that's what I cover alongside Alex Coffey from 1 to 2 p.m. every day. We watch the hottest names, trending sectors, and under-the-radar stocks. Oliver, back to you.
For our active traders at launch, Fast Market steps up the engagement to a deep dive into volatility, options dynamics, trading trends with former floor pros Tom White and Kevin Hinks. At 3 p.m., I'm here to guide you through the closing bell. We construct the best narrative explaining the day's action, which trends held or broke, and prepare for tomorrow's earnings and other market-moving events. Spend some time with the Schwab Network. I promise you haven't seen anything like it.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Good afternoon, traders, and welcome to Fast Market here on the Schwab Network. I'm Tom White. We've got a great lineup for you today. We'll talk markets hitting all-time highs, and then we'll have some option strategies. We're going to talk some earnings names. Airbnb, which is up a modest 6% so far this year. They report after the close. And Expedia, which has rallied over 45% over the last 3 months into their quarterly report. And like Foley will break down consumer sentiment data in the trade desk. TTD is the ticker symbol, the digital ad platform stock, hitting all-time highs into their earnings report. Now let's take a look at the major indices, which, as I mentioned, hitting record highs. Break out the champagne. The S&P 500 up nearly 0.7%, nearly hitting that 6,000 level. Dow Jones Industrial Average fractionally lower. Some weakness there in the blue chips. NASDAQ 100 leading to the upside. The Mag 7 names all in the green, up 1.4%. And the Russell 2000 small caps lagging here a little bit as yields falling just a tad bit, but Russell jumped over 5% yesterday, so maybe a little bit of consolidation there to help me break down this market action. Let's bring in my co-host for the day, and that's going to be Alex Coffey, senior equity contributor here. Alex, you know, it's pretty optimistic. Trump wins. They win the Senate, possibly the House. The market likes it.
Yeah, I think the market likes mostly that it's convincingly and the outcome was convincing, that it was decisive, and that we were able to move on. It's all Fed now. I think the market's ahead now. I think the market started moving in reaction to results coming in early in the evening. Didn't necessarily know for sure, but starts pricing things in. And this has been my point, all week long. The market doesn't wait for you to catch your breath. And it's an exhausting week. Last week was an exhausting week. Next week's going to be an exhausting week. And that's just the nature of this game. You got to be able to get back on the horse. You got to look at things and ask yourself, when you make a decision one way or another, if the outcome is what you thought or it isn't, why did it happen? And try to, make that post-game analysis as much as you can. Something I tweeted yesterday, models are only as useful as the data that goes into them. So getting the good information, making decisions, and not being fooled by, sometimes just being lucky. Lucky is the most dangerous thing that can happen in any type of projection business, be that elections, sports, or, of course, markets. So post-game analysis, I think is really important. But now that we look ahead, the Fed has an interesting needle to thread this afternoon. I'm looking forward to it.
Yeah, it almost goes back to that mantra, stay invested in the markets, because, even though you might consider headwinds out there, whether it's rising rates over the last month and a half, whether it's the dollar that's been firming up, it doesn't matter if the optimism's there with the expectations that the market has that, hey, growth is going to continue. Economic data is pretty solid. The Fed is threading the needle so far as the interest rate environment. So hard to kind of find.
This is a really good point, though, too, Tom. This is why you have to define rigorously what you are in terms of what you're doing with your money. If you're talking about your passive investment portfolio, there's a reason that long-term bulls always say zoom out, and there's a reason we're at all-time highs right now. But if you're a short-term tactical trader, if you're somebody who's trading minute to minute or hour to hour or week to week, completely different. Timing is everything in those moments. Right. So you got to know what you are, what you're doing, and what assets you're talking about. So agreed, when it comes to long-term passive assets, there's a reason that passive investing has beaten many active managers for so many years. But there are successful active managers too.
Yep. Have that long-term portfolio and then take a little bit of that, maybe trade with it. That's what we kind of look at here on a daily basis. But let's expand this conversation. Bring in our next guest. That's going to be Nathan Peterson, Director of Derivatives at the Schwab Center for Financial Research. Nate, it's hard to find cracks in this massive equity rally at this point, right?
Yeah, it is. It's hard to be bearish, right, at this point in time. bullish seasonality, bullish technicals, presumably bullish administration for pro-business administration. At least that's what the market seems to be casting its vote, looking at, the way that the sectors that have been benefiting here recently. Are we near-term overbought? I mean, yeah, you could probably argue that, but the problem is when you're kind of breaking out into space like we are right here, is that you can have within the bullish thesis this belief, this thesis that corporate profits are going to increase as a result of this setup that we currently have because of the events that have unfolded, and that can't be proven right now. And because the technicals don't really have any kind of resistance to contend to, it makes it easier to kind of continue to push up out into space. I'd say the biggest risk for this market is rising yields. I mean, the higher those yields go, we're up 75 bips since on the 10 years since the mid-September low. And stocks haven't cared. They've continued to climb, and I think the reason for that is they're basically saying the economy's strong. That'll translate to the bottom line in terms of which suggests taking on risk.
All right, we're back.
But the equity risk
Netflix continues to climb.
The higher or the faster these yields continue to climb. Is there a level where, perhaps the market gets some kind of a backlash and says, okay, that's too much, or the velocity is too much? Well, I guess we're not there yet, but that's going to be really the thing to watch here in the coming months.
Yep, valuation's expanding, but I got a chart that I kind of want to look at, kind of reflects the fact that, hey, maybe it's not, a broad-based rally, right? We had some sectors in the S&P 500 down yesterday. We've got a couple of them today. Financials, after hitting all-time highs, that S&P 500 sector yesterday. Going back just a little bit here today, Alex, but the number of companies in the S&P 500 that are above their 50-day moving average, I always tend to look at that when I see extremes in the market like right now. It's only at about 64% of the companies above the 50-day moving average. So it's not like this is a broad-based rally where everything's going up, and that to me doesn't feel like it's going to be overbought until we get maybe above 80% of those companies, 85% of those companies, because that's when those triggers that Nathan just mentioned start to come in, where people are like,
Apple looking good. Apple.
So it still probably has room to run.
Yeah, you can make that argument. SPX equal weight did make a new all-time high today, though, so I'm kind of giving counter data points. When you look
Apple new highs, continues to push higher. Apple
basically at the same level that it's on the
looking good. TTM is turning.
4 months or so.
Apple trying to get above the 50-day. Google at the highs.
That while we're at highs, maybe you put the calculated SPX off to the side, since that has outperformed relative to the NASDAQ and has outperformed the equal weight. We're kind of just reclaiming highs. We're not necessarily like, hitting a home run here. I mean, you can make it, the case that it's been a home run off those August lows. The NASDAQ's up over 20% from that level, but it literally just made its high. So it's not, isn't dramatic in terms of, I can understand why you have some of those 50-day moving averages that are still above, because there's still some names under the surface that are weaker than they have been and been a little bit more sideways to lower over the last couple months. So that's kind of how I see this. I see this has been a more sideways market, although it does, of course, have the upward bias because it's trending on all-time highs, or we're setting them depending on the index you're looking at.
Yeah, Nathan, we're getting led here by the Mag 7, not surprising. Once again, NVIDIA up over 1.5%. Google Alphabet continues to rise. Maybe less regulation, maybe not an apparent breakup coming. Tesla up another
Intel.
It's hard to push back the overall market, even though
New administration open to M&A acquisitions. Qualcomm, maybe they have the opportunity to buy Intel.
Right, it certainly is, and it kind of answers that question that, if mega cap tech, does mega cap tech have to languish at the expense of the market, the rest of the market going up? And I think
Intel.
no, and I think the biggest reason for that is, NVIDIA hitting a
Intel breaking higher.
That's really the poster child for AI, and that AI story is intact. And we talked about Palantir.
0-day is squeezing. 0-day S&P. I see Frano went long some calls there. Looks good, Frano. Looking for the break higher. Looking for 6,000.
Key pillar in the bull thesis, and they've demonstrated that so far it's continuing on the infrastructure build-out phase. Mega cap tech, capex spending doesn't look like they're letting up off the pedal. That bodes well for still continuing to see that demand that is there. Palantir spoke to it. Jensen Huang spoke to it. We got NVIDIA earnings coming up. So that whole technology, the bullish thesis, this secular growth story, which is probably the biggest since the internet, is a big reason I think that we're continuing to see this upward bias here in stocks and still in technology.
Yep, there have been some winners, and let's talk some earnings here, Alex, because Qualcomm now flat on the session. This stock was up over 8.5% after they reported last night and earlier this morning. Now
Qualcomm.
ARM Holdings, which was down a few percent, now positive. So we've got a flip-flop, even though Qualcomm's earnings were really good, but that tells you how testy this market is, and picking individual names can be difficult.
Yeah, it's funny you say that. I filled in for Kevin today on Daily Trader. Of course, that's a new program that we recently launched, Video on Demand, where we look at a couple example trades.
Joined you, Frano.
Making news, and today those are the two I chose, and I kind of presented it as it's kind of ironic for several reasons. The primary reason I chose them is they're both earnings, to your point, but they're also two names
For a
that
quick
are
trade.
spat with one another at the moment. Yeah. And to your point, there was a dramatic price reaction to the upside in Qualcomm, and now it's like a muted nothing burger.
Right.
And it was the opposite in ARM. It was kind of a nothing, and then now it's a kind of dramatic upside move. And so you have to pay attention to how the market reacts, not only right when the numbers come out, not only during the conference call, but also after the market opens and some of the real big money is able to kind of broach those liquidity pools that are available during market hours. And it seems that there was a risk off in Qualcomm and an opportunity to buy the dip in ARM. Both the names, though, I would say had like okay numbers. I wasn't overly impressed necessarily or disappointed with either. Qualcomm did have nice guidance, and they announced that stock buyback. But that's kind of the nature of what Qualcomm is. It's much more in that kind of Apple, Microsoft camp where the growth is relatively contained, but they're able to plow so much of their earnings back into shareholder-friendly activities that really have driven so much of the upside for some of these stocks. One could say, at least from a passive tailwind that's just naturally there. I saw a stat on Apple, not to go too far off on a tangent, but Apple's buybacks alone would be a top 100 company by market cap this year, because it's just been so massive. And that's just, that's a different level. Of course, Qualcomm isn't in that, quite to that extent, but $15 billion buyback's nothing to sneeze at.
No, and maybe that exposure to China with Trump back in office, maybe the tariffs coming, maybe pushback there as far as business that's done overseas. We'll have to wait and see on that, but ARM had a nice rebound off those lows. Nate, let's move on. Fed meeting, this afternoon. Basically baked in that we're going to get a 20.
Nice move on S&P. Continues looking for 6,000.
Because I don't know, the economy's doing pretty good. Job market's doing pretty good. You saw a jobless claims number, 221. That's pretty good. Economic data is good. GDP's decent. The Fed's threading the needle. Do they need even more?
All right, nice move on the S&P.
I'd say no. I was talking to a colleague yesterday, and he's like, yes,
Okay, looking good.
expects it. So they're going to do it. And I'm like, but that's not one of their mandates. And, if you look at the Fed and why they really, delivered that 50 basis point cut back in September, we know that has to do with the jobs data in July and August. We saw those soft spots. We saw those recessionary triggers.
Looks like I missed Microsoft.
I think it's been.
I had an order on Microsoft. Okay, it's dipping right now. Maybe we can get it on the dip. Let's see if my son asked me anything. He's looking to buy some things now that he cleared his Tesla trade. Let's see. Okay, nice move on the S&P.
Including unit labor costs, which came in well above estimates this morning. And you would think that the Fed is going
Microsoft.
to, but, we're not going to get our updated set projection.
Okay, Microsoft looking for that dip to get bought. Microsoft. Okay, this could still come back some more, so I'm not going to do anything on Microsoft. I'll let it come back.
So again, does the market really care if we get, a much slower pace?
Home Depot. Okay, Home Depot did well. All right, Oklo's at the highs. Oklo.
What's been happening with yields anyway and what the stock market has been doing. But
Coinbase.
primary risk.
Wow, Coinbase is still going.
That could really come
Very
into
nice.
play in 2025. We could almost be getting back into a point where the Fed is discussing maybe it needs to go and turn the other direction. We're definitely not there. I don't want to speculate, but there's just a lot of potential for the inflation to come back into the scene.
Yep, I think that's part of the concern. They're expecting growth with the new administration, but what does that growth bring? It probably brings a little bit of inflation with it. So we'll have to wait and see on that. That announcement comes in about an hour and a half or so here. All right, guys, let's take a quick break here. When we come back, start talking some travel earnings names. Going to lead off with Airbnb, up a modest 6% so far this year into their report, even though some of the hotels are hitting all-time highs this week.
Apple's still going. Microsoft looking for the bounce. Microsoft looking for the bounce. Microsoft's a good discount compared to the others. Excuse me. The others being where they're trading at highs. Microsoft, a discount. Microsoft had good earnings. Okay, we're talking about Microsoft earlier. All four metrics are green. Microsoft been around since the 78, 80s, something like that. IPO was March 13th, 1986 at $21 per share. Okay, so we've had lots of splits along the way. AMD. Looks like Bitcoin wants to keep going, folks. Watch Bitcoin. Okay, Bitcoin looks like it wants to keep going. New highs. Almost. We're getting close. Liquidity grab up there. Okay, Bitcoin at the highs.
Like Schwab, I can get full service wealth management, advice, invest on my own, and trade on Thinkorswim.
All right, notice the cyan bars starting to show up on the 5-minute chart on the left bottom.
Have a choice in how you invest with Schwab.
Apple's still going. Apple.
Welcome back to Fast Market here on the Schwab Network. We're talking earnings in the travel space.
Apple.
Airbnb is what we're looking at first here. Stock's up, as I mentioned, about 6% so far this year. It's underperformed maybe some of its competitors.
Apple, I'm going to sell some into strength. Apple. That was, we looked at Apple yesterday. It dipped after. All right, nice follow through. What's Boeing doing? Boeing also looking for Boeing to get something going. Boeing. Okay, Boeing inside day for now. Looking for Boeing to come out of this base and move higher after the machinist strike over. Deal accepted, 38%. 38% pay increases over 4 years, so a little less than 10% a year. Looks good. Okay, Bitcoin's still going. All right, Coinbase is going here. Coinbase, Boeing, Coinbase. Okay, Coinbase looking for the follow through. There goes Supermicro. Supermicro, they're trying to push this thing down, Mondo.
That would mark less than a 10% increase year over year, but it would be up from the previous quarter in terms of what analysts are.
Supermicro looking for this to rip.
Trends look like for Airbnb, especially when you consider it over the previous quarter. They are expected to be, this is traditionally a softer
Microsoft. Okay, a little dip in Microsoft.
Looking for more what the guidance looks like. Street says in terms of some of the additional
Oklo at the highs. Oklo.
and what bookings look like on the platform for Airbnb, and looking for fourth quarter accelerations, which is what Jeffrey says they're looking for. They said they need to see upside.
Don't forget, SMR has earnings tonight. SMR.
Consensus expectations for Airbnb. They have a hold rating on this stock, and they talked about just softer demand trends, which we had been seeing with Airbnb in recent quarters, guys.
Diane, when you look
Home
at this,
Depot, I'm going to take some profits off. If you bought those on the dip yesterday, maybe take some profits off.
U.S. demand a little bit soft. I'm one of those people. I hate all the fees. That's why I stick with hotels at this point, unless it's a group. But the internet.
What is 0 day?
A lift for them moving forward, shouldn't it? Because of everybody's.
We still got 11-1 up volume on the Qs, not 11-1. So focus on the tech New York FANG index stocks. Seems to be the case today. Many of these tech stocks continue. Apple taking some profits into strength.
That's right. You're right. Travel is robust. We continue to see airline traffic hit levels that we haven't seen before. So that's a great point in terms of, you know, the strength that should be helping Airbnb. But one of the challenges has been all their fees, not just for you, but they've seen, you know, there's been this kind of shift in demand from Airbnbs to back to kind of the traditional hotel model. So that's one of the challenges. And more analysts are in the hold camp than aren't. The general consensus in terms of how analysts
Microsoft.
view this stock is as a hold. I mean, there are a few in the buy camp, a few in the sell camp, but by and large, they see this as a whole. Jeffrey says that web traffic indicates a modest slowdown in nights, so that's one of the things that we've been paying attention to with regard to that stock. Analysts kind of just reiterating their stance on Airbnb. But look, the stock is up today, heading into their results, is up almost 3% at the moment. So, you know, who knows? They may do better in this most
Tesla looks like it wants to bounce.
looks like for the quarter to come, which should be a stronger quarter for the company in general.
Yeah, it seems like stock popping today. Maybe I'm in anticipation that we're going to see some decent numbers.
Okay, Microsoft. Let me take another look at Microsoft. Been trying to get into Microsoft this morning. We got a dip. Do we consolidate here above the 200-day? Probably. Okay, we're starting to pull back. All right, so let me cancel that order. Let this pull back a little bit. Let the chasers chase. Okay, we got a nice bounce in this S&P. I'm just scalping this, so I'll take profits on this next leg up as we push the highs. Super Micro, man, this is going to be something else. Super Micro. Super Micro.
Longer lasting legacy hotel companies. This is one that's expected to show greater growth. And the fact of the matter is it's been decelerating that growth trajectory. When you look at where it's come from, you know, kind of the high teens, it's now expected for this quarter to be sub 10%, and that's not necessarily expected to recover. So to me, that's the big story. And perhaps the tailwind that had been there from sort of longer duration stays has faded. But they're, you know, it's still a company that, you know, it's new. There's still
Okay, SMCI, you've got a nice change in direction here over the last 2 days. Apple's still going. Netflix. Microsoft. Okay, Microsoft. Let's take another look at Microsoft. I really want to get into Microsoft. All right, so I'm letting this pull back a bit more. I did cancel that, right? Yeah, I did cancel it. Okay. Twilio. I'm looking to get into Microsoft. I'm looking at December calls. Microsoft, and I'll probably do a vertical near the money, like a 40 delta, and then sell maybe like a 20 delta. Microsoft still fading. Okay, that's what I want to see. If you're in it, sorry, I'm looking for an entry. I'm bullish. I just want to get a better entry. Okay, 1 minute chart. Microsoft looks good. Okay, Home Depot. Take some profits off into Home Depot. It has earnings next week. Maybe I'll do an iron condor or something like that on Home Depot. Who's reporting tonight? Let me just check the earnings channel that Stephen keeps updated. Thank you, Stephen, for your contribution. Always appreciated. Let's see. Tonight is Thursday. We've got Arista, Block, Unity, The Trade Desk, Affirm, Pinterest. All right, let's take a look at some of these names. Okay. DraftKings, DKNG. Haven't traded this one in, gosh, I couldn't tell you how long. DraftKings. Okay, DraftKings. Maybe an iron condor on this one. Okay, let's go 3 standard deviations. Let's go Bollinger Bands, and we'll go 3 standard deviations. Okay. See what that looks like. 3 standard deviations, 34 and 40, 50 or so. I would probably sell up here near 42 and down below 33 probably. Bollinger Bands are opening up, so you know that the volatility is picking up. To sell an iron condor with higher implied vol. All right, let's look at DraftKings. Okay, DraftKings, DKNG. Let's see what they have. DraftKings. Okay, a 10% move. All right, so that's pretty decent. 42 on the upside, 35 on the downside. DraftKings. 35 and 42. 35 and 42. 35. That's a Bollinger Band. 34. 42. Yeah, that makes sense. Netflix continues to climb.
There's your risk, $170. Break even, 138.30 to the downside on this one, Alex.
Twilio.
You definitely need a move, and you need it quick.
Let's see what Twilio looks like. Twilio, you know what I'm thinking on Twilio. The weekly is what has my attention. The daily on Twilio looks good, continues to push. Look at this volume. That's institutions. What do you think they're thinking? Look at the weekly. What do you think they're thinking? I bet they're looking over here and saying, okay, maybe we don't get to 400, but definitely get to 100. Maybe 120, 150, something like that. I think we did a Fibonacci on this, didn't we? Twilio, didn't we do a Fibonacci? This is on the watch list. Twilio. No? I thought I did. I thought I marked up a chart here. Huh. Could have sworn I did a chart. Let's see. Where am I? Well, regardless, let me do it now. Okay. So Twilio. Okay. So here is the highs. No, the highs are over here. High. And the low.
And then, given the volatile nature of this environment, you guys talked about Qualcomm and ARM and, the post
42.
market and the earnings reactions.
Okay, let's do a Fibonacci.
Something like this, and you do get that gap down tomorrow, maybe you might be a little bit more nimble to close out the position if you can take some money off the table that it's at a comfortable profit.
That's a great point, Nathan, especially with those moves that we saw in ARM and Qualcomm today. It's like, hey, you might only get a 5-minute, 10-minute,
Okay, so 236 will be 138, say 140. Got pivots over here. Yeah, Twilio looks really good. So I'd buy something out maybe January or beyond. If you're buying shares, that's fine too. Twilio. Okay, the volume looks good. Okay, we're already starting to show. We're already breaking out of this area here, this base. Okay, Twilio. Let's go take a look at Twilio. Okay, here's Twilio. Okay, they beat expectations. They report again in January, so maybe you buy some January calls. Okay, look at the earnings growth. I mean, this is practically slapping you in the face, saying, "Buy me."
Is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization and track market activity with up-to-the-minute news and insights. Trade brilliantly with Schwab.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl.
Schwab, a modern approach to wealth management.
Yeah, that one's that one's gonna go. 236 would be 138, right? What did we say? Twilio 138. Oh, let's keep an eye on Microsoft. I definitely want to buy some Microsoft. Ooh, we're starting to show potential. Okay, just give myself some time. I'm looking at December anyway. Microsoft, December, the end of the year, Microsoft.
We've talked about this stock probably every quarter, and your data is always pretty robust.
Still coming back. Apple at the highs. So it's going to be hard for the S&P to drop off too much, given what these FANG stocks, New York FANG stocks, are doing. I mean, they could follow the S&P, but the S&P is at highs. I'm not really interested in buying too much at the highs of the day, but I am looking for dips, B and C pivots like this on Microsoft. So watching Microsoft for potential trade, Microsoft.
It's just a great company. They're really figuring it out. They're at the top of what they do. And yes, going into earnings, I would say that the bar is pretty high. Last quarter they beat on revenue, they beat on earnings, they beat on revenue by 26%, earnings by 39%. They've expanded their partnerships, their relationships with a lot of companies: Netflix, Fox, CBC, EW Scripps, Spotify. They've got a customer retention rate of 95%. And they're actually the only platform, the only ad platform where majority of their customers are expecting to increase their ad spend. Now, there's a lot in the high 40%, but they're actually over 50%. So they're doing really well. And I think one of the reasons is they've got the technology figured out, and they're even improving on that technology. So they've introduced a new AI platform that helps their customers reduce their cost per click by 36%. And reduce their cost per action by 34%. And when you think about that, you might think, well, that means their customers are spending less. And no, it doesn't. They have
236
is their customers are getting more. They're
236 138.
Increase their budget because how much of improvement they're seeing. They're actually seeing their reach.
138. 382 is 198.
Platform to the new AI platform. They're seeing that their reach is increasing 70%. So they're making their customers
198. 50% is 248. I'm looking at Twilio.
Trade desk.
248,
It's a beautiful chart because right at the last
250,
I mean, there was an uptrend, and you can see an uptrend barely. Over
198.
last year, it kind of flattened out. But these last few bars, these last few monthly bars are just
618,
beautiful. I mean,
297.
77% on a year-over-year basis, really starting to ramp up. And I think that this is why the stock is doing so well. Is everybody knows that
297.
they're crushing it. Their customers are happy. Their customers are getting better results out of it. They're sticking around. They're spending more. And so, obviously, we're bullish on them. Going into earnings, though, it's tough because now you've got these really high expectations. So what do you do with a company when you're talking about earnings where you know that they've got strength, you know they're doing really well, you expect good numbers, but so does everybody else, and the price reflects that. That's tough. That's the kind of the position that we're in. So I think the strength of their data versus the move in the stock price somewhat cancels each other out. And so we're a little bit more muted on the specific earnings report. Long-term hold, love it. Earnings report, we're more of in the hold camp right now on earnings.
Yeah, Landon, perhaps earnings could present that opportunity on pullback for those who maybe didn't get that note so many months ago from your team on why you like this name. But I'm listening along, and one of the things that's always stuck out to me about this company, to use a comparison in a different industry, it has Shopify-like vibe where it kind of hangs out in the background, but it levels the playing field against these Alphabets and Metas that have such a stranglehold on digital ads. Much like Shopify makes it easier for some of these companies to compete with the Amazons and the Walmarts of the world. I know it's not a perfect comparison, and of course Shopify kind of peaked out several years ago. But I do still think that to the everyday retail and trader, TTD is an overlooked name, as crazy as that might seem, given how strong your data is and how strong the performance is.
I think you're absolutely right. It's definitely overlooked because, it's not something that you deal with as a consumer. As an everyday trader, it's not, you don't even really know about this company. They're in the background. You know about Netflix, you know about Google, you know about all of their competitors and all of their customers, but you don't really know about what they do. You don't interact with them directly. You do indirectly, but as a consumer, but you don't directly. And so I do think they're overlooked. And yes, they're helping sort of the little guy. They're the collaborative effort for the little guy to take on the big ones. I think it's a pretty good analogy, frankly, with Shopify. One of the things that I think a lot of investors are seeing that gives them more confidence in future upside is just the discrepancy between streaming data and streaming data ad spend. And that's what we first started looking at. That's what we saw a year and a half ago was there was, I think, like a 30-to-1 ratio. It was unbelievable. We knew that gap had to be filled. That gap is getting filled. It's getting filled by TTD. But when you look at the number one provider of streaming video,
Trade desk, that might be a trade.
About a 32% share. They're only comprising about an 8% share of ad spend. Now, it's a majority paid.
Okay.
They're starting to introduce this, or they have introduced this free tier that's ad supported, and they're doing well with it. And we only see that segment growing and potentially getting cheaper and cheaper with more ads for those customers that don't like to pay whatever it is, $8 a month. So that gap between 32 and 8.5, and what this chart represents is the orange bar is the percentage of streaming that people watch on each platform, and the white bar is the percentage of ad spend on those platforms. You can see it's way out of whack for Netflix, frankly for Hulu too, but it's way out of whack for Netflix, and we expect it to move more towards where Hulu is, because Hulu is a lot more free, whereas Netflix is not. And if Netflix starts getting more and more free ad-based stuff, that 8's going to start pushing to the right, and every move that goes to the right is dollars in TTD's top line. So I think there is still room for growth. They're the best of breed in this category, and they're doing really well. It's just a question of valuation. Long term, I love buy high, sell higher. Short term, I'm a little more skeptical. But as you pointed out, you get a little bit of a pullback here, and if you like this company long term, if the earnings come out great,
Okay, volume.
Because it's a sell the news situation. I think
Volume on the daily shows.
Some of that data that you have, especially the web traffic there, Landon, that's a concern for me because the election's over, right? And we know that digital ad spend really picked
Volume on the
up.
daily.
Both parties had a lot of money to spend, and you couldn't watch normal TV just because it was nauseating, the amount of ads that you got. Is that the key to this report where they're probably going to beat, they're expected to grow 25% on revenue from year ago levels. Margins are supposed to increase, but with the stock this high, I know you guys are bullish long term. With the stock this high, is guidance a key for this report? Because if they say, hey, the election's over next quarter, we don't have a lot of bookings for digital ad spend, or it's coming down a little bit, that might be, the thorn in the side of the stock post earnings.
Yeah, I think that that's definitely a concern. I mean, this is a pretty good year for advertisers between the Olympics and elections obviously bigger, but it's been a kind of, nonstop feed of money into this sector. And now, like you said, it's over. There's a hard stop, right? There's no more political ads today, thank goodness. But I think everybody knows that it's there, know that that's being cut off. And then it's just a question of, when you report these earnings, TTD, obviously you kind of need to tell us sort of how much of that was election and how much is going forward. In other words, guidance, like you're talking about. So I think that everyone expected that they made a lot of money over the election season. And will it continue? Obviously not at that level, but I think that they've proven their model to a lot of people in different industries, a lot of people in the advertising sectors, and all of them are saying that, or the majority of them are saying, we're going to.
Okay, Microsoft, looking to get into some Microsoft. Apple's still at the high of the day.
They've been tested. They've proven that they've done well. They made a lot of money in the election. Now, moving forward, are people going to increase at a rate that justifies this $130 stock price? So I think that's the question. For us, the earnings score's a plus. It's plus 18. Not quite where we place a bet, but I wouldn't, I'm not going to say don't place a bet on the bullish side. I like them. But it's not quite, we're hammering it. If this stock was trading at 90 or something like that, we would be pounding the table. But at 130, we're just a little bit more cautious and a little bit more on the neutral side.
Yep. If it was trading 90 right now, maybe everybody be scooping it up right now based on your data. All right. Great stuff as always, Landon. Have a good day.
Thanks, guys. Appreciate it.
Yep. Landon Schwan, co-founder at Likefolio. Now, if you look at this, one of the things that sticks out to me when you've got a stock at all-time highs, yeah, it's moved higher with the overall market the last couple of days to get there. But at the same time, RSI about 78. So anything above the 70 level is overbought. But hey, that doesn't matter if their data's good. The outlook is good from the company. Their guidance last quarter was good. So maybe it equates to that.
Yeah, hit kind of overdrive over the last week, 10% jump in this stock over the last 5 trade days, really in the last 2, if we're being fair. Couple things I wanted to highlight. We did see SPOO 6,000 in the last 15 minutes, 6,001 the print, so new figure there. But one thing I don't think we touched on is this exposure that Landon talked about through connected TV, potentially, given their relationships with the Netflixes of the world, poses to be even bigger growing opportunities because Netflix is making that move into sports. The only really appointment viewing nowadays for TV is live sports. That's the best place for advertisers to go. Well, some of these streamers they're developing relationships with are now getting into that world. So really, I think a critical, kind of inflection point for that marketplace if that rollout is successful and they continue to take bigger steps in that. We've seen with Amazon Prime with the NFL, and of course now Netflix has a couple NFL games too, as well as some college football on some of those different platforms. I do have an example trade for you. Yep. Take into account that Landon was bullish this stock. I mean, whether or not you agree with it or not is up to you, but he was clearly bullish. He had a little bit of trepidation around the stock price. And so how do you express something for a bullish investor?
S&P looking for a follow through.
Strategy so that the limit of your max loss is relatively contained. There's something you're comfortable with and it never comes to fruition. But you have a chance in this case. We have a 4-to-1 payoff potential if you really get more excitement around the stock. So I look at a call vertical, it's out of the money. I would argue that it's a lower probability trade. That being said, if it does rally and you look at the market maker move of about $12, it would be in past that break even point. If it's 1.5 times that move, then you have a chance to
Okay, Microsoft starting to slow down a little bit right above this earlier buy order block. Let's see if they bounce it here. Hope everyone's having a good day. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. Do note Apple is still pushing highs. So is Netflix and Supermicro. AMD gave us a good day today. AMD.
1 day till expiration, November 8th, weekly, buy the 138 call, sell the 148 call, bullish $10 buy call, vertical. It's out of the money, as Alex mentioned. It's above the current share price. That's why the risk reward setup is so good on this one, because you need that move. You pay $2 debit, there's your risk, $200. It's trading closer to 230 right now, as the market's hitting new fresh all-time highs, and so is TDE. But if you pay $2, it's your risk.
Home Depot is still holding on to the highs. Oklo pulling back. SMR has earnings tonight. Boeing is still pushing. Watch Boeing.
Risk reward setup really good on this one. If it does pop, it opens up at 145. Anywhere around there, maybe 144, maybe 150. Who knows? That's when you might want to take some off, because we've seen stocks turn around mid-session after maybe a good report. But this is definitely one of those strategies. It's a good risk-reward setup because of the fact that it's out of the money, and as Alex.
Last thing I'll say real quick too, Ryan is talking about opportunity to increase.
Microsoft still drifting. All right, so looking like a higher low starting to print now. Okay, Microsoft. I'm gonna nibble here. Okay, we could still move lower, so if you want to wait, that's fine. Let's see, where were we this morning? Okay, so pie vertical 425. Okay, let me look at Microsoft. Let me look at the Money Magic levels. Microsoft. Do I want to sell premium? I do want to have a position 425. Okay, we're below 425 now. All right, so we might turn the corner now. 425, and the upper strike is 430.
SchwabNetwork.com on all your streaming devices. Schwab Network is available anytime, anywhere, on any device for free. No place better than the Schwab Network.
Welcome back to Fast Market here on the Schwab Network. Before we take a look at Expedia, let's get a market update, as Alex mentioned in our last segment.
Microsoft looking for it to turn. Watching Microsoft here for a B and C pivot. Okay, so your stop would be below that previous low a few minutes ago, around 1235. Oh, speaking of which, let me tune into CNBC.
The Fed's going to be super aggressive in slashing rates. We've talked a million times about how slow rate cutting cycles are generally more bullish, and we're not even debating soft landing anymore, right?
All right, S&P is going.
Not really landing.
Yeah, that's right. I'll see you in a bit. Mike, thank you. That's Mike Santoli. All right, coming up, we get the setup.
Okay, looking for more follow through. Microsoft could drift a little bit lower. All right, so we are above the 50-day moving average, so I'm anticipating that we'll see a follow through tomorrow. Looking at the TTM on the right side over there, Bollinger Bands are pretty wide. Okay, so what happened to CNBC? Did they drop off? Yeah, it looks like they dropped off.
8% gross margins, because really at the end of the day,
Hell of a day today, huh?
it's a technology company. And so with technology companies, you would expect net margins to be at least, 10, sometimes 20%. In this case, the margins are quite low at around 6% compared to 88% gross margins. So they have a lot
Coinbase
of opportunities to expand on those margins, but I suggest one of the
at the
reasons
highs,
the
Coinbase.
stock has been challenged compared to
Let's
its
see if I can
500
roll
highs, which is
these
down
calls.
16%. Because you have to expend a lot of money to
Coinbase.
keep up with bookings, booking.com. And they're spending a lot of marketing, and of course, acquisitions over time have been expensive for this name as well.
Yeah, George, I think that was going to be my question is the comparison, Booking hitting all-time highs. Valuation-wise, which one's a better deal as far as valuations, but maybe it shouldn't be valued as high as the other one.
Well, that's the thing. So if you compare it on a profit margin standpoint, Expedia has less of a margin. But, I wouldn't look at some of the broader financials for this one. If you compare the forward multiple on Expedia, it's around 12 times earnings. Historically, their forward multiple's 31 times. So
Meta trying to push higher. So we got some higher lows printing on most of these New York FANG index stocks. Amazon did dip, so I was looking for an entry on Amazon. Let me take another look at Amazon. Refresh my memory. Okay, Amazon's at the highs. Yeah, I'm not going to do an ABCD pattern on this one. I'm going to wait for it to pull back to close to the 9 EMA. Feels a little bit extended, so I'll wait. I like Amazon going forward. I'm just not going to buy it up here. Microsoft, on the other hand, that's giving you a better entry. Microsoft. I like Microsoft's discount to the highs. Okay, so we got 467 over here, 441. And of course, Microsoft has good earnings. Beat expectations last time around. Okay, all four metrics are green. That's what we want to see. Okay, so you're buying at a discount. It's above the 200-day moving average. Okay, you got nice price action. You got three white soldiers coming off the low, which is a strong reversal pattern. Volume will start to pick up most likely. Yesterday was above average. MACD stochastics turning. Now, the last thing I want to do is check the MACD. Triple MACD. Okay. So short term has just crossed. The normal time frame, 1226, is about to cross, and the longer time frame, swing time frame, is about to cross too. So this looks pretty good for Microsoft. Triangle pattern. Okay. So there's a triangle pattern here. Okay. So we got this. And we got this. I'm just using the bodies of the candles, not the wicks. And we're basically right in the middle. We're right in the middle. Just above the middle of that pattern, above the 50, above the 200-day. This looks really, really good. Really, really good. So now it just needs to perform, confirm what we're seeing. Microsoft, as you recall, I had a earnings condor that I've taken off completely. I don't have it anymore. But I had Microsoft and I took the profit. Okay. So way short of the 450 and the 390 strikes, right in the middle. So I took this off because I went out pretty far just to get that $180 per contract. I had 5 of those.
the price of this is only 80-cent debit, right? Well, why is it so?
So I took that off. Apple's still going. Apple is like crazy strong today. Apple.
Selling about 196.
What about
options. That's why it's inexpensive. The idea here is stock goes
Apple at the 50-day Apple?
190 or it goes down.
Okay, Coinbase is just hanging out here. Coinbase.
Expands in value, so you don't have to pick a price or a direction on this one. Just a cheaper way to get in it. You got that risk, assignment risk on those short options also going into expiration tomorrow. All right, that's going to do it for us today here on Fast Market. Stick around though. Next Gen Investing is coming up.
S&P looking for a follow through.
So what can you watch at the Schwab Network? Let's break that down for you. Every day from our studios here in Chicago.
Okay, so we got the Fed rate decision coming up. So the deal is here, if we get a spike first, looking for a condition where we can take profits off into strength. I don't know that I'll take a short below, but I'm looking for a move up towards 6,000 on the cash because futures are already there. Futures are above 6,000.
Thanks, Oliver. Welcome, everyone, to our beautiful NYSE studio. We are here on the New York Stock Exchange floor, broadcasting live each day. I host the Watch List, which provides investors a fun midday update on the major news stories and themes. Best part of being down here is we are right in the center of the action. The energy is palpable. The sights are unmistakable. It's back to Chicago now. It's Jenny Horn.
Thanks, Nicole. Hi, everyone. I'm Jenny Horn, host of Next Gen Investing. We all know how many new investors are beginning their trading journey and are eager to participate.
Excuse me. Microsoft, back to Microsoft. Okay, looking for higher lows and higher highs on Microsoft. I like December. I just, want to go out closer to earnings because this one's a discount. It's catching up with the other New York FANG index stocks, and I just like it. I don't want to be clouded by a opinion. So I'm looking at the New York FANG index and I'm making my calculations based on the strength here. The strength in the New York FANG index stocks are just remarkable. So let me change these because these are all different now compared to Tuesday. Okay, so that's good. The trend is up. This is up. Okay, so RSI is showing strength of trend. MACD showing strength of trend. And we did a triple MACD. Didn't we just do the triple MACD? All right, so we went from here to there. Stochastic. Wow, pretty.
Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking.
Okay, so we got the 11 there. That's what we're looking for. We're looking for 11. Okay. Yeah, that looks good. New York FANG. That price action is definitely telling you what institutions are thinking, what they're doing. So they're buyers. We know that breadth is strong. We have the S&P doing its thing. Okay, and I already talked about this, but I'm going to repeat myself ad nauseum. When the markets moved higher in 2022 off of the October low, we started tracking what were the average periods of buying or upside bullish trades. 5 weeks stands out a lot. 5 weeks, 6 weeks. 5 and 6 weeks tends to be a little bit extreme, so you look for a pullback. We had that pullback. We had 2 weeks into this week. This week we got a catalyst, several catalysts. Now we got the Fed coming in. So really like the probability of at least one more week before a pause. I mean, this is a pretty big move on the S&P. You gotta agree. So we want to see the call wall shift from 6,000 up to say 6,050 or something like that. That hasn't happened yet. But the takeaway is 6 weeks up. That was a little extreme. We pulled back for 2 weeks. The 10 EMA is still facing up and to the right. This is the first week up. So our probabilities of follow through are much greater than if it was week 7 or week 6 coming into the FOMC. I just, much better odds because we've already had a 2-week pullback, and previous pullbacks have been 3 weeks, 4 weeks, and 1 week. So 3 weeks here in March, April of this year, 4 weeks in July, August. That was due to the exaggeration move with the Japanese yen, Australian dollar. Don't forget that currency pair. And then we had that pullback first week of August, and then boom, we took off to the upside. We just pulled back for 2 weeks, and now we're showing the first bullish week. So I would think at least a minimum of 1 week higher. So my trades that I'm thinking about are all going to be dip buys as usual. And I'm looking out into the end of the year. Okay, so what we wanted to do before, all right, so let me take an S&P. Let me go S&P. 2000. No, let's go 15, 16. Let's do one. Let me do one here. Let me do this. SPX. And what I'm looking for are the first year of the Trump presidency. I was talking to my son about this. All right, so let's do our analysis, and we want to compare what's working now. What are institutions buying that they were buying back in 2017 when Trump first came into office? Okay, let's do just 1 year. Let's do 17. I'll do 19. We'll do 19 to 2019. Okay, we'll go to the end of the year. That's fine. That looks a little too messy. Let me go to the beginning of the year. February 1st. Yeah, that's a lot cleaner. All right, so you can see on the left side, first year of Trump's presidency, 2017, had a huge move. So that's pretty positive. And then in 2018, what did he do? He started with the washers and solar panels. That was 2018, right? Tariffs. Okay, let me just check. Trump tariffs first term. Okay, so 2018. Yeah, okay, so I am right. My memory did not fail me. Okay, so in 2018, Trump started talking about tariffs, washers, dryers, solar panels. That was the first group of tariffs, and then other tariffs in the past after that. But the takeaway here is, here's his first year, 2017 to 2018. So we want to compare things like, okay, let's just go through the sectors. XLB, what did XLB do? It rose. You don't see what I'm looking at. I'm sorry. Okay, let me go back here. Okay, here's S&P. What happened? Oh, crap.
NFL heavy trend right now where everyone I know seems like they're betting on sports in the NFL. That's obviously not the case, but still at least voting well, I think.
Sorry. Let me just do this one more time. Okay, so 2000. This is going to make a lot of money for you guys, so be patient with me. 2017. January 2017. And the end date, let's go we're going to go 1 year, okay? A little over 1 year. We're going to go 2018. And we're going to go to, let's say, March of 2018. So that's his first year. Okay, so I want to save this to S&P because I want to compare this in the future over the next few weeks. S&P first Trump term. I mean, this is just pure logic, right? So here's 2017. This is the first term of Trump. Okay, so let's go to XLB. Let's look at materials. What did materials do? They drove higher. What did communications do? Communications, I don't think it had changed by then, right? It was later in his year. XLC. Well, let's just look at Meta. Meta back then. Meta rose. See that? Meta rose in the first term. What about Apple? What did Apple do? Apple rose. What did the U.S. dollar do? U.S. dollar. It moved lower. Remember he had a problem with the U.S. dollar? What did the commodities do? Commodities moved lower. That's actually bullish for equities. What about junk bonds? What did junk bonds do? Junk bonds. Okay. They moved up slightly and then chopped around. What did energy do? Energy fell. But he's changed his policies, right? He's more drill, baby, drill, U.S. Okay. So XLF, financials, those moved sideways to higher into 2018. Sideways in the beginning and then higher. We're already higher with XLF. Industrials, XLI. He tried to bring a lot of industry back to the U.S. So industrials are probably good. What about Caterpillar? What did it do? Caterpillar. Okay, initially it went sideways, but then by the end of 2018, it went from 77 up to 150. Sorry, that looks pretty good. What about 3M? What did 3M do? 3M rose. You see what we're doing here? So if you do your homework at home, I don't want to spend too much time on this because Tesla's starting to fade. So is the S&P. But do some homework. Look at 2017. Check out what worked, and let's all gather our information, and we'll discuss it in the trading room over the next several weeks. Looking for patterns that repeat in his first term, 2025. Okay, makes sense? Should. Okay, Microsoft kind of dilly-dallying here as the S&P pulled back a little bit. Apple looks like a little profit taking. Okay, I need to make a quick avocado toast. I'll be right back.
52% off lows, 12% off highs here. But you look at, the chart of PayPal has continued to improve, continued to impress. Block just has not been that player. I think that unfortunately they should have kept the name Square this whole time. I think that's where their interest really heavily lies. You have a company that operates in this peer-to-peer payment space. I know that Cash App right now is seen as more second fiddle to Venmo, but it still is definitely at least a reliable and consistent form of frequent transactions. I also know that Square, as far as contactless payments goes, I've been making the argument that I think that Square as well as PayPal are both two of the leaders in this space because cash is not king anymore. Yeah, sure, the US dollar is, but cash is not the way that, I haven't had cash on me, I think, in 10 years. And I know that I'm rare in that sense, but I do think more and more of these apps, the ease of use, the frequent nature in which companies are adopting them, the more you can use them, the more they seem like, you don't know how you ever lived your life without Square's various technologies.
Yeah, there's just you're talking about the point of sale stuff where you're checking out at the coffee shop and you got the little,
the screen that makes you tip.
They're all like little white devices with an iPad.
Right.
And the thing is, though, is I was at one point thinking, oh, this is Square. But there's 3 or 4 companies from Toast to Square. I think one's called Clover even. They're all essentially the same thing. And they all look like, to me, to my untrained eyes identical.
But see, it's funny you say that because now that I've like identified that we talk names like Clover, I believe I've also seen, as well as Toast, which has my favorite logo. I do notice there's one by my house that is particularly square. So I do think the competition is stiff, and that's a good point. They're not the only name in this space, so I do think that that's probably a pretty major headwind as we go into this report, considering they're also not exactly outperforming on the year, still lower on a year-to-date basis. Last name today, though, is a name that's tried and true to my heart. That is Monster Energy. I will say, has pulled back pretty substantially. It's not exactly the winner that it once, was. I do know that competition has also plagued this space, but we've at least risen about 4% since the start of this month and do remain off of lows by about 27% lower on the year. But gosh, you compare it to the chart of Celsius that has just been blistering. And Celsius was at one point our overall winner in this space, no doubt. So it's been a tough environment for these staples type stocks. And again, I was reading the note, particularly that was pertaining to Celsius, that just highlighted the fact that competition right now is not letting up. You have Coke that has an energy drink. You have Pepsi that has its various energy drinks. You have Monster, which is trying to continue to expand its energy drinks category. That actually drinks, particularly for them, rose 6% year over year. Their overall actually revenue is expected to only climb about 3%. So I'm not even sure what other areas of their revenue they're generating money from outside of drinks, but I mean, they obviously are. Their quarterly performance is also likely to have been aided by the fact that they're continuing to grow. So there's this new guava flavor I've tried. It's perfectly average, but I will say that if you're loyal to this brand, you're never going to trade down, just like with coffee. I think it's the same for these energy drinks.
Yeah, this is a stock that's basically unchanged over the last year, and in its history, it isn't typically an unchanged stock, where its performance has been widely reported as a really, really strong performer. You talk about Celsius. I think it's hard to have the conversation about Monster without talking Celsius. I think Celsius expanded this marketplace. A new entrant to a category can steal market share for its growth, or it can create market for the entire industry. And I think that's really what Celsius did. It changed the dynamics when it came to. I kind of look at these as caffeine alternatives to traditional coffee, soda, or tea. But Monster, Red Bull had been so action sports skewed. Even the logo for Monster is like a claw M with lime green. It doesn't necessarily appeal to, let's call it, a demographic. Let's just throw something out there. Let's say a middle-aged woman who's going to the office who doesn't like coffee, which is a huge marketplace. Where someone like, or a company like Celsius, they came in from this is a health-conscious beverage. It's kind of a workout supplement. All at the same time, it can be an alternative to a coffee or tea. That's a very different message, and it's one that a company like Monster can capitalize on, because once you're in the world, well, maybe then that M that looks like a claw isn't so scary.
I know, I'm unfortunately all too in the world, but yeah, I think that's a great point. I think that Celsius did so brilliantly was target like younger influencers, those that were resonating well with like the younger, more Gen Z demographic.
The YouTube, the TikTok.
Right. All these influencers. I've said this before today, and I'll say it again. I mean, you got to follow the money. Exactly. And that's a massive cash cow if you can get really influence behind these true influencers. And that's what Celsius has done well. Monster, I will say, is like mixed. It's not quite the same, maybe like brand notoriety on social media, but I will still be its biggest fan, as I do frequently drink Monster Energy. But we'll be diving more into our photo names today. We'll be looking at DraftKings as well as Block, both ahead of their earnings due out today after the closing bell.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
No politics, no noise, from bell to bell and beyond. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Gen Investing. It's now time for our Chart Master segment. So joining me now is our Chart Master, Rick Ducat. And fittingly so, it's Thursday Night Football. I'm like weirdly excited about the game tonight, so I keep bringing that up. But we'll talk DraftKings and the chart here because I've been saying they should get an NFL lift in this to-be-reported quarter. But what are the technicals showing us?
Well, it seems like prediction markets in general. I mean, they were already kind of a hot subject, and then with the recent, election, predictive events there, it was just kind of an interesting thing that played out. And there does seem to be some additional interest in recent days for this name here. We can see that for a while, price was in a triangular shape. You can see our 2 blue dashed trend lines here. One of them starting at those highs near 49, the other one starting at those lows near about 33 or so, and then we broke out both to the downside and then also to the upside. We never really had a lot of net movement, though. We wound up kind of just moving sideways within a general range between like this green line around 33, the area I mentioned earlier, and mostly within this red line around 40. So now we can see in the more short term, white trend line going across the lows, trending upward here. Short-term yellow trend line broken, crossing above all our moving averages here. An interesting thing as well, you can see our old downward sloping trend line was resistance, then became support here multiple times. And that was why it can be useful to leave these old trend lines on your chart. They can come back into play. Up nicely again today. Heavy volume yesterday, a volume spike, volume 50% above the 50-day moving average of volume here on that breakout move. So, that's what you want to see if you're bullish. Significant volume during a significant move.
Yeah, and so now when we look at the overall direction of this trend and some of the momentum behind it, are we seeing that typical pre-earnings waning of momentum, or are we seeing things pick up here?
Quite the opposite. We're actually seeing momentum picking up significantly here. And additionally to the surge in momentum, we can see that we also had a downward sloping red trend line that was broken here. We also broke above the 50 midline. You can see that now we could draw this green trend line here, not really the greatest trend line, but that's at least some benchmark to start with here because we did make a higher low. You can see as well that our old trend line here, our light green line, that was broken. That's kind of an example of just how you can use these things to help, inform your trading outlook here. So for now, a nice bullish read on momentum to match our bullish price breakout that we just discussed.
Okay, that is very interesting here. So last but not least, as far as some price levels we are watching into earnings, what are we keeping on our radar here?
Sure. So volume nodes. We have the larger one right here centered around our point of control near like 36. So between like 36 to 39, that's one big volume area. There's another smaller one right around here between maybe 41 to 43 or so. So those would be some horizontal areas to keep in mind here. They also kind of match up well with some support and resistance areas. You can see up here, that was a high point that roughly matches up with our smaller node. Then we've also got the low points that we established here. We bottomed out around that point. It's one of those frequent stopping points for price. Roughly matches up with our point of control. So those would be some areas to watch. So around 36 and around 43 or so, 42, 43. To the downside though, significant support. All those things I mentioned earlier, all those indicators, our moving averages, point of control, et cetera, trend lines. 36 to 37, very important downside support here as we look forward in this name.
Okay, yeah, and I'm excited for this one today, especially given my obvious interest in fantasy football right now. So when we look at trading this name, Alex, how do you think about it? I have to imagine a name that's been performing pretty nicely. It's pretty much a duopoly at this point between them and FanDuel. I mean, not technically, but they're the two emergent winners. But when we look at the trading this name for example purposes, how do you think about looking at this name?
Yeah, elevated implied volatility going into earnings, but earnings could be the catalyst to make its next big move. Looked at a neutral bullish strategy, selling a put vertical below the market. The 36-34, selecting that 36 based off that point of control that Rick talked about in that volume, area that basically between 36 and 39. So just basically at the bottom end of that big chunk of supply of potential overhead supply even in this stock. So made a recent big move. And so rather than kind of chase it to the upside, looking at selling some downside here, if you could collect 50 cents, that creates a 3-to-1 risk reward. You risk $150 with the chance to make 50. This expires next week, though, as opposed to tomorrow, just to give that extra week cushion for this particular, name. Rather make it, you could, of course, do something in tomorrow's expiration, but it's going to be very binary around earnings. This allows for a little bit more margin for error in the event that this goes against the trader or, in whatever trade they would do by getting that extra week.
Okay, Microsoft on the move. ABC
50 break even, 35
in place, looking for D now.
For a stable to higher DraftKings post earnings here, Jenny.
Yeah, and I will say that's, I think, a lot of what we're hoping for with our next name today, which is Block, of course, formerly known as Square. The ticker has not changed. I didn't even bring that up yet, Rick, which I have to say, I bring that up every time we talk about this name because it still pains me. But as far as Block/Square is concerned, what are we watching into this print?
So this one, we've had one of those kind of abrupt shifts in trend here. You can see the prevailing movement was to the downside, starting with those 52-week highs near about 88 or so, 87, 88, going down across these subsequent highs. Then here was the breakout. This was also where we started to recapture our moving averages, yellow 21-day, orange 63-day, purple 252-day. So we managed to make our way above those. We established this white channel starting here at our low point that we had during this earnings event here, and then we have
We're about
extrapolated and put it
37 minutes away from the Fed decision.
yesterday. Now on pace for more of a Harami type candle, a small red candle completely contained within the previous day's larger green candle. It does seem like we also have broken out to the upside here. You can see that in addition to our longer term green line 73.80, you can see that was a stopping point for price numerous times, both to the upside and the downside around that general area. And we also broke through our recent highs that we just displayed here. So moving on to the upside, not really breaking out of the channel yet. Heavy volume yesterday as well.
Okay, so with this heavy volume over the last several days, I was reading that a lot of these fintech names are actually expected to see this Trump bump is what I was seeing it called, which I thought that was hysterical. But with momentum now over the last several days, what are we watching into this report?
So in our price analysis discussion there, we can see that price was trending upward. RSI is mostly matching up here. We're seeing a series of higher lows, pretty consistent trend line here in green, where we did recapture that 50 midline here that separates bearish and bullish momentum. A break into the overbought area did not last, though. We couldn't quite hang on. And then we saw momentum decline significantly, even as price reached a similar high closing price. So a bit of a drop off in momentum. But now today changes things once again. So kind of a rapid fire switch back and forth here. Once again, though, failed to break above the overbought area yesterday. So that would be ideally what you would have wanted to see, but we did manage to hold on to our green trend line. So momentum definitely more geared toward the upside in this name right now.
Okay, that is interesting here. So actually seeing not a divergence, seeing price sort of fall in step with RSI. So last but not least, what are some key price levels we're watching here?
So now that we, kind of discussed our general read on everything, we can see that this is a bit of a different volume profile situation to our last one. Now we just have one major volume node. It's all the way down here, 65. That's the point of control. That's pretty far away at this point, not really a ton of help. But we do have another rather smaller peak, another node here between about 71.50 and 74 or so, roughly matching up with some of these key price levels that we talked about. So that would be a supportive zone to the downside. It also contains our orange 21-day EMA, so 71.50 to about 74. To the upside, we can see our red line here, 80, an old high point here, failed to close above it multiple times over there as well. So this is an area that could come back into play, even though we haven't been there for quite a while. So 80, and then our next set of highs, our best close on the year, 85.72. General picture as well. Kind of wondering if it's maybe like a cup and handle type shape here. You can see the gradual bottoming and rounding here. The expectation would be, if the pattern plays out, would it be a rally up to the resistance level, a pullback, and then eventually continuing on in the direction. Not saying that's going to happen, just food for thought.
Yeah, and I think a good point there, and a name that has, I mean, today seeing some weakness, but has been a consistent, I think, disappointment as far as the overall recovery. Although we are now positive, or at least attempting to be slightly positive on a year-to-date basis, I do believe we're actually still slightly negative, down less than 1% here. So with all this in mind now, Alex, walk us through how you trade this name.
Well, it's going to appear a little bit like deja vu because it's the exact same strategy we just looked at in DraftKings, but rather than it being 3-to-1 risk reward, it's going to be 2-to-1 risk reward. So it's slightly more aggressively priced on this particular case. Selling a put vertical below the market, next week's expiration, 74.71. No fancy, kind of use of technicals to choose the strikes in this case. If it did, it would have been just by coincidence. This was actually selected based off a function of pricing. So I looked for a $3 wide spread that I could collect a $1 credit on for the example, so that you can create that risk reward. That was a 2-to-1 ratio. Break even be 73. You risk 200 with a chance to make 100. But playing into the trend recently, which has been one of upside, and of course, increasing momentum. So if that continues, that is beneficial for this trade because, of course, all you need in this case is it not to go down, not to break through 74. But if it does, it's
Microsoft continues to grind higher from the low. I like the discount.
Yeah, and I think a good point there, and a good takeaway of how to look at two names that are volatile, not necessarily at the forefront of our attention, but we could see some interesting earnings moves and hopefully to the upside here. But we'll leave it there for all things our Chartmaster segment. Now, coming up next, it's time to talk Lyft, which is making a
FOMC
move on the back of its strong third quarter. We'll discuss more about what the street liked within this report coming up next.
Empower your portfolio with the Schwab Network. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Get each and every angle, the whole picture. Everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl.
Okay, Microsoft making a nice little move here. Microsoft.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to Next Gen Investing. It's now time for FOMO. We're talking a name that is moving to the upside today, and very substantially so, as Lyft is up over 23% here, now firmly positive on the year, and also pretty substantially off its lows by almost.
Yeah, I'm looking for the markets to move higher after FOMC, but we all know that the we'll get a rip. If we get a rip, we'll probably get a dip right after that. And then we have to reassess after 2:30. Does Powell speak after 2:30?
And then we saw shares surge and then fall. It was like the most volatile morning of earnings in quite some time. So thankfully, this nice 23% move has held.
That's right. I mean, no, it's not surge pricing, but
So it's a statement, a rate statement at 2 p.m.
about 23% at the moment. And now with this move, it starts to line up more with Uber and how it's performed year to date. And keep in mind, of course, Uber kind of disappointed the street with its last quarterly reports. Not the case with Lyft today. Lyft beat expectations on both the top and bottom line, and the street likes what its guidance looks like. Adjusted EPS came in at a loss of 3 cents a share. The street was expecting worse than that. Revenue topped $1.5 billion. The street was looking for $1.44 billion. In terms of fourth quarter bookings, the projection is a range between $4.28 billion and $4.35 billion. So that's better than expected. You saw growth in gross bookings up 16%. Active ridership increased 9% overall. The CEO talked about on the earnings call something that the company had initiated this year, which it's like a subscription thing.
Tesla continues to fade, so does the markets.
Riders can sign up for it and allows them to lock in some of the pricing. And they've noticed that lead to a big uptick and kind of more stability and consistency in terms of its ridership. So they said that metric accounts for about 50%, commuters accounts for about 50% of rides between Monday through Friday. And a lot of that he attributed to this new feature, Price Lock, which riders pay $2.99 a month for that feature, and then that locks in a certain price.
Yeah, Diane, that might be something they need to do because I don't remember when it was. Let's call it a year ago. Remember, Jenny and I were exploring this report that had come out. It basically said in like 17 of the biggest cities, and give or take a few, I can't remember the details, but Uber was cheaper on average and it was faster to your destination on average. And that's just impossible for Lyft to compete with. If it takes longer to get your ride and it costs more, what am I paying more for? And it comes down to scale. One thing that I've also noticed is it's a pretty heavily shorted stock. These pops around earnings have been short-lived over the last few years. Was there anything here that gets the street excited that this could finally be that turning of the page where you see something sustained in Lyft, or is this just more of the same?
I think there are a couple things that point to its future. One, the Price Lock feature is recent. That started in September. They said they have more than 200,000 active passes there, and that's been growing. And the riders under that take on average 4 more rides a month, they said, than they did before purchasing this pass. The other thing they did to smooth out things and to kind of create more consistency is a reduction in surge pricing. They don't call it surge pricing, they call it prime time. And they said they noticed that Chicago, where you all are, is an example where they saw the reduction in that surge pricing, prime time pricing led to a more sticky consumer, right? And Chicago was another one, and they saw more conversions because of that. Chicago and Boston. So you see that movement, moving the needle in some big cities. In terms of the analyst reaction to this, analysts are maintaining, the ratings are all over the place in terms of whether it's a neutral rating to overweight or outperform rating. So, but the price targets are being increased across the board. Cantor Fitzgerald boosted their price target on a Lyft. Roth Capital has boosted their price target. Truist boosted its price target, all still in the neutral to hold category. Truist has raised their price target to $20 a share. It has been difficult to get to that level for Lyft. We've been watching. That's a key level to watch. Wedbush has also raised its price target to $20 a share, but still maintains a neutral rating on Lyft. Piper Sandler, they have a higher price rating. They've boosted their price rating to $23 a share. You see UBS raised it to $18 a share, so it's nearly there. Benchmark has reaffirmed their hold rating. Needham reiterated their hold rating on the stock. So it does remain to be seen in terms of if they will kind of catch up to Uber. The other thing that they announced also with this earnings report is an increase in availability of autonomous access through their partnership with both Mobileye and May Mobility.
Now, in certain markets, obviously, you will still need a human in the vehicle because of, regulatory issues within certain states. But they said in 2025 in Atlanta, they'll start rolling out that autonomous driving option. And so with that, that could lead to some reduction in costs, Alex.
Yeah, Diane, I know that I've seen videos of this, and this already exists, I believe, actually in California in some capacity. But to me, to see that the driverless vehicles are like some of these prototypes of these Ubers or Lyfts that
Apple's still holding the highs.
awesome, but terrifying.
Super micro, a little dip there, but starting to push back up to the highs.
You gotta get humans off the road for me to really trust. Yeah, I completely agree. We'll leave it there, though. Great insight as always, Dan Kinghall, Senior Markets Correspondent for the network. And so now we trade this name, Alex, and I do think that Lyft today making a nice breakout. I mean, ripping on the session, still actually about 15% off of its yearly high. I have to say I'm an Uber girl now. I'm Uber loyal. I signed up for Uber One, so I haven't taken a Lyft in quite some time, but same difference. I mean, in this regard, seeing a nice pop today, which maybe shows that demand is rising. I mean, overall for all these names, where it doesn't have to be like stealing market share. Maybe the demand is just that great.
Yeah, I think there's a lot of Uber girlies out there, but when you think about this new price lock that Lyft has, that could do something to peel some of that market share back. This is a strategy that I think is, if you really think that there's tremendous upside potential in a name, you would deploy. But I also think it's something you can consider doing when you're just not so sure. I mean, this is a name that's heavily shorted. The pomps have been short-lived. Perhaps at some point it is going to break out and really, get the doubters to throw in the towel, but it hasn't happened yet. So I looked at buying a call. It's an out-of-the-money call going out to December 20th. It's the 20 strike in this name for a 50-cent debit. So you're paying $50 for unlimited upside, but your break-even is at $20.50. So you're going to need some help from the market. I think the critical thing here is, Jenny, your risk defined. So you're risking like 2.5% of that $20 notional would be for a chance to have unlimited, kind of swing for the fences type profitability on this trade if Lyft really kicks it into a new gear and does break out and sustain something over the next month and a half. So that's always going to be
Just sitting there watching.
This is just one way.
Not much to do. Stocks at highs.
Less aggressive or perhaps
Watching for B and C pivots like on Amazon. I might buy some. I decided that I wasn't going to buy Amazon just yet. Wait for it to come back to the 9 EMA.
success as your break even would be lower. So it just comes down to, how you want to, play with that risk reward and those dynamics. But this one's probably the one that has a lower probability of success. But if Lyft really does turn a corner, you have a chance to make a sizable return on that risk if it really does move higher.
I have to say also to Lyft's credit that I haven't looked at an Uber chart really, at least on a yearly basis frequently. It's up 19%, and at this point Lyft is up 18%. So I keep saying that they're incomparable. I know that Uber is much larger as far as its market cap, but actually performing very similarly now with Lyft's nice move to the upside today. So we'll leave it there now for our FOMO segment. But coming up next, time to talk a name that is unfortunately moving very differently than Lyft over the last year or so. We are up 3% in Rivian shares today, but still down 57% into their quarterly update today after the closing bell.
All right, watching futures trying to bounce a little bit.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Trading at Schwab is powered by Ameritrade, bringing you futures and Forex for round-the-clock market access, even when equities markets are closed. All on our award-winning Thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
No politics, no noise, from bell to bell and beyond. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network. Join me, Oliver Rennick, alongside Schwab Network's options experts as we explore the second derivative. Gamma On is a brand new limited series to take your trading skills to the next level. Subscribe to Schwab Network's YouTube channel now.
Welcome back to Next Gen Investing. It's now time to welcome in Jeff Pierce, the Senior Manager of Derivatives Trading for Charles Schwab, to discuss Rivian earnings. And I know it's been a bit of a mixed picture when it comes to the EV space specifically. I know we're higher today, but gosh, this is a brutal chart, Jeff. So walk us through what we're expecting here.
Yeah, I mean, expectations, are coming in a little bit low. We're looking for a loss of around 89 cents on earnings revenue, about 970.7 million. Sales estimates are coming in lower sequentially because of deliveries. We saw Rivian deliver about 10,018 vehicles in Q3. That was down 27%.
All right, we continue to fade S&P. Microsoft pulling back a little bit more.
Sold about 7,000 vehicles, but production also fell for Q3, 19% year over year, coming in at 13,157. Analysts are expecting gross profit margin, of about negative 30%, which is actually an improvement from the 38% loss we saw in Q2. And the last report, management did reiterate their goal for a positive gross profit in Q4 and fiscal year 2025. However, since then, management has cut their annual production guidance to 48,000 cars for the year, down from 57. That's compared to over 57,000 cars that we saw. So last year, they're blaming part shortages for the reduction. So far, we've seen Rivian produce about 36,749 vehicles in 2024. That's down 7% year over year. Sales are a little bit better so
Okay,
far.
Bitcoin's still going. We got about 17 minutes to go before the Fed.
We know that the stock has been, really declining since the last report, down about 30%. We saw the election results drove it down a little bit further as investors are concerned about some of those tax credits and rebates going away. Rivian is certainly getting hit by that, although we're seeing a little bit of jump in the stock today ahead of earnings. I'm not sure whether or not that's a positive outlook from investors or if we're just making up some of that pullback we saw yesterday.
There's some concerning stuff here, Jeff, when you think about the fact that it's not a profitable company. It no longer really is showing revenue growth. They're hoping it's just a little bit of a gully here. But, typically if you're going to go out, especially with interest rates moving higher as they have recently, and you can see a pretty, positive correlation between the treasury market in price and Rivian over the last 3 months, over the last 30 trading days as well. If you're higher interest rate, you're going to need to buy, basically a company that isn't making any money. You're going to need to see tremendous growth and potential. And maybe that's there, but it's not showing up in these numbers. So when you're looking at this, what are some
Microsoft pulling back.
Could maybe perhaps, kind of change the narrative here on this one? You talked about a little bit of upside today, but the chart's pretty ugly.
Yeah, it's pretty ugly. I mean, unfortunately, in the environment that you're talking about, high inflation, high interest rates, it's been difficult for the consumer to want to spend the type of money that it costs to buy these Rivian vehicles. The R1 starts at about $77,000. That's compared to about $48,000, which is the average price for a car here in the U.S.
Bitcoin still going. Bitcoin.
What the company's trying to do, cost control, has really been the main factor over the last year. They lose thousands of dollars every vehicle they make. The CEO said some of the efficiency they've been running, they expect that to lead to about 20% material cost reductions, about 45% reduction in cost for the upcoming R2. That's projected to start production in 2026. But, if you look
Coinbase, Bitcoin, that's showing a lot of interest right now. Coinbase pulling back.
Even with their raised money along the way, their cash position continues to decrease dramatically over the past 3 years. Last month, we saw them report delivery and production numbers for September showing deliveries down 36%, which was the lowest level we had seen in more than a year.
Making new highs.
Most of those vehicles, they said, were already from inventory prior to their production costs. We'll see as some of these efficiencies start to come in, if it gets better. You have to remember, if you think about the concerns that they have over the election, most of these Rivians did not qualify for the existing tax credits already. The big concern was that this lower price R2 and R3 was going to come in, and that was really going to help demand, spark a lot of purchases. And now with some of the tax issues, I should say tax credit concerns, and other things. I mean, the outlook is not good right now, and I think investors are waiting to see whether or not just general demand picks up in EV. If we start seeing people spend more now that we're seeing inflation come down a little bit, that can certainly help Rivian. But they're in a tough position, no doubt about it.
They definitely are, and I would say the chart speaks to that. And so as far as, I know you mentioned the election risk, and we talked about solar yesterday, which I think is a very similar conversation where we could see some of these companies hit by, they've been boosted by the tax credits that could go away. The clean energy trade is one that was seen more beneficial under the Biden administration, so that could see some weakness. But as far as analysts are concerned here into this print, what are you seeing right now?
Yeah, and the other thing to keep in mind is any of those tariffs, right? Interrupting more supply chain issues, more production cost problems for Rivian would certainly be a big negative. Where you look at a company like Tesla, they might be able to get away without some of these tax qualifications. But,
Bitcoin still going.
Analysts, they haven't seen a ton weigh in recently, but within the month, Guggenheim kept a buy, lowered the price target from 21 to 18. We saw JP Morgan move their price target to 12 from 14. Truist also down to 12 from 16. So we've seen them kind of lowering these price targets over the past month or so. And I think it's just, again, investors and analysts aren't seeing the cost reduction yet play a big role in the overall company revenue. And that's really what we're waiting to see until we start to see demand pick up for these vehicles.
I think it's just a simple I'll just use NVIDIA for a comparison. NVIDIA in a growing sector, tremendous earnings, tremendous revenue growth. Oh, and has a lot of confidence. It's a mega cap company. Rivian is a shrinking company, doesn't make any money, doesn't have really any path to it anytime soon without tremendous turnaround and growth. Oh, and by the way, its growth is going down. It's got 20% short interest for a reason. We'll see if it can turn it around or not. The cars are cool. I see them a lot around the Chicago area, but maybe a little bit of a crisis of confidence. Jeff Pierce, appreciate it as always, Senior Manager, Derivatives Trading for Charles Schwab & Co.
All right, Mobileye, MBLY, Mobileye.
Fed preview with George Tillis.
Pulled back a little bit, inside day.
What's the expectation for what is now about 12 minutes away? We'll be right back.
S&P pulling back. Inside day, S&P.
Empower your portfolio with the Schwab Network. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
S&P cash.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl.
Schwab, a modern approach to wealth management.
Welcome back to Next Year Investing. It's Fed Day. It's a Thursday Fed Day, so election pushing that back one day. Joining us now, George Tillis, Senior Markets Correspondent and Fed expert here for us. George, I'll give you a They're worried about
All right.
risks now.
Here we go. Looks like we might get an early release. No? Got a nice bounce. Shorts covering off the low.
They're not super elevated on either side.
Netflix trying to take the high today.
One seems to be what we're expecting. Is that what we're going to get?
Yeah, I think so. I mean, if you just consider looking at the federal funds futures, it looks like there's only a 1% chance right now that they won't be cutting rates by 25 basis points. So let's just say that the overwhelming consensus is that they will. I think you're right. The risks, and this is what they have alluded to, is when they cut rates in September, is that the risks are a little bit more balanced, and the risks in reference are essentially the inflation rate as a risk, but also unemployment. So they have to balance out those two risks, and that's their dual mandate. They also have sort of an unofficial mandate, which is financial risk and liquidity. But again, their core mandates are dealing with inflation, and inflation has come down. If you do consider looking at core numbers, I mean, the core PCE number just based on last report is still
Okay, nice rally on the S&P. Futures rallying off the low, going into the Fed decision. Got a buy order block below and a sell order block overhead. S&P. TTM is changing. Daily looks fine. 4 hour looks fine.
And so obviously they're going to be cutting rates this meeting. It looks like, based on the probabilities, they'll be cutting rates once again in December to finalize the year. But at the same time, one of the interesting things too, guys, is that yields have risen. And what I mean by the yields, it's not necessarily shorter term yields like the federal funds rate or even 90-day T-bill rates. We've actually seen 2-year yields rise by about 75 basis points since actually the last meeting. And that has actually translated into longer term yields like the 10-year rates, which got close to, I didn't see if they hit it, but very, very close to about 4.5% yesterday. So, what's happening here is we're actually seeing the yield curve widen out.
Okay, we're seeing Tesla turn back up on a little dip. Tesla.
And that might be beneficial to, of course, yield sensitive areas of the
S&P charging a bit higher off the low.
Interest rates for mortgages and home builders have really been a challenge over the past couple of months. But at the same time, banks have benefited because lending rates are still very high relative to deposit rates, which are down, but also expected to continue to be down once the Fed lowers rates again.
And so, George, I was going to ask you about that. If we'll see any clarity from Jerome Powell on the fact that we've seen, only lowered interest rates, but
Microsoft.
high yields, which is something, I don't believe.
Okay, Microsoft. BNC.
So, yeah,
close.
Question, because that's the,
Apple.
Consistency, let's call it, or sort of conundrum I've been alluding to.
Apple looking good.
Ideally speaking, when you
AMD. Looking for a push higher on AMD.
Things potentially going on. One is that there's growth. There's more growth expectations embedded in the longer term rates, which is a good reason for longer term rates to rise. But also there may be some elevated inflation expectations. Going into the election, there was a lot of uncertainty. There's still a lot of uncertainty, by the way, around policy. So there's a little bit of confusion at the same time. And once again, the other thing is the balance sheet. This is important because the balance sheet since the COVID run up, which was around $9 trillion, has shrunk by about $2 trillion. portion of that has been long-term bonds, which are essentially being rolled off their balance sheet. In other words, they're being allowed to expire, and the remittances are going back to the Treasury. So the balance sheet contraction might be a function of the long-term rates rising. So what I suggest is important in this meeting is not necessarily they're going to cut rates. I think that's a given. I think there's going to be a lot of questions about what do they intend to do with the balance sheet and what do they intend to do to address long-term rates, which are rising.
You know, George, I expect a more than cagey Jerome Powell around.
Okay, there goes AMD on the move. There goes the S&P. S&P on the move.
Himself into anything, which is pretty much what they've done. So we'll see what happens. 5 minutes ago, George Tillis, always a pleasure. Appreciate the insights here ahead of the FOMC, which is now imminent, inside of 5 minutes away. Just under 6,000 in the even the S&Ps as we trade just.
Okay, let's see what's gonna happen here. Let's shift to CNBC. And a commercial break. Okay. All right, the Fed's coming out here shortly.
Let's break that down for studios here in Chicago and on the floor of the NYSE. We deliver more than 8 hours live programming. We kick off every day bright and early at 8 a.m. Eastern with a futures show breaking down commodity markets, futures, and technical trends. At 9 a.m., I'm in studio hosting our 2-hour opening bell show, Morning Trade Live. It sets the blueprint for traders for the day. We invite top analysts and investors to determine what's driving the early action, how to interpret the news, what's on the agenda for the session. Hey, Nicole, tell them about our shows at the NYSE.
Thanks, Oliver. Welcome, everyone, to our beautiful NYSE studio. We are here on the New York Stock Exchange floor, broadcasting live each day. I host the Watch List, which provides investors a fun midday update on the major news stories and themes. Best part of being down here is we are right in the center of the action. The energy is palpable. The sights are unmistakable. It's back to Chicago now. Jenny Horn.
Thanks, Nicole. Hi, everyone. I'm Jenny Horn, host of Next Gen Investing. We all know how many new investors.
Okay, let's get ready for the Fed.
10-year yield. Higher since the last Fed meeting. We were about 360 before September.
Okay, Meta's at the high of the day.
We were up sharply on the election night as well, but we've given up that
S&P.
434. So watch this level as the decision and the price are come in.
Well, I got about 2.5 minutes, and let's get to our all-star panel as we await the Fed decision. Joining us, as is so often the case, glad to have David Kelly of JP Morgan Asset Management, Stephanie Roth of Wolf Research, and Jim Caron of Morgan Stanley Investment Management. Welcome to all of you. David Kelly, what do you think the result will be, and what will the texture of the statement be?
Well, I think the Fed will cut 25 basis points. I think they'll try and change the statement as little as possible. I mean, the reality is they're not just data dependent anymore. They're now policy dependent also. I think that how they implement monetary policy next year depends a lot on how expansive the Trump agenda turns out to be. But they don't know that yet, and because of that, I think they'll try and say as little as possible about it, while admitting that fiscal policy next year may dictate, to some extent, the direction of monetary policy.
So Stephanie, do you agree with what David just said? In other words, a quarter-point cut, and maybe as we head into next year, an intense focus on the Fed's part on what's going on fiscally. In other words, with tax cuts and spending.
Yeah, I mean,
S&P dipping a bit.
They're not making predictions about what fiscal policy is going to do, so they're going to stick to data as they come. Very likely they're cutting 25 this time. Our base case is they'll probably cut 25 again, and then they'll move to an every other meeting type of cadence. Our base case is that much of this stuff won't get implemented until the end of 2025, in which case they'll probably just continue at that type of trajectory until they get real clarity on fiscal policy, meaning it actually getting implemented.
All right, Jim Caron, we got about 45 seconds or so. What's your thought?
Look, I think 25 basis points, like everyone else is saying. Look, the Fed doesn't get paid to speculate on fiscal policy. When the policy is there, they will evaluate it. They'll see what the impact is on the overall economy. The key question here today is that they set back in September a terminal policy rate somewhere around 3%. The market thinks it's more closely aligned with 3.5%.
Big move, big move. There we go.
Push yields higher. So the question for me is, in the statement, does the Fed actually start to change what they think of the terminal policy rate? Does it get pushed higher given the recent data that we've had on inflation and jobs and everything else?
So that's the thing to watch for. There is any indication of what that terminal or lowest rate might be. Let's get to Steve Leisman for the Fed's decision.
The Federal Reserve cutting interest rates by 0.25% to a new range of 4.5% to 4.75%, or a mid-range of 4.625. The decision this time was unanimous. There was no dissent by Michelle Bowman, the Fed governor. The committee will continue, it says, to consider
Bitcoin's still pushing a bit higher.
data, looking at the risks and the outlook as well. It sees risks on both sides of its mandate. That is the possibility of higher inflation or higher unemployment. But it sees those risks as roughly balanced. It says the economy is expanding at a solid pace. Same language as last time. Labor market conditions have generally eased, but more in the prior statement it said that labor market conditions have slowed. I think it's a little bit better number.
Okay, the New York FANG index stocks holding up very well. AMD back up to the highs, Netflix back up to the highs, Nvidia pushing higher. They all look pretty good. Home Depot at the highs. What's Boeing doing? Boeing is just off the high of the evening session. Nvidia looks like it wants to go.
Kelly, that is it. I would say a waveless or splashless quarter point post-election cut.
Well, it's a bit early, but you're probably right. Steve, stick around. Let's turn to our panel for some more reaction. And of course, to look ahead to the press conference that is coming at 5:30. And Jim, that's often when we've seen some bigger moves.
So it is. Look, I mean, ultimately, I think what the Fed is going to try to key off of is what's happening in the labor market. I think inflation they're comfortable with. Inflation has been coming down. It's starting to settle down. They're making progress to their 2%
What's
target.
the yields doing? All right.
Tomorrow's news is what happens to payrolls. Now, look, ultimately, we've had some storms. We've got a lot of noise within the data. This is stuff that they have to
Okay,
sift through.
Oklo up 17%, going for the high of the day. Oklo.
And if the unemployment rate starts to rise very, very quickly, then they will have wished that they continued on with their pace to cut interest rates. But I think that's what they're going to do. 25 today, 25 in December, and I think they're on a mission to 4%, and then they're going to reevaluate.
The statement admitted the reference to having gained greater confidence in inflation moving sustainably to the 2% target. David, what does that mean?
I don't think it means that much. They're always trying to use as few words as possible, so if they can get rid of a sentence, they're happy to do so. I think they needed to use that language while justifying a first move, but I don't really think it means very much. I feel pretty good about payrolls, though. I think that, after the election, you're just not seeing commercials who make people feel better. But I think you will see a bounce in small business confidence. There's a lot of uncertainty going into the election. I think people will probably be more positive about making business decisions. So I don't see any reason to expect a slowdown. We might actually see slightly higher inflation in the months ahead. So I don't expect the Fed to accelerate the pace of rate cuts.
Stephanie, your thoughts?
Yes, our base case is that they're going to be doing that every other meeting cutting cycle from here. The one thing we didn't talk yet about is the ECI. The Employment Cost Index showed wage inflation just continuing to slow down. So this is largely explained by perhaps productivity picking up, which is a great backdrop for the Fed to be able to continue easing, even though the economy is holding up fairly well. We're sitting here in a kind of a non-inflationary type of growth environment with productivity actually picking up. So despite the expectation that growth is going to remain fairly solid here, the Fed is still able to continue its path on easing.
Okay, Tesla trying to push a bit higher.
Color from the
New York FANG index stocks holding up very well.
No, not this time. There was some speculation.
Nvidia looks like it wants to do something. All right, S&P still pulling back a bit.
Who was unhappy with 50 would be unhappy going a further 25, which would be 75.
Nvidia pushing back up to the highs.
Now, sometimes, Kelly, when a person dissents, they dissent the one time, they let their objections be known, and then they go along with the committee in the future. I've seen that quite a bit. The idea that, hey, you raise your hand, you let me know. I like the characterization that was said earlier, and I think it's worth thinking about. The Fed says in its statement that the risks are roughly balanced. But what's it doing? It's cutting rates. So it is indeed acting, regardless of what it's saying about the risk being balanced, it's acting as if its bigger concern is indeed what's happening in the employment market. And it's going to be interesting to see, well, first of all, about revisions, but maybe how the Fed chair or other Fed officials characterize that recent October report we got, which was indeed, messed up by the hurricanes and by the strikes. But still, when you look through it, and I talked to a lot of economists about this, generally they saw it as weaker. Because if you add back 100,000 from those two factors, you still have a pretty weak employment report. So I think the Fed is saying risks are balanced, and that's part of this whole recalibration idea. And maybe one of the questions we might ask Fed Chair Powell, hey, are you recalibrating or are you done recalibrating? Because the recalibration is kind of like, we need to get down to another place, and then we can start thinking.
Okay, NVIDIA lifting, looking like it wants to go, NVIDIA.
Does the new administration mean anything to the Fed?
Okay, nice move on NVIDIA.
Obviously, Mr. Trump is known for being outspoken, for saying exactly what's on his mind. So talk to me about that a little bit.
Yeah, and not
Mobileye.
yet. I think there's,
Let's see what Mobileye is doing. MBLY, Mobileye. Okay, back, trying to get back up to yesterday's wick high.
And whether there's any early action tariffs, that could have a big implication, because if you have a big
Meta back up to the highs, looking good. Apple, wow, these things are holding up very well. Everything's holding up very well.
Eventually, though, if something goes wrong with the economy, I expect that the administration will get very mad with the Fed and blame the Fed for that. But that's kind of comes with the job if you're on the Federal Reserve.
Jim, do you think, I believe the Fed chair's term.
All right, Supermicro looks like it's going to go again.
You see any possibility that he might not throw out that term? Either because
Mobileye, NVIDIA looking strong.
Well, there's always a possibility.
NVIDIA is looking very strong.
I don't place this as a very, very high component of potentially what President Trump's policies would be to remove the Fed chair. I don't think that's his first stake in the ground that he's going to make. I mean, like I said, it's clearly a possibility, but so far the Fed is doing pretty much what he wants the Fed to do. He wants them to cut interest rates. The Fed is in the process of doing that. That should hopefully stabilize and help the economy. Ultimately, the Fed has a dual mandate of price stability and full employment. I think the number one thing, whether it's President Trump or it's Chair Powell, is they need to make sure that the jobs market stays stable. Because if it doesn't, there's this thing called reflexivity. And what that means is that you can get a rise in the unemployment rate that comes very quickly. And that can
Tesla trying to push a bit higher.
So I think what the Fed is really focused on right now is making sure that the labor market stays as stable and as healthy as possible. And doing rate cuts is doing their part to ensure that happens.
Stephanie, what do you expect to be the impact of kind of what's been mentioned on the tariff front, at least on just the general inflationary stance under this Trump administration? Because again, the previous one, for all the tariffs that were implemented, they were cutting rates by year 3 of his term.
Yeah, so one, we do think it's fairly
Okay, Tesla is still rising. So is NVIDIA. NVIDIA going nicely.
Hit to GDP and 1 percentage point boost to inflation. This is very stagflationary. The thing is, it's not proper policy for them to be hiking rates as a result of the inflationary impact.
Okay, I have a limit order to sell these S&P calls into strength. Looking for them to push a bit higher. Okay.
So base case, it is a negative impact. 1% hit to GDP is probably a conservative number. It could be much more significant depending on how this shakes out.
Although, David, the entire agenda seems to be one where they're trying to grow our way out of these myriad problems.
Well, yes, but I mean, there are a lot of promises made, and the really interesting question we're all going to be grappling with here is, once there's no campaign, there's going to be a pressure on President Trump. How does President Trump and the Republican Congress decide to move things forward in terms of policy? Because I don't think they're going to implement everything they promised.
Well, the pressure could come from the bond market, though, and that's why it's interesting to watch those levels taking a breather today.
Yeah.
Go ahead, Steve.
I was just going to say, guys, I have a question for the panel, which I've never done before, okay? The question to ask Powell today is, what does he think about the recent rise in interest rates and what that should say about Fed policy? The answer Powell will typically give is,
Okay, looking for a push higher, starting to move higher.
Go up, they go down, we watch them. It's an input, but we usually look past market movement. How do you ask the question?
All right, all the New York FANG stocks, index stocks look good. Microsoft's starting to push as well.
Jump ball. Who wants to take it?
I guess I'll start on this one. I guess the way that I would start that question is really asking about the deficit, right? The way I would ask that question is how does Powell think about, how does the chairman actually think about the rising deficit, the potential to fund that, and what impact that might have on treasury yields, and then how might they actually react to that? Now, clearly, higher rates will slow the economy, could actually slow inflation.
So sometimes there's an adverse effect or an effect that's not necessarily accounted for.
All right.
But
Thank you,
that's what
Jim.
we do.
Thank you, Jim. Thank you, Jim. We take fiscal policy as given. That's what Powell's going to say in response to that one.
Well, how about you ask him, does he think the increase in rates is due to higher inflation expectations, higher deficit expectations, or higher growth expectations?
S&P looking for a pop.
Answers, but what do you say, Steve? I didn't hear you. Steve?
I can work with that. I can work with that.
Okay, NVIDIA.
All right, that's not a bad one. All right, Stephanie, any thoughts?
So remember, I'm taking profits off into strength into these moves. I'm looking to reassess the markets tomorrow, see how we fare. We're up quite a bit. 145 handles on the S&P yesterday. And we're currently trading just below 6,000 right now on the futures.
The S&P 500 is essentially unchanged from where it was just about 10 minutes ago, and probably for good reason. Here you look at these numbers here, these comments. The growth is decent here. Economic activity continue to expand at a solid pace. Labor market conditions generally eased. Unemployment rate moved up but remains low. Inflation has made progress toward the committee's 2% objective. Not far off from where it was at the last meeting here. I think the problem is that for this press conference, nobody down here thinks that this is going to be about inflation or the trajectory of growth. Everyone down here at least believes that this is going to be about tariffs, tax cuts, and whether Powell will stay on if President-elect Trump wants him to leave at this point. And of course, the tension is Howard's always
NVIDIA, look, okay, Microsoft on the move, Microsoft.
on it until the end.
Microsoft, big move on Microsoft. Okay, a little shakeout there, ABCD pattern shakeout, double bottom. Note where Microsoft bounced at that buy order block from earlier, and prices are moving higher now. Microsoft looking good.
Be inflationary, that could very much affect the Fed's trajectory, a growth trajectory for next year. So it's a legitimate question. I anticipate he'll be avoiding it, but I anticipate that there'll be a little tension here because the press will be constantly rephrasing that kind of question exactly because these actually do fall within the Fed's mandate. So it's going to be a very, very interesting press conference. But right now, we are essentially unchanged on the S&P 500, guys. All right, thank you, Bob.
Let's go to Chicago for some reaction in the bond market, which is similar, kind of taking it in stride right now, Rick.
Yeah, taking it in stride. There's some interesting subtle moves below the hood that we should pay attention to. If you look at an intraday of 2-year, it's been the most responsive. It was hovering at 419 prior to the rate lowering, and now it's around 423. Maybe what's most important, though, is that if you look at auction yields, the auction yield for the 3-year, for example, was 4.152. For the 10-year, it was 4.347. They're both underwater. The only one that isn't underwater is the 30-year bond, because that was lucky enough to be
Okay,
auctioned later.
looking for S&P is just sitting here, futures.
Why am I mentioning the auctions? Because much of yesterday's selling.
Google back up to the highs, Google. All right, so do I want to do anything with Google?
You own something that's underwater. What do? You sell it. That was part of that. The other issue I think is that many are going to be talking, of course, about the neutral rate, R-star, this magical yield.
Okay, nano nuclear. These stocks may be affected by earnings later tonight. SMR's got earnings tonight. Okay, these nuclear, small nuclear device companies, Oklo back up to the highs.
Almost a 30% revision to August and September, causing the question accuracy. If you look at the personal consumption expenditure core year over year, 2.7, sticky. In terms of what the Fed's doing, it makes complete sense. They've telegraphed it. They've been in sync with the markets. But ultimately, how it moves from here, I love the way the panel's all bringing up fiscal policy and what the Fed may do. Because in the rearview mirror, this Fed kept interest rates so low, they definitely were part of the problem with respect to allowing the government to overspend because, heck, zero interest rates is not really costing us anything. That has changed. To find a sudden interest in fiscal policy now, I would scratch my head. We have no idea what the next president, Trump, number 47, is going to do. Much of the talk to get him elected was, as many candidates are, kind of presenting a bunch of issues and how he may move. One thing for certain, look for tax cuts. Another thing for certain, look for many in Congress to continue to not use dynamic hedging and get it all wrong in terms of what the problem is. It's not a revenue problem, it's a spending problem, and maybe that should be one of the first questions. Back to you.
Rick, thanks. We appreciate it. Rick Santelli, keeping an eye on things. We're minutes away from Chair Powell's press conference. Starts at
Yeah, Powell will be speaking. You can expect prices to be all over the place. As we've seen in past occasions where he's had a conference, it'd be up, it'd be down. Goes down, then it rips right back up. So be careful. If you haven't already taken profits off End of Strength, you may want to consider doing that. You don't have to get every penny out of the market. All you want to be doing is buying the dips in the bullish days like yesterday and today, buying the dips and selling into the rips. Or if you're swing trading, make sure you have enough time and you're not buying the highs, giving yourself the best opportunity possible. Stocks like Microsoft, for example, I like a lot. Microsoft with the dip back to a discounted area compared to the other stocks. Okay, we got a nice little dip. Okay, I had an iron condor on this one. I've since exited that position. Okay. So you can see RSI is rising. Microsoft back above the 50 and the 200-day, both in the same location. The dotted brown colored line, I guess, is the 200-day. The green line is the 50-day. You can see it better over here above both. Near the upper half of the daily range, MACD and stochastics are turned up. This is telling you to look for closes in the upper half of the daily range. Volume coming up. Looks good. RSI rising. All looking good. Looks good to me. Okay, so Microsoft looking for a follow through. 3 white soldiers off of the bottom. That's a big reversal pattern. If you know anything about candlesticks, 3 white soldiers is very strong. Okay, here's Microsoft. Okay, nice reversal. Microsoft is starting to go now. Watch Microsoft. There it goes. Dun, da, 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 da. Dun, da, da. There it goes. Microsoft. Okay, so Microsoft, I did have an iron condor on this one. I took it off for a profit. Microsoft. I took ARM and Qualcomm off this morning too. I took Microsoft off yesterday when it came back to the 50-day because I felt that was right in the middle of price action, so I get my best exit. This was a 20 December expiration, so went a little far out only because I wanted more of a credit, and because of the move yesterday off of the low, the credit started to look very appetizing, so I took the profits off the table. Same thing with Qualcomm. I took that off this morning. Qualcomm popped initially. As it started to drop, that's where I took it off. $135 per contract. Actually, more of a profit than I mentioned, I believe. It might have been ARM, I was thinking. I took them both off, though. ARM, I'm out of this one, too. Okay, $100 credit. Actually got about $92 on this one because I closed it for $8. Expires tomorrow. Couldn't see a 15-point move today. Microsoft, though, looks good. Microsoft. Okay, Microsoft.
Is it inflation? Is it real growth? How do you think the Fed's thinking about this backup, a significant backup in yield since they cut rates last time around?
Well, first, thanks for having me on. Look, I think it's a combination of expectation of increased deficits, perhaps growth staying strong, but also the risk of inflation probably has gone up. You have the Fed cutting rates as the fiscal policy is becoming more stimulative. And so I think the market is suggesting that the borrowing costs that the U.S. government is going to face are more likely to go up as opposed to going down as we go into a bout of what looks like pretty serious deficit spending.
So what is the Fed's role when that is the case? You know, no one's saying that, you know.
All right, looking for Powell's comments to push markets up initially, be able to sell into strength.
Well, no, they can't ignore it. So what they'll do is obviously run it.
Netflix still pushing.
And they want to see if there's an
Google at the high of the day. Google.
And all that depends very much on whether or not, productivity increases and the economy grows. Uncertain for sure. And so let's wait and see. But I think they will be a little more attuned to a pickup in inflationary risk as we find, bigger and bigger deficits and an increase of the debt. But not yet decided, and they'll wait and see.
Yeah, and I wonder.
Supermicro trying to push a bit higher. Supermicro, SMCI.
Stimulative things like tax cuts and spending programs that are in the pipeline here. The effects of those would not show up for quite some time. So I guess then my question would be, how soon would you expect the Fed to react to that? Would they wait and see it until they can see the effects, or would they move preemptively?
Well, that's a very interesting question. They certainly have to wait and see what the actual policy is. It takes some time, to propose tax cuts, to get them through Congress. So this is not an immediate thing. And so I think it's first, what is the policy? Then once they get the size and the magnitude, they'll run it through their models of the U.S. economy, which are the best out there. And so I'm not in any sense suggesting that, the next move is going to be up. I think they'll wait to see what the policy is, assess it in an analytical sense, and then be prepared to move if it looks as though inflationary pressures are going to pick up.
Yeah, or it could.
And so we shouldn't be on our.
Go ahead, finish. I'm
Yes,
sorry.
go ahead, please.
No, I was going to say, I guess.
No, we shouldn't be.
No, please finish. I'm sorry.
We shouldn't be, attuned to a sudden change in policy from either the administration or the Fed. So we're talking about something that's going to play out over quarters, if not years. And so we should just be very mindful of
Google at the high of the day.
The next few meetings.
Supermicro looks like it's going to cover some more.
This is going to play out over time, the reaction to whatever the fiscal policy is, and it could be that interest rate cuts are slowed, or if there's a strong feeling that policy is going to be inflationary, well, maybe interest rates go up a tick, but that's down the road under any of the scenarios you can envision.
Yes, it is. I think they're, on the path. Inflation
Bitcoin pulling back a bit.
Right now, they focused on the labor markets, which are probably okay, but potentially weakening. So I expect them to have at least one more cut this year in December, and then perhaps, slow the pace of cutting as they wait and see how things are playing out.
Okay, NVIDIA pulling back from the high.
I think this is going to be a press conference that is going to try to make as little news as possible, frankly. And so, and so I think effectively, is he just going to reinforce, is Chair Powell going to reinforce the messages that they've been giving over the last couple of press conferences? That's my expectation. So I think this is going to be, I think he's going to try to keep this as even keel as possible. I'm pretty sure they're pleased that the markets did not overly overreact, either fixed income or equity markets. And I think the goal here is to simply stay as close to the statement as possible, stay as close to previous statements as possible, and not make brand new news here.
All right, well, we will see. They're usually pretty artful at not making news. Mr. Ferguson, thank you very much. We appreciate your time. Roger Ferguson, thank you. And we are just moments away from Jerome Powell's press conference. We'll get more reaction to the Fed decision when Power Lunch returns.
Market's a bit choppy at the moment.
We will see him come out in about 7 minutes.
And immigration in this new administration. I'm not even comfortable modeling that.
Okay, Oklo trying to push a bit higher. A very nice day on Oklo if you're taking profits off into strength. SMR with earnings tonight. What's Intel doing? Intel pulling back a bit.
What will happen with Europe if they'll face a recession or not. That's our next conversation. Joe Bruce Willis, thank you so much. RSM, great to see you. Thank you. Coming up, Jay Powell's opening statement. We'll hear from our Fed chair all about what we saw with our rate cut and the Fed's path forward.
All right, waiting for Jerome Powell to speak in about 5 minutes.
Accelerate your market knowledge and shift your perspective into full view. Real-time example trades, a full hour of trading insights. I'm Tom White. I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Okay, S&P pushing a bit higher at the moment, waiting for Jerome Powell to come out and tell us what's next.
It's easy to 40 themes, each with up to 25 stocks identified. Buy it as is or customize to align with your goals. All at your fingertips. Schwab Investing Themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Welcome back to the watch list. I'm Nicole Petalides. It's time for a final look at the markets, our last conversation, because shortly we will hear from our Fed Chair, Jerome Powell. Let's bring in George Silas, see what's on George's mind and what stood out to you or what you're listening for, perhaps, from the statement that's coming up.
Well, I think, if you look at the statement itself and the press conference coming up in just a moment, there's not necessarily much information going back to September's meeting. Obviously, that Jerome Powell is looking at the balanced risks of unemployment and inflation. One could say that just
Okay, future's starting to rise a bit.
more balanced, that they did cut the rate by 25 basis points, that they're a little bit more concerned potentially here of unemployment. They do talk about essentially the balance sheet, I think, is something, the other thing that they're going to be talking about or being asked questions of. It looks like the trajectory of the balance sheet reduction is going to continue. And so I think there are some concerns out there about liquidity associated with the balance sheet reduction. And then I think if you consider now the policy agendas that the Trump administration is going to have, these are, again, questions that will probably be asked to the Fed chairman, but I'm not sure he's going to answer those questions. He's probably going to try to avoid those questions altogether because, of course, they're
Let's see if they're on yet.
not necessarily on what
is just.
Okay, getting ready for Jerome's
I'm not sure that there's going to be
comments.
anything that he really makes waves about. I know that the responses to all of the fiscal policy and Fed governance questions.
Most stocks are hanging on to the highs fairly well.
You know what that's going to be about. You have a big dollar rally. You know what he makes of really the path of inflation probably matters most of all. That was, as you guys have been talking about, the tweak in the statement, kind of removing that confidence, that stated confidence that inflation was heading toward target. But what they know right now is with PCE 2.5% annual rate or core at 2.7, the Fed funds at 4 3/4 is the wrong spot. So therefore, we've lowered them, and we probably have room to do more of that.
Yeah, I think it's kind of interesting and significant that they take out, that further progress is being made because inflation's such a big deal for them and for his legacy.
Yeah. And that's exactly, they're still on that campaign. As much as they say balance of risks is relatively equal right now, they recognize that they're still not yet at that end point of the fight against inflation that they've been, going at for 2.5 years.
Yeah.
Did you expect the market to just sort of chill a little bit today? I mean,
for the most part,
yeah.
I mean, look, they could have used this as an excuse for some reason to back off after the Russell 2000 went up 6% yesterday.
Yeah.
Bank stocks, so banks are down 2%. So you're seeing a little bit of a breather taken in the majority of stocks, but
really nothing dramatic
Really
in the
nothing.
way of a give back.
Yeah, all right, Mike Santoli, thanks very much, we appreciate your time. Why don't we go to a quick market check to sort of level set where we stand right now as we go to the Fed chair. The Dow is basically flat, off 11 points at 43,718. The other market barometers, the NASDAQ has been higher, and Chairman Powell is entering the room, I take it. Let's go to him now. See you later.
Here we go.
Good afternoon.
Look for whippy price action as he
My colleagues
speaks.
and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices.
Sounds like
for
the same
benefit of the
speech he gave last time.
The economy is strong overall and has made significant progress.
It's the exact same speech. Same speech as last time.
The labor market has cooled from its formerly overheated state and remains solid. Inflation has eased substantially from a peak of 7% to 2.1% as of September. We are committed to maintaining our economy's strength by supporting maximum employment and returning inflation to our 2%.
Okay, there goes Intel.
Today, the FOMC decided to take another step in reducing the degree of policy restraint by lowering our policy interest rate by 0.25%.
Junk looking good.
We continue to be confident that with an appropriate recalibration of our policy stance, strength in the economy and the labor market can be maintained, with inflation moving sustainably down to 2%. We also decided to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace.
This sounds exactly the same to me.
Rose at an annual rate of 2.8% in the third quarter, about the same pace as in the
The
second.
numbers are a little bit
Consumer spending has
adjusted.
remained resilient, and investment in equipment and intangibles has strengthened.
All right, there goes the S&P.
Contrast, activity in the
Okay, I'm going to sell those calls into strength.
overall, improving supply
SPXW selling
of the U.S. economy.
into strength here.
In the labor market, conditions remain solid. Payroll job gains have slowed from earlier in the year, averaging
Okay, should be getting a fill.
104,000 per month over the past 3 months.
Okay, should get a fill here.
This
Let's
figure
go.
would have been somewhat higher were it not for the
Go, go,
effects
go,
of labor
go.
strikes and hurricanes on employment in October. Regarding the hurricanes, let me extend our sympathies to all the families, businesses, and communities who have been harmed by these devastating storms. The unemployment rate
Google,
is
new high of the
higher than
day.
it was a year ago, but it has edged down over the past 3 months and remains low at 4.1% in October. Nominal wage growth has eased over the past year, and the jobs and workers gap.
Angela, I would say it's good because markets are higher.
A broad set of indicators suggest that conditions in the labor market are now less tight than just before the pandemic in 2019. The labor market is not a source of significant inflationary pressures. Inflation has eased significantly over the past 2 years. Total PCE prices rose 2.1% over the 12 months.
Yeah, there goes the markets pushing a bit higher.
Volatile food and energy categories.
Okay, looking good.
PCE prices rose 2.7%.
Okay,
Overall,
S&P trying to
inflation
get out of this
is
into
close to
strength.
our 2% longer run goal, but core inflation remains somewhat elevated. Longer term inflation expectations appear to remain well
S&P.
as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. We see the risks to achieving our employment and inflation goals as being roughly in balance, and we're attentive to the risks to both sides of our mandate. At today's meeting, the committee decided to lower the target range for the federal funds rate by 0.25 percentage point to 4.5% to 4.75%. This further recalibration of our policy stance will help maintain the strength of the economy and the labor market, and will continue to enable further progress on inflation as we move toward a more neutral stance over time.
Apple about to take out the high.
Reducing policy
Microsoft at the near the high of the day now.
on inflation. At the same time,
Okay, Google looks
reducing policy
good.
restraint too slowly
All the FANG stocks are doing the same thing. So that is a big plus.
Considering additional adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. We are not on any preset course. We will continue to make our decisions meeting by meeting. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains strong and inflation is not sustainably moving toward 2%, we can dial back policy restraint more slowly. If the labor market were to weaken unexpectedly, or inflation were to fall more quickly than anticipated, we can move more quickly. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to our discussion.
Thank you. Given the expectation that the election outcome will produce policies that would meaningfully impact the U.S. economy next year, how is the committee taking these proposals into account for upcoming decisions, including potentially the next one in December? And can you give us any more sense of how proactive or reactive the Fed is prepared to be to changes in economic policies with the next administration?
Apple at the high of the day, Microsoft looking good,
So
Google breaking
I would
out.
say that in the near term, the election will have no effects on our policy decisions. As you know, many things affect the economy, and anyone who writes down forecasts in their job
AMD.
will tell you that the economy is quite difficult to forecast. looking out
AMD
past the very
making new highs.
Here, we don't
All
know
right, looking
what
good.
the timing and substance of any policy
Looking
changes will be. We therefore don't know what the effects on the economy will be, specifically whether and to what extent those policies would matter for the achievement of our goal variables, maximum employment and price stability. We don't guess, we don't speculate, and we don't assume. Now, just in principle, it's possible that any administration's policies or policies put in place by Congress could have economic effects that over time that would matter for our pursuit of our dual mandate goals. So we, along with countless other factors, forecasts of those economic effects would be included in our models of the economy and would be taken into account through that channel.
Okay, looking for another rip to the highs, another rip higher.
Roughly 1 year ago, when the 10-year Treasury was flirting with 5% and 30-year mortgage rates were near 8%, you noted how higher borrowing costs, if they were sustained, could weigh on economic activity. Given that you've said you believe policy is restrictive and the Fed is now dialing back that restriction, are the growth risks presented by higher U.S. Treasury yields today any different from those you identified 1 year ago?
Microsoft, thank
when
you.
inflation was still meaningfully above?
S&P pulling back a little bit.
So I would just say this: we've watched the run up in bond rates, and it's nowhere near where it was, of course, a year ago. I guess the long run rates are well below that level. So we're watching that. Things have been moving around, and we'll see where they settle. I think it's too early to really say where they settle. Ultimately, I'm sure we've all read these decompositions of what, and I certainly have, but it's not really our job to provide our specific decomposition. I will say, though, that it appears that the moves are not principally about higher inflation expectations. They're really about a sense of more likelihood of stronger growth and perhaps less in the way of downside risks. So that's what they're about. We do take financial conditions into account if they're persistent.
Home Depot, new high today. Home Depot.
We'll certainly take them into account in our policy, but
Nice.
I would say we're not at that stage right now. It's just something.
Nice pop on Home Depot.
These things don't really have
S&P pulling back.
with Fed policy, but to do with other factors in the economy.
If I could follow up, is the September SEP, are those rate projections still valid? Do they still seem relevant given where we are now?
You know, it's you get halfway through the cycle between the last set and the next set. I wouldn't want to comment one way or the other. You know, let's talk about the data we've gotten since the last meeting. So in the main, the economic activity data have been stronger than expected. The NIPA revision was stronger. Certainly the September employment report was stronger. The October report, not stronger. Retail sales stronger. So overall, though, I think you take away a sense of some of the downside risks to economic activity having been diminished with the NIPA revisions in particular. And so overall feeling good about economic activity. So I think we would factor that in. At the same time, we got one inflation report, which it wasn't terrible, but it was a little higher than expected. So I think really the question is December, and you know, by December we'll have more data. I guess one more employment report, two more inflation reports, and lots of other data, and you know, we'll make a decision as we get to December.
S&P dropping off with that comment.
Gina Smilik from the New York Times. Thanks for taking our questions, Chair Powell. When it comes to December, what will you be looking at specifically as you try to make that decision? And then as of the Fed's economic projections in September, you had written down 4 quarter-point interest rate cuts in 2025. Do you still think that those are likely? Is that sort of the baseline outlook at this point, or has that shifted? And if it shifted at all, can you give a little bit of detail as to why?
You know, we don't fill out an SEP, and I can't characterize one that wasn't filled out today. So I can't really speak for kind of exactly where the committee is. I would just say for December, we're going to be, again, at every meeting, we're going to be looking at the incoming data and how that affects the outlook. As you know, we're in the process of recalibrating from a fairly restrictive level at 5.33%. After today's move, we're down 75 basis points. And we're asking ourselves, is that where we need to be? You know that we're trying to steer between the risk.
Okay, a lot of chop with him talking.
Perhaps
some people off the high.
Inflation or moving too slowly and allowing the labor market to weaken too much. We're trying to be on a middle path where we can maintain the strength in the labor market while also enabling further progress on inflation. We think that's where we are, but that's the question we're going to be asking in September and in other meetings. And again, I can't really update you on the committee's thinking because we don't fill out an SEP at this meeting.
Yeah, totally appreciate that. I guess when it comes to your own thinking, do you think that a full percentage point of rate cuts in 2025 is a reasonable outlook?
Again, we're going to wait and see how things come in December. I mean, it's just, I would put it this way. We're on a path to a more neutral stance. And that's very much what we're on. That has not changed at all since September. You know, we're just going to have to see where the data lead us. We have, you know, a whole 6 weeks of data to look at to make that decision in December. Obviously, I'm not ruling it out or in, but you know, I would say, you know, I would say that, you know, again, we didn't update the SEP, so I'm not going to characterize, you know, where the committee would be.
Thanks, Howard Schneider with Reuters. I wondered if you could please elaborate and explain.
Nice little bounce.
Changes in the language of the statement here. In the first paragraph, where you say inflation has made progress, dropping the word further progress. And in the second paragraph, dropping the sentence that the committee had gained greater confidence that inflation was progressing towards its 2% goal. Is there any policy substance behind either of those changes in language? Is it meant to open the door to a December pause? Is it meant to communicate anything about the stickiness of core inflation in the last 3 months?
Yen's on the move.
Really,
okay.
no. So let me tell you what we were thinking. So the test of gaining further confidence was
Nice gap up on yen.
Test for the first rate.
Turning back up.
And so
with the FOMC
in September
and S&P doing the same thing.
Leave it in, then it's new forward guidance. It's brand new forward guidance. What do you mean by it? Are you requiring yet further? We have to say yes or no at every meeting whether we've made further progress. The point is we have gained confidence that we're on a sustainable path down to 2%. So that I would tell you is what that's really all about. It's not meant to send a signal. Neither of those is meant to send a further signal. And you know, saying further progress, it becomes a test. We don't want to be, we don't think it's a good time to be doing a lot of forward guidance. There's a fair amount of uncertainty in that, in what I've said. The path that we're on, we do know where the destination is, but we don't know the right pace, and we don't know exactly where the destination is. So the point is to find the right pace and the right destination as we go. And I think there's a fair amount of uncertainty about that. And you don't want to tie yourself up with guidance. You want to be able to make sensible decisions as you go.
Steve Leachman, CNBC. Mr. Chairman, you talked about higher rates, perhaps from an expectation of higher growth. You didn't talk about it in terms of expectations of higher deficits. Is that something you think might be behind the recent rise in interest rates? And are rising deficits a concern to you?
So we don't comment on fiscal policy. And again, I don't have a lot more to say on what's driving bond yields. In terms of policy changes, though, let me give you a sense of how this works in the ordinary case. Let's say Congress is considering a rewrite of the tax laws. Doesn't matter what's in the content. So we would follow that. At a certain point, we think we see the outline. So we'd start to model it. And then we'd wait. And then at a certain point, the staff would brief the FOMC and say, these are the likely effects. There's lots and lots of literature on the effects of tax policy changes on various parts of the economy. So we try to get smart on that. And then the law actually passes. And, you'd start to you probably run an alternative simulation before that happens, just to keep people trying to understand it. Then when it actually passes, it goes into the model along with a million other things. So,
Okay.
we have a
So
very
Junk
large
Bonds obviously having a good day.
at any given time.
JNK.
And, a law
Junk
change
Bonds,
of some
good
kind
day
would go in
today
there,
on Junk
probably would go
Bonds.
in, but it would, it's a process
Day
that takes
3,
some time. Clearly, the legislative
S&P
process
also
takes a lot of time. And of course, the real
nice
question
follow
is not
through.
the effect of that law.
Gapping up.
It's all of the policy changes.
6,000 is resistance. Don't think we get there today.
Overall effect on the economy at any given time. So I think that's a process that takes a lot of time and that we go through all the time with every administration, constantly. And this will be no different. But right now there's nothing to model right now. It's such an early stage. We don't know what the policies are, and once we know what they are, we won't have a sense of when they'll be implemented or all those sorts of things. So I think I would just say we're not doing that now, and all that will take time, and it will be very much regular order when we do that.
If I could just follow up on Nick's question. Are the current rates something you feel like you need to lean against, in that they go against the direction of policy by adding restriction to the economy, or do you just take them as a given and perhaps a signal that you should do less?
S&P still running higher.
The first question is, how long will they be sustained? If you remember the 5% 10-year, people were drawing massively important conclusions, only to find 3 weeks later that the 10-year was 50 basis points lower. So it's material changes in financial conditions that last, that are persistent, that really matter, and we don't know that about these. What we've seen so far, we're watching it, we're reading, we're doing the decompositions and reading others, but right now.
Okay, watching Home Depot, other stocks like Boeing, Nvidia trying to break higher.
Gaber at Associated Press. You mentioned the positive economic data that we've seen since the September meeting, including the revisions to things like savings, higher GDP growth.
Okay, there goes the S&P.
That's renewed some of the questions about why do many cuts at all in this with this backdrop.
So you're right. As I mentioned, and as you mentioned, the latest economic data have been strong, and that's of course a great thing and highly welcome. But of course, our mandate is maximum employment and price stability, and we think that
Apple's trying to take the high of the day. So is Microsoft.
We understand it's not possible to say precisely how restrictive, but we feel that it is still restrictive. And if you look at our goal variables, the labor market has cooled a great deal from its overheated state of 2 years ago and is now essentially in balance. It is continuing to cool, albeit at a modest rate. And we don't need further cooling, we don't think, to achieve our inflation mandate. So that's the labor market. Inflation has moved down a great deal from its highs of 2 years ago, and we judged as I mentioned, that it's on a sustainable path back to 2%. So the job's not done on inflation. But if you look at those two things, we judged in September that
Okay, S&P driving higher.
our policy stance to reflect this progress, and today's decision is really another step in that process. Overall, as I mentioned, we believe that with an appropriate recalibration of our policy stance, we can maintain strength in the labor market, even as our policy stance enables further progress toward our inflation goal.
Great. And just to follow up, what might cause you to pause rate cuts in December? What kind of economic data would lead you to that path? Thank you.
So we haven't, made any decision like that at all. But we're in the process, as I mentioned.
Supermicro still pushing up against the high.
Return to more neutral level. And as a general matter, as we move ahead, we are prepared to adjust our assessments of the appropriate pace and destination as the outlook evolves.
Supermicro,
So, for example,
back up to the high.
if we were to see the labor market deteriorating, we'd be prepared to move more quickly. Alternatively, as we approach levels that are plausibly neutral or close to neutral, it may turn out to be appropriate to slow the pace at which we're dialing back restriction. Again, haven't made any decisions about that, but that's certainly a possibility. If you can think of it as similar to what we do with asset purchase, with asset runoff, with QT. So we reach a point where we slow the pace, much like an airplane reaching the airport slows down. And so we're thinking about it that way, but it's something that we're just beginning to think about.
Thanks, Chair Powell. So with the noise in the jobs reports that we've seen, and you look at the Fed's favorite inflation, PCE inflation, overall it's 2.1%, very close to the Fed's target, but core inflation is 2.7%, and it's been that way since July. So why doesn't this data give fuel to a rate pause for this meeting?
Well, so I think if you look at the 3 and 6 month, you're quoting the 12 month. So we look at all of them, right? But if you look at the 3 and 6 month core PCE, you'll see they're around 2.3%. So we look at all of them, and we also look at 12 as well. But what it's telling us is that we really have made significant progress, and we expect there to be bumps. For example, the last 3 months of last year.
Google continues looking pretty good. Meta testing the high of the day. So is Supermicro. Supermicro trying to go.
On the other hand, the January reading.
Still got some really strong price action. Intuit, the top of the NASDAQ 100. Intuit, Meta, Synopsys, ASML, Ansys, Netflix, Costco, Slack, MongoDB, Take-Two, CrowdStrike, Regeneron, Team, Constellation Energy, Tesla, Vertex, Workday, just all the stocks that we trade from time to time are in the top 10, top 15 on the NASDAQ 100.
Which together make up 80% of the core PCE index, are back to the levels they were at the last time we had sustained 2% inflation, which happens to be. So the back of what's not is housing services. So let's talk about housing services. Housing services is higher. What's going on there is, market rents, newly signed leases are experiencing very low inflation. And what's happening is older, leases that are turning over are taking several years to catch up to where market leases are, market rent leases are. So that's just a catch-up problem. It's not really reflecting current inflationary pressures. It's reflecting past inflationary pressures. So that's one.
Okay, Oklo is about to break out. Oklo gonna go.
Where's it coming from? It's not a very tight economy. What is the story about?
Oklo's gonna go. Okay, Oklo.
Insurance and several other areas. So you're seeing, we're not declaring victory, obviously, but we feel like the story is very consistent with inflation continuing to come down on a bumpy path over the next couple of years and settling around 2%. That story is intact, and it won't be 1 or 2 really good data months or bad data months aren't going to really change the pattern at this point now that we're this far in the process.
So you're quickly trying to get to that neutral rate that you see, or do you foresee that you have some time to get there?
Nothing in the economic data suggests that the committee has any need.
Bitcoin trying to go again. Bitcoin trying to go the high today.
Activity are seeing ongoing strength in the labor market.
Oh, that looks
Watching that
good.
carefully, but we do see maintaining strength there. And so we think that the right way to find neutral, if you will, is carefully, patiently. Again, that's not meant to have a specific meaning, other than to the extent the economy remains strong, we have the ability
Super micro, new
to take
high.
advantage of that as we try to navigate that middle path between
Super micro, new high of the day. There goes super micro. Okay, I'll get the shorts to cover a little bit more.
2 questions today. Did you learn anything?
AMD
about
looking
what
good.
Americans
AMD.
think about the economy?
Okay, nice on AMD.
First question. Second question. I want to talk about some labor market indicators, and I do so with great respect for your attentiveness to the maximum employment side of the mandate, Chair Powell. So the unemployment rate has been at 4% or higher for 6 months. One of the broadest measures of unemployment is up about 0.5 point from a year ago. Compensation gains are sliding back. The quits rate, a signal of labor market dynamism, has been heading
What was
down to
that?
that bad neighborhood of the 20 teens.
What was that?
So
Oklo.
you quote a
Okay,
worker
Oklo.
at Jackson Hole saying, any
Nice
further
pop on
cooling
Oklo.
is welcome. It is cooling generally a little bit further. So at what point do we reach what you would describe as a shortfall from maximum employment? Thank you.
Sure. So on your first question, I'm not going to talk about anything that relates directly or indirectly to the election. On the second one, this is the great question, and it's the one we think about all the time. So I'll just say a couple things. There's nothing really surprising here. What we know is that the unemployment rate is low. We also know that it's come down significantly, moved up significantly from a year or so.
Nano nuclear making new highs as well. Remember, SMR has earnings tonight.
That has meant bad things. So far, it doesn't appear to be. It appears that I wouldn't say that the labor market is fully stabilized, because I do think it's continuing to very gradually cool.
Nano nuclear looking good.
Our policy, of course, is designed to keep it in that good place, to maintain the strength in the labor market,
Google.
while also enabling further progress on inflation. You mentioned a bunch of
Okay, S&P, can you get going here? One more time to the highs.
the openings to unemployment rate is back to a normal level. I would characterize it more broadly as normalizing. You mentioned wages. Wages are still running just a bit above where they would need to be consistent with 2% inflation, unless productivity is going to remain at this high level. If we see productivity, more sustainably at these high
Nano
levels,
nuclear.
then that would sustain.
Nano nuclear, nice little move there. Let's see what Home Depot. Home Depot continues to tickle the highs. We just came back a little bit. Home Depot. Boeing, looking for that to follow through. That Boeing, looking for it to follow through. All right, so it hesitated a little bit here as Powell speaks. It's a 1 minute chart. Apple, strong. Okay, Oklo continues higher. Oklo.
We're 5 years into a nice
Okay, Tesla.
set of productivity readings, which are sustained.
Okay, watching Tesla.
But overall, it's a good labor market. We could talk about 20 different data series. We'll be looking at all of them, of course. We don't want the labor market.
I know a lot of people probably feel like they're going to miss out on Tesla. Trust me, there's been plenty of times where it's run up, and if you just waited, if you didn't take a position on a dip this morning or yesterday or coming into earnings, you can afford a little dip. Wait for the dip.
If he asked you to leave, would you go?
No.
Takes a little patience, but it works very well. Google looks good. Breaking higher in Google. Wow, what a nice move on Google. Looking good. What is Qualcomm doing? Qualcomm still sitting here.
Are telling you and how you are dependent on the data, but in terms of forward-looking assessments of the economy, what are you hearing from CEOs or other officials around the country? What did you hear today from the regional bank presidents about what companies and consumers think about where the economy is going from here rather than looking backwards. And does that match up?
Okay, Microsoft, having a good day. Microsoft, thank you. Microsoft.
Appropriate policy.
3 white soldiers turning up. Looks like Microsoft is destined for 435, 440. Just want to pay attention to. Okay, 425, 430 is the next level on Microsoft. 430 is the next call wall. Microsoft. 430, next call wall.
Pretty constructive, feeling that the labor market
Above
is
425
to the point
call
where
wall.
it's no longer that much of a discussion topic.
Okay.
In the world, whereas 2 years ago, it was
Microsoft, about to rip here. Microsoft's about to go. Okay, Microsoft's about to go.
Demand is obviously pretty strong.
Okay, so Microsoft, case
2.8% growth
for new traders. Okay, so you wait for the dip. Okay, so if you miss the morning run, you wait for BNC pivots, usually between 11 o'clock and 2 o'clock. We got a nice dip. We had a little fake out right there. Some people probably maybe got shaken. But if you look at this volume by price, not volume by price, this buy order block right here that was earlier this morning, around 1050. We ran up, came right back down to that level. So they were looking for liquidity to buy shares, came back down to that level. And again, each time it got bought and the histogram turned up. Now we're making new highs on Microsoft. Not yet. Getting there though. 425 is the call wall. 430 is the one above that.
I think it's things like clearly geopolitical risks around the world are elevated, and just as clearly they've had relatively little effect on the U.S. economy. Now that can change through the price of oil or otherwise, but people talk about those as something that's on the horizon all the time. But ultimately, if you look at the U.S. economy, its performance has been very good, and that's what we hear from business people, and expectation that will continue. If anything, people feel next year. I've heard this from several people that next year could even be stronger than this year.
Hi, it's Andrew Ackerman with the Washington Post. I just wanted to follow up on the discussion earlier on fiscal policy. Your predecessors, Greenspan and Volcker, spoke up loudly when they thought large budget deficits endangered economic or financial stability. Will you do that too? And right now we're in a period of full employment. We have large budget deficits and debt at historic highs that are rising. Is that something you'd speak out against?
So, I have said many times, no more, no less than what the predecessors you mentioned have said. And what that is that the U.S. federal government's fiscal policy is on an unsustainable path. The level of our debt relative to the economy is not unsustainable. The path is unsustainable. And we see that in, you've got a very large deficit you're at full employment, and that's expected.
Akla looks good.
So it's important that we, that to be dealt with. It is ultimately a threat to the economy. Now, I can say that I don't have oversight. We don't have oversight over fiscal policy. I've said it on many occasions, just said it again.
Okay, thank you. I guess the other question is to follow up on Victoria's question. Do you believe that the president has the power to fire or demote you, and has the Fed determined the legality?
These people just want to get salacious content.
Governors with leadership.
I hate the media.
Not permitted under the law.
Not what?
Not permitted under the law.
Courtney Brown.
Very good answer there, Mr. Powell.
In response to Howard's question,
I kind of like Jay Powell after all these years.
to give forward guidance because of the
Navigated pretty good. We're at all-time highs. What's to not like about Powell? I think it's his minions that talk too much. Once we get
tariffs, for instance.
No, I was not.
once we get the decision, why do they have to repeat themselves? 15 different people saying the same shit over and over and over. There goes Oklo continues higher. Okay, I'm going to take some profits off in the strength on Oklo. I am bullish.
I mentioned this in my statement that the risks are two-sided. I guess I should start by saying that we think that the economy and we think our policy are both in a very good place, a very good place. And, but as you look forward, you say, what are the risks? And one risk is that we would move too quickly and find ourselves having moved too quickly and inflation comes back and we lost our chance to get inflation back to 2%. So we have to avoid that risk. And to avoid that risk, that means you want to move carefully. The other risk is that we move too slowly and that we allow the labor market to weaken too much and do unnecessary damage to the labor market and to people's working lives. That says don't get behind the curve. So
Okay, I'm selling my Oklo
these two
into
things
this.
are the two risks that we have to
Next
manage.
time
So
I'll
we're
buy.
in the middle there. We try to be in the middle.
Next
and
time.
manage both of those. Again, the idea is to support the strength we have in the labor market and in the
Next time I'll buy more
but
time.
also
Okay, Oklo is just going vertical.
less restrictive but still restrictive
Okay,
policy,
that looks good.
enable further
Good
progress
job.
toward our 2% inflation goal. This is the thing we're meeting by meeting, we're going to be making our assessment of.
Okay, let me look at Mobileye. I might take a little profits into strength and then buy the next dip on Mobileye.
Timing of these things is not as important as
Okay, it's outside the upper Bollinger Bands for 1, 2, 3, 4, 5 days. So a pullback makes absolute sense. Next pullback, I'll buy again.
We're pretty sure it's below where we are now, but as we move further, there will be more uncertainty about where that is, and we're going to move carefully as this goes on, so that we can increase the chances that we will get it right.
Thank you, Chair Powell. Simon Rabinovich with The Economist.
Okay,
I know
Mobileye.
you don't want to share your decomposition of bond yields, but if you look at the break-evens, it is clear that longer-term inflation expectations do seem to have risen up at about 2.5%, for example, on the 5-year. That's up half a point from when you cut in September. Do you have any concern at all that longer-term inflation expectations are de-anchoring, or put another way, are anchoring at a slightly higher level? Thanks.
So we would be concerned if we thought we saw longer term inflation expectations anchoring at a higher level. That's not what we're seeing. We're still seeing between surveys and market readings broadly consistent with, I looked at the 5-year earlier today and it's probably moved, but it's kind of right where it's been. And also it's pretty close to consistent with 2% PCE inflation. So that's one that's been a traditional one.
Okay, Mobileye, taking profits there too. Okay. I fully intend to buy the next dip.
Consistent with 2% inflation, but
Okay, back to the 9 EMA. Taking profits. Mobileye looks really good. It's just getting started. You could swing this. I could buy some leaps for next year as this continues, but look where RSI is right now. MACD stochastic volume looks good. So I'm looking for the next dip back to, say, the 9 EMA or 5 EMA around 16. It's only $1. I mean, I could sit around and wait, but my plan coming into today was to take profits into strength and reassess the markets shortly thereafter. So I'm sticking with my plan coming into the day. I'm not changing it just because I feel different or the markets are enticing me to stay put. Does look good though. Markets continue to move higher. Meta. See Meta. I've been in Meta for a while. The 2 times long Meta. Okay, I've been in this for about 3 weeks over here. That big red candle right in there. That bounce is where we bought. Yesterday we were getting back to break even, my son and I. Antoine, I don't know if you're listening. 3 o'clock. You're probably in your
but it'll be some time before people
study hour, study hall. Okay. Apple about to make a new high, so that looks really good.
What they're feeling, those feelings are true, they're accurate.
Probably follows through tomorrow. I'm going to hold on to Facebook share, these FBL shares. Okay, I'm going to hold on to some of these. Maybe I'll sell a couple of hundred tomorrow on the open. We'll see.
I'm not going to get
That looks good though.
Political things here today, but thank you.
Hi, Chair Powell, Nancy Marshall Genser with Marketplace. What is your plan if we start to see?
Okay, let's look at Intel.
So
That's a beautiful move on Intel. It's 2 days outside the upper bands. This one, I imagine people are anticipating that mergers and acquisitions would come more favorable under Trump. Fire, what's her name? Khan. I forget her first name. But fire her because she's against any kind of mergers. You know, Intel needs to be bought up with by somebody. It's just plain and simple to me. What's Taiwan Semi doing? TSM. TSM. Ooh, TSM looks good. Intel up. TSM up. Nvidia up.
So, knock on wood, we've gotten this far without seeing a real weakening in the labor market. And we believe we can complete the inflation task while also keeping the labor market strong. And that, of course, is exactly what we're trying to do.
Can you rule out an interest rate hike next year?
No, I wouldn't rule anything out or in that far away, but that's certainly not our plan. I mean, our baseline expectation is that we'll continue to.
Okay, last two trades on Intel moved against me. Okay, one was way over here back in August, September. We had that move up. It looked like we're going to follow through and break out, and then boom, the next day we're right back down. So I took a loss on that one. The last time was the move above the 50-day. It faded right back down. So got out of that. This time, I don't know. Feels different. The profit will make up for the loss on the last two, so that's good. Let me see. I got next year's calls though.
Hi, Chair Powell.
I got June 24 calls on 2430s.
Americans being quite unhappy about the cumulative price level rises over the past few years, even though now inflation is back on a path to 2%. Would it be appropriate for the Fed to undershoot for a while on its inflation goal under the average inflation targeting regime?
I'm going to hold on to Intel.
Have a chance to catch up.
I'm going to hold on to Intel.
That's not the way our framework works. We're aiming for inflation at 2%. We did not think it would be appropriate to deliberately undershoot. And you know, part of the problem there is that low inflation can be a problem too, in a way. But that's not part of our framework, and it's not something we're going to be looking at.
Okay, there we go. Futures starting to move higher.
Well, that was Fed Chair Powell following the decision to cut interest rates by 25 basis points. The chair saying the economy continues to expand at a solid pace.
Mobileye, out of Mobileye for now.
Have eased. He was non-committal on another rate cut in December.
Meta looking good.
Averages are doing pretty much hanging on to those gains. It does follow that massive day. Yesterday, Nasdaq's been the outlier all day, up 1.5%.
Intel looks so good, right? Intel finally into the gap, into the Kirby. Okay, there's very little resistance here because there was no one buying. We gapped down, so there's no one to sell against you.
Hey, Judge, good to be here again. It's good to have you. So what is your reaction to what the Fed chair had to say today? He used a couple of R words.
Jeffrey Gunlock. I'll listen to what he has to say. Jeffrey's good. Might not agree with him all the time, but Jeffrey's a very smart fellow. I definitely wouldn't feel equal to anything he has to say.
And that's a repeat of the last meeting's sort of word of the meeting. And I think Powell feels very much that he's in a good place now, because since the July 31st meeting, we have the 2-year Treasury rate is up by almost 60 basis points, and the Fed funds rate is now down by 75 basis points. So he's gotten much more in sync.
Meta just issuing a buy signal.
Fed funds relative to 2 years of 135 basis points of convergence in just basically 2 meetings. So I really think that we probably have one more rate cut coming in December, because that would true up the Fed funds rate with exactly where the 2-year Treasury rate is right now. So it is interesting.
S&P is pushing a bit higher. S&P.
Of the stock market since the last Fed
meeting.
Okay.
S&P is pushing higher.
Rising, so you've had a tremendous outperformance.
There we go.
Of stocks versus
looks good. S&P on the move
since the last Fed meeting, and I attribute that basically to the election result. So we had an incredibly consequential election result, very different than a lot of people probably were forecasting as a base case a few months back. And we've had one of the least consequential Fed meetings today
with.
I would be
big
taking profits off in the strength. This this feels way overdone.
The goals are normalizing, the labor market's normalizing, the quits rate and the job openings rates are kind of where they were pre-pandemic. And so I think the Fed is feeling very much that they are plodding along towards their goals. And he said so in fairly direct language today. So yeah, the thing that's sort of surprising me a little bit is that people are so willing to dismiss the softening jobs market. I mean, the 12,000 jobs, I know people want to attribute that to one-off hurricanes and strikes and stuff like that. But I keep looking at the household survey, and the household survey over the last 11 months has been a loss of jobs of over 300,000 jobs cumulatively over the last 11 months.
Please take some profits off into strength. Yeah, I'm going to do the same thing. Same here, Frano.
At economic turning points, it's still not terrible, the household survey. It's very volatile, so we have to watch out for that. But it is not showing tremendous signs of strength. And
Okay, nice move.
that the
Good
bond
call.
market seems to
Good
be
call.
having, from my perspective, and it's being talked about much more in the open. It came up several times at the press conference today, is that the supply of treasury bonds is getting to be rather astonishing. We have a $2 trillion deficit. It's about 6% of GDP.
All right, everything is popping now. Meta's going. Okay, there goes Meta.
And the interest expense on the debt, which I always talk about, 3 years ago was
My son's going to be
$300
so
billion
excited.
per year. It's now
FBL.
$1.3 trillion per year. And we have a great volume of bonds that are rolling off with very low interest rates from 5 years ago, or even 3 years ago. That are being refinanced at substantially higher rate levels. And this is going to continue to be a supply problem for the bond
He's going to
market.
be,
And
he's,
for
this
reason,
kid is, I'm
we are
telling you
not
what,
positive on long-term treasury bonds. In spite of the
obviously
fact
he
the
he
economy
has a
is
good
so
coach,
gradually
right?
slowing
Talk to him
down,
about the
just
markets,
supply
things that I
of
didn't know,
is very troubling.
things that I didn't
So
know,
we
even
recommend
4
investors
years ago.
today
You know,
in
I just started learning about gamma in 2019. Mikey and I were talking about it. There was a fellow who was also selling a course in VWAP, you know, his, I forget his name, but right around the same time we got involved in Brent Kuchabar from Spot Gamma was on a show on YouTube, and he was talking about gamma, and all he had to do was say, gamma tells you basically how institutions are positioning. And that got our interest. And ever since then, you know, understanding gamma. I mean, for a 14-year-old to understand what I know about gamma, you know, what happens when prices get above the upper call wall, like Meta is doing right now, what the dealer has to do. So you know why the buying is happening. You're not guessing, right? You know that 6,000 is the upper bounds for now for S&P, but it could be a magnet as well. Using ABCD patterns. You know, most people don't understand that you don't need to chase in the morning. If you have a stock that's super bullish, look for an ABCD pattern intraday, like Microsoft, right? Microsoft gave you an ABCD pattern intraday. And it was a good opportunity if you decided to jump into it. Okay, so I look at yesterday, or excuse me, I look at the morning. I get the 15-minute by accident. Look at the morning on Microsoft. Okay. The run up. Okay, from here, the run up. Okay, if you miss this run up, you wait. You wait for B and C. It's pretty simple. You buy, you got to stop underneath. Let prices go. Tesla. We bought Tesla last week. Okay. Fortunate enough that this gapped up and just continues to move higher on lots of factors. It's above the 50-day. Nice bounce. You know, we waited for the fade. Once we got that first reversal candle, you could start putting, you could start buying and put a stop underneath the 50-day. He understands that. He understands, more importantly, he understands TTM and what TTM is telling you. I mean, this is very intuitive. Should make ultimate sense. If it's red and yellow, get ready for a long setup. If it's cyan, that's fine, as long as it's not been a prolonged move higher, in which case you look for the dip when it turns blue.
the spike in interest rates that are out there and what's happening.
And so
with
many
the
other
system.
things.
And
He's
he
so
does not
fortunate.
get involved in
I mean, I
markets
wish I
per
knew
se. He seems to say, hey,
at 14 what he knows now.
but I'll just play for you the one thing that says, hey, where are we going with this? And he
Tesla moving higher. Okay, good.
Here's what he said.
Tesla's
We
moving
want to see
higher.
how things come in December. I mean, it's just, I would put it this way: we're on a path to a more neutral stance.
You know, I was talking to him about
That has not changed.
don't be afraid to take profits, right? Obviously, you want to look at histogram. You know, do we have more upside potential, like with Facebook, with Meta, right? Obviously, we have more upside potential. Look at the daily on the right, Meta. Is this the time to sell? No, this is probably going to keep going. Look at the momentum here. Bollinger Bands are starting to open up, grinding along the highs. ABCD pattern. Apple. Apple. Look at the histogram. You think Apple's going to stop? I don't think Apple's going to stop. This is a 4-hour chart, by the way. Let's look at the daily. Okay, the daily chart. Okay, TTM is just about ready to change directions. Look for this to follow through. Buy order blocks. Buy order blocks all day long.
Maybe coming more in line is the point you make with the Fed.
It's a beautiful thing. That said, we want to take some profits off in the strength.
A short time ago by Chair Powell, it's when he was asked by a reporter the political backdrop, certainly some concern of, you know, what the Trump presidency would mean for the rest of the chair's term, which goes until mid-26. We've got 18 months or so. Let's listen.
Probably
to
gets going tomorrow.
Answered this, and we can react quickly on the other side.
The president-elect's advisors have suggested that you should resign. If he asked you to leave, would you go?
No.
Can you follow up on, do you think that legally that you're not required to leave?
No.
I like Powell.
What do you make of the way he answered that?
I think that he feels that the law does not give the president the authority to dismiss the Fed chair.
That's true. You can love Trump or not. I mean, the fact is, that's the law. You can't just like fire him.
He does not have that authority without cause and whatever cause means.
I think, look, we're at all-time highs. You know, we can debate about Jay Powell, but we're at all-time highs.
At the pleasure of Congress, nominated by the president. If the Congress wants to change the Federal Reserve Act to give the president the authority to dismiss the Fed chair, look, the tail of the tape, Scott. We did something. You know, remember he said the Fed has no guts, no vision back in 2019 when he wanted the Fed.
Okay, thank you, Jennifer.
And then he said he might.
All right, so Apple, you know, Microsoft.
He also said that he would.
Okay, look at TTM. Okay, on these.
This year, the president-elect said he might get rid of him. Then he said he's going to keep him. For my taste,
Microsoft back above the 50.
Issue
Intel.
this has got to be a lot more
Intel. All right, I'm going to take some profits in Intel. I'm not going to let this pass. Intel, where are you, Intel? All right.
Ignore it. I don't know that it's going to have any big effect on policy. Fed chair's just going to do his thing.
Okay, Intel, I'm out for now. Intel, I'm out. Looking for a little dip tomorrow. Intel, I'm out.
I did think it was an interesting exchange there. Steve, thank you. Senior economic reporter Steve Leisman. Back with Jeffrey Gundlach. I mean, Jeffrey, we talked about the backup in yields. You certainly did. I mean, what role do you think that might play?
All right, Intel, I'm out.
And where policy does go from here. Powell said, quote, we're watching that. We'll see where.
Okay, my plan was to sell profits. I'm sticking to the plan. Okay. All of these stocks are showing really nice profits. I can't let these go. Can't let these profits go. Okay, Meta, I'll stick with. Nanonuclear, I'll sell some more of that. Nanonuclear. Okay. I'll keep the December 25 calls that I have. Nanonuclear. Okay, look for follow-throughs. SMR has earnings tonight. SMR. Okay, so SMR has earnings tonight. Be aware of it. Do I want to sell iron condors on this? let's see, SMR. See, the thing is, I don't know enough about this company to get a good educated guess on, will the expected move be more than or less than? SMR, okay, they're looking at 12% move, 311% IV. Yeah, I might actually sell some iron condors. Okay.
A year ago, and people just don't like that. People don't want this kind of strange manipulation. And I think that
Maybe I'll do next week too.
authenticity,
I'll do next week.
is something that attracts people.
See,
Unfortunately,
20 and 25, 20 and 25. So below 20 and 25.
wants to put in, and he's always been a debt guy. So I'm really worried about that. I'm glad that Elon is somewhat associated with this administration. I mean, they're talking about looking for some spending cuts. That'll be really interesting. I mean, Elon, if you're listening, give me a call. I can help you try to find $1 trillion or $2 trillion out of spending cuts, because we certainly need that.
Absolutely.
I think that we have.
I don't think anybody believes that we don't need spending cuts.
From the bond market, and the stock market has done so well.
Just entitlements alone, sending it to people who are here illegally. I mean, that's just crazy.
Starting to be kind of an interesting valuation issue. I think Goldman Sachs.
Okay, I don't mean to get on a political rant, but you know, SMR.
Forward returns and how bonds are very, very competitive given the yields where they are today, where you can get 7% yields out of not terribly risky, say double B type of a corporate portfolio. And I think it's quite likely that bonds will be much more competitive going forward than they were. But in particular, what's interesting is that the
Okay, what time is it? We got 33 minutes to go. 33 minutes to go.
Incremental yield versus treasuries relative to history. They're almost where they were really at the lowest for like junk bonds. It's only about 270 basis points higher than treasuries. Investment grade corporates are inside of 80 basis points over treasuries. But I don't think that that means you should be avoiding corporate bonds. I never liked the really low rated stuff, the triple C's and all that. But in single B, double B, weak triple Bs, I really think that there's a reason why spreads are so tight. And it's because I think the corporate bond market is less risky on a relative basis than the treasury market. It almost reminds me of where it was back at the beginning of my career when
AMD
came in, people were worried about the deficit, and you had the higher quality bonds like IBM, for example, I remember at the time, actually yielded less than treasuries because people thought IBM was safer as a borrower than the treasury market. And I think that's one of the things that's propelling this corporate bond performance that's been very, very strong. The reward isn't very high, but the risk isn't very high. These corporate treasurers are smart. And when rates were so low, I mean, when 3 years ago, the high yield bond market, believe it or not, yielded 3.5%. And so these treasurers locked in these very low rates, and there isn't a maturity wall coming for the next few years. And so it'll be interesting to see how the spread markets change. And we've already seen pretty much spreads tightening across the board on non-treasuries. It's the treasury market.
Okay, AMD, I'm out of the put side of the iron condor.
And I have a feeling that could continue.
So you told me prior, I think you alluded to it here, when talking about the tax cuts, you told me you were not in favor of re-upping the Trump tax cuts. So he obviously thinks he has a mandate. He may in fact have a wide enough margin in the House by the time this is all said and done to do that. Do you stand by that view that they shouldn't do that? And I also want to know what you think about that Larry Fink op-ed in the Journal the other day regarding
SMR.
the deficit, which you are obviously concerned about, that essentially you can grow your way out of this deficit problem. You just have to have a higher nominal GDP growth, in fact, to do it.
Yeah, I actually agree with that point, except there's a caveat, and that is we have to stop this deficit spending.
Absolutely.
Jay Powell said this in the press conference, to his credit. He said, we can't keep spending $2 trillion more than we're taking in. The math just doesn't work. It's the Ben Franklin.
I don't even know why that's the discussion.
Natural wonders of the world.
Of course, we can't afford it.
But when you're compounding your debts, you're running into a real, a parabolic compound interest curve that's working against you. So we really need to have less of a deficit. And I don't think that's going to happen in the quarters ahead based upon the strength of Trump in this pretty resounding victory. I think Harris actually underperformed Biden in just about every county in America. It's kind of hard to believe it could be that widespread. But the lack of authenticity from Harris was really kind of fatal. And of course, she had an albatross around her neck with an approval rating of her boss that was just mired at 40 or lower for the last few years. So she really had an uphill battle that she was forced to climb. But I think that we're not going to get better news on the deficit in the first couple of quarters.
Okay, so I'm done with
First
profits
year
for now.
of the Trump presidency. I really do not
Okay.
want tax cuts.
See if we can't get some follow through tomorrow. I doubt it. I don't know. I just feel like we've come so far, so fast that we need to work off some of this steam. Aklo's still going.
We're extending the timeline on this deficit problem. I'm actually writing, it'll be out in the public in about a week or two. I'm writing my own white paper about the debt crisis is starting to come much more in focus. And I've run through some basic arithmetic on that. And it's really rather sobering. So I do not like long-term treasury bonds. The last thing I did relative to long-term treasury bonds was to sell them.
You had been calling for a recession at some point. Do you still think one's possible, likely, or do you think that the election of Donald Trump changes the calculus because he's going to theoretically have a more pro-growth
SMR,
agenda, if you will?
SMR.
You certainly would have. You have a lot of pent-up demand as it relates to M&A.
What if I did a straddle?
Yeah, I think
SMR.
that's right. I think Trump.
Yeah, what if I
clear
did
about the
that?
action
What
of
if I
the
did a
stock market,
straddle?
Not just yesterday and today, but really over the past couple
Buy,
of months as the support for Trump was on the rise,
straddle.
kind of steadily. For
2250 call, 2250 put.
We see tremendous outperformance of stocks versus bonds. It's getting
Can it
rather
get
stretched, but I do think that it's
311%?
right
You're paying
to
up
see
for
the Trump
shoot. I'm
victory
paying up
as
for
being-
the
as reducing the odds for near-term recession. Fairly
shoot. You know what? I wouldn't mind getting
And so
assigned
I-
shares in
I-
either
I-
direction.
I
That's
really
not a
like
bad
the ways
idea
that we
either.
accomplished, because I
Okay,
think
we
that
got
the
28 minutes to go,
problem
28
of
minutes to
the
go. I'm
bond
your host, Cousin Vinny, coming to you from the
will happen. Certainly
closingprint.com.
the odds of recession drop.
I'm looking at a potential iron condor, thinking to myself, okay, what if I get assigned? I wouldn't mind at a higher level.
Does it change the trajectory of
So
the
maybe
dollar, which
a
is
little
obviously
closer
one of
to the
those
money.
trades that,
24. Let's see.
had been
So
a so-called Trump trade. We saw the dollar index rising, and
25.
it seems to be on a higher trajectory from here. Is that what
Buy.
you see?
The dollar seems to be extremely
30.
correlated to interest rates. If you take a look at the chart of the DXY index and overlay it on the chart of, say, the 10-year treasury, it's the
Sell.
same chart. So what happens is our interest rates, have been going up, and that's supportive of the dollar. If I'm right,
Buy.
and there's still some potential for long-term rates to be suffering under deficit fears, then the dollar would probably still go
Yeah, it's
higher.
not worth it.
And so for the time
It's not
being,
worth it.
we've been neutral on the dollar for much of this year. It's been trading in
What
a
if I
range
did?
between
What if I
about
did the
108
eighth
on
instead?
the DXY index and 100, and lo
30.
and behold, right at the dead
Nope.
center of that range, very nearly the dead center. And
What
that's
if
the
I
same on the 10-year
did
treasury yield. It got
end
down
of
to
the month?
360. It's been up at around
29.
5%
Ooh, that
or
looks
so,
good.
and we're right in the middle of that. So
Okay,
the
what's the
dollar
end of the month?
is
End of the month
extremely
is
influenced by movements in
17
treasury rates.
or
And so
26.
I believe that is
So if I sell the 25, call, buy the 30,
extremely strong correlation.
sell the 18, buy. Yeah, I'm going to go ahead and do that. I'm going to do that. End of the month.
It seems as though you think that Chair Powell.
All right, I just did an iron condor or an SMR. Now, if this thing bolts to the sky,
A couple of years ago,
I don't mind being assigned. Okay, so just keep that in mind.
At this point, declare victory. He obviously said today explicitly that he wasn't.
Okay.
And some like Stan Druckenmiller this week suggested that they might try and do that a little too early. But does he have a right at this point to declare victory, given the trajectory of inflation, where the economy is, again, using the word remarkable to describe it? Should he?
I think it's a little early on that, but I think
25
we'll be
call.
able to do that come, say, March or April of next year, unless we get some sort of a shock to commodity prices, particularly the price of oil.
25, 30,
Because we're going to
18.
get on the headline CPI, we're quite confident, given the current structure of the commodity complex and where rents are going and the like, we think that the CPI is going to have a one handle on the 12-month headline number come March or April of next year. And if that happens, well, then I think you can.
End of the month still has 121%.
At that point in time. I think it's too early now. He's too prudent. He's too careful of the Fed chairman to make that assumption. You know, he says, we don't predict, we don't assume. He said those words in the press conference. I applaud him for that. But the trajectory he's on, he's getting closer. You know, when we started these conversations, the Fed was so far behind the curve. They were so loose compared
Okay.
to the
121%.
inflation. And then he was too tight.
IV.
And now he has gotten himself, begrudgingly perhaps, but he's got himself almost in line with, I've said this almost every conversation, Scott, the Fed follows the 2-year. And I know people push back against me, but I can prove it mathematically, and it absolutely follows.
I like Gunlock. You know, I don't agree with him all the time, but I definitely I like the guy. He's just talks the math, you know.
I agree with that. The inflation rate has been coming down.
Okay, I want to take the end of the month.
He
All right.
deserves credit for what he's done once he finally started cutting, and now he's cut 75 with the 2-year going up. He's right to be in a relaxed frame of mind, and his mood and demeanor in the press conference were very good. I thought his answer to "Are you going to be demoted?" or "Would you step down if Trump asked you to?" I thought that was a great answer. You know, just no hand waving.
Yeah.
He's not stepping down.
I think that's
good.
Yeah, I think that's why we played it. It had a bit of I don't know, drama necessarily to it.
Okay, let me mark this up on the chart.
Answer that. I mean, how do
Intel.
you view that? I don't know if it's a wild card or not. You know, that Powell obviously thinks he has some room ahead to continue to cut rates, right? He made that clear. He thinks they're too restrictive. To the degree of which they are, that's still unknown. But he also is potentially going to be dealing with reflationary policies from a new president. At a time where the economic backdrop, Jeffrey, is pretty good. It just creates tension, I think, in the relationship, if you will, moving forward.
Out west, Sparta.
Yeah, I think that's right. I mean, I think there is a risk of a reflationary policy. We don't know what the tariffs are going to look like. They could be, you know, surgically applied, which would be great because that's kind of where it was the last time. Or they could be, you know, just very heavy-handed. That would obviously be potentially inflationary, depending on what method is used on these tariffs. And of course, tax cuts that he's talking about are horrible for the deficit. So we've seen that, and I'll just repeat it one more time. As Trump
Upstart. Joe Kay was talking about this one too. Upstart, just getting started. Upstart.
Stocks going up. So it's been
Okay, when are their earnings? Upstart.
I don't know why that one should expect that to change.
Upstart.
In the near term. I mean, we have to see what happens come January, third week of January.
Joe Kay was talking about them, right?
I'll be monitoring the rhetoric that comes out of Trump very carefully.
Oh, okay. So this technically looks good, but earnings-wise, not so good. Upstart. Okay, if you guys are thinking about trading it, technical patterns look good. The volume looks good. So they're buying, hoping that earnings will get better, I guess. Here's Upstart. I'll pass.
This meeting is really very inconsequential. I think what we see December
Burlington?
and then
Okay.
the first meeting of 2025 is really going to be very important.
In terms of the, you know, I guess the drama between President Trump and
Lucid?
Powell, we've seen this movie before. We'll
Okay.
see if the sequel is nearly as dramatic. It'll be fun to watch. Let me ask you this: of the Trump trades, if you will, the one that we saw to the downside was China. You've told me for many months that you liked India. Do you like it more today because you anticipate higher tariffs on China? How do you view that whole paradigm?
Well, I like India a lot for the long term. I mean, it's obvious that they're on the ascent, not just demographically, which is extremely strong demographics.
Okay, let me mark this chart up. SMR. Yeah, I would love to see this thing just go to the moon.
I think that's not something
Okay.
I think about as a
Okay, we've got 20 minutes to go. 20 minutes to go.
multiple year I think
Okay.
it is a great place to be for the long term. The dollar is very stable. Oil has been very stable. It's really remarkable.
25.30.
Seen such volatility in gold and silver being up so much. Now Bitcoin is on a moonshot.
Minus 25 plus 30.
Yeah, I
Did you go out and buy some Bitcoin on Tuesday night?
No. I have no interest in cryptocurrencies, but I do think that it's interesting that gold has been rising and silver has been rising relentlessly pretty much all year.
Okay. And the downside, what do we say, 18 and 13?
Type of a mood
18.
Central banks are buying gold like
I could see it get to 18.
retail buying.
That I could see.
Costco's selling gold and they can't keep it in stock.
13's way down here.
People
Wow.
are viewing Bitcoin and gold.
Okay, that's a little bit
not
higher.
Speculations as much as they were 5 years ago.
And looks
as
more the
permanent
same.
portfolio allocations.
That's up
And
there.
I do have gold in my portfolio.
Okay,
so
and
I continue to hold gold. Bitcoin is for I'm a coward. I can't stomach that type of volatility.
SMR.
So that's why I do bonds
21% move by the end
let
of
guys have their fun. But I'm a
21%. Okay, 21%.
So I don't have a
Maybe some calls to the long side. SMR.
All right.
Let's see what
we'll
the
leave it
calls
there.
look
I
like.
think we covered so much. I so much
SMR.
appreciate your time as always. Jeffrey, thank you.
All right, we'll see you in December. I guess the next one's
They're pretty-
December now? I guess so.
December. Yeah,
Pretty
we'll see you in
pumped
about a
up.
month.
Yep.
See what happens.
Pump up the volume.
All right, good luck, everybody.
Maybe
See you
Friday's
next time.
calls.
Yeah, you as well. That's Jeffrey.
Tomorrow's
Goldbach,
Friday.
Double line once again. Up next, much more on today's
Yeah, the
market
implied volatility is really pumped up on these calls. You have to do a vertical. So I won't do that. I'll sell premium though. So that's Upstart. That's Upstart. SMR. No wonder. SMR for Friday. I'd like to lean bullish on this one. 23. 23 is a buck. Okay, I'll bite. I'm going to buy a couple of calls on SMR for earnings. The 23 strike. Or should I do the 22? 22 is only 35 cents more. I should do the 22. 22. We're at the money. In the money. Yeah, I'll leave it alone. I'll sell the iron condors and I'll buy the 2250s. 2250s. Okay. Is Mr. A Ali? Frank, is that what you mean? Lucid. Okay. So Apple making new highs. Apple new high today. Apple's new high today. Sold a little bit too soon. That's okay. That is okay. Probably going to follow through. Okay. SMR. %121% IV for end of the month. For okay. IV 121%. DTE November 29. Credit $1.53. $153 per contract. 153 per contract. Okay, so that's SMR. Okay, I'm going to buy some 2250s just to lean bullish on this one. I have no idea what this is going to do. I mean, this is a relatively new name that we've been trading. So this could very well go to 17 or lower. So I have an iron condor and I'm leaning a little bit bullish because these stocks are just doing really well. And earnings have been good across the board. Don't gamble it. I'm just basically paying for calls with the credit that I'll get from one side of this trade probably. Home Depot, going some more. Home Depot, new high of the day. Home Depot looking good. Looking good. Ba-da-ba-ba-ba-da-ba. Okay, let me just put the other strikes on here. Annotate. Okay, 18 and 13. Short the 18, long the 13. Okay, again, I don't mind if I get a sign this one. Though I don't think I will. I mean, I got several weeks to do whatever, decide whatever I want to do with this. Okay, we got 13 minutes to go. We got booking.com also is another one. You've been in it since 11? Good job there, Frank. Yeah, nice job. Oklo, still going? Nice. Very nice. Very, very nice. Love when the markets work in your favor. Everything's doing the same thing. Okay, what's Bitcoin's at the high of the day? Bitcoin. Microsoft making new highs, looking for a follow through tomorrow.
Market Zone, CNBC senior markets commentator Mike Santoli and Vertus's Joe Terranova here to break down these crucial moments of the trading day, this Fed day. Plus, here Jabosa has the setup ahead of Airbnb earnings in overtime. Joe, I'll turn to you first. Your reaction to some of the things that Jeffrey Gundlach said in reaction to what the Fed chair said.
I think Jeffrey's spot on in identifying that the potential for the long end to back up is a significant possibility. I think Jeffrey's right to identify we're seeing a rally in some of the precious metals. But I also think that Jeffrey's tone is one that I share. where I think you have to be optimistic about where we are in the investment environment. And I think we're making a tremendous mistake here. We listened to Chairman Powell's press conference. We listened to it, and I think a lot of skeptics about where we are in the marketplace were attempting to hear something that would disrupt this rally. You're not going to hear that. You're not going to hear that from Chairman Powell. And let's remember that the scoreboard for President Trump is the stock market. When President Trump was elected in November of 2016, the first thing that happened in December while his transition team was working was the Fed raised rates 25 basis points. And in 2017, they raised them 75 basis points on 3 meetings. And then in 2018, they raised them 100 basis points on 4 meetings. We're in a completely different situation right now, Scott. The Fed is actually cutting rates. We're looking for contention between the Fed chair and the president that I don't think is real based on where we are today.
Yeah, it's like candy for somebody who has made a career of hoping for low interest rates. I mean, it's just what you do and how you do it. That's what you want. What'd you make of what Jeffrey said?
I mean, maybe it's the slow pace and the wait and see posture that
Okay,
might at some point create a little more static.
Coinbase,
But right now, I think the
CONL,
market wasn't really expecting much beyond confirmation that the plan is in place.
Coinbase, CONL. Okay, that's
High
good.
for where inflation is. They've thought that for a while. They're normalizing it. They're hoping the Treasury yield curve normalizes. Powell could not be pulled into making grand declarations about the message of long-term yields going up, because honestly, I don't know why there's this much fixation on a 4.2 or 4.3% 10-year Treasury yield. We were here July 31st, sure, above there in April.
All right, what's Twilio doing? Twilio, you know what we're thinking on Twilio. This one's got a long way to go. Twilio. That's institutions buying Twilio. Here's Twilio. Look at that volume. That's institutions. More clear though is the weekly on Twilio. Okay, we'll stick around this one for a while. Twilio. Okay, the weekly. You can see the targets. If this gets anywhere near a retracement off of the all-time highs, 138, 236. Looking for 100. Hopefully we can get 100 by tomorrow.
They're not exactly sure where neutral is. They know they're too restrictive, so there's still a lot of wild cards.
There's plenty of play in all of these questions, and I do think that's why it's probably into next year that it becomes a little more.
Okay, NVIDIA.
Because another quarter point from here, they're still not.
Okay, right at the highs. Boeing. Okay, I'd like to see that break higher next week. Home Depot looks good. Apple. Apple, nice day on Apple. Okay.
But until and unless that happens, I don't think that's the thing specifically to worry most about.
I focus on positioning. And let's remember, we're still not certain that it was fundamental forces that we got that backup in yields from the last Fed meeting until the current Fed meeting. I think a lot of it was technical in its nature. I think you had a market as it relates to the Treasury market where speculators had gotten very long because they thought the economy was cooling. They thought they were going to get 50 basis point consecutive cuts beyond September. And I think now you've got a Treasury market where speculators are actually very short the market. So I like that Chairman Powell gave the example of the last time that a 10-year went up to 5%. And he kind of dismissed it and basically said, oh, yeah, it went back up to 5%. And it came right back off.
That's why he said, well, right now it's not a major factor in how we're thinking about things. We're watching it. Let's see where they settle. It was not exactly fully dismissive of it, but certainly didn't sound concerned. Let me ask you this. As an investor, yesterday was such an enormous move in so many things within the market. Does that color your opinion on where and how you would put money to work from here forward? Because so much happened yesterday in so many different parts of the market. It's like, well, I liked Bitcoin before, but wait a minute, that was like above 75,000. You know, I kind of like growth stocks like Tesla, but that was up like 20% this week. How do you play it now?
So I think where momentum was working, that intensified, and momentum by itself is a very powerful force. I think you stay with that. But I also think we were reminded of the opportunity regarding just investing in the U.S. itself. Because you looked at yesterday's tape, and what did you see? You saw large strength here in the US, but not so much beyond the US. It doesn't mean that you want to have some exposure outside the US, but I'm not necessarily sure that you need to. I also think a lot of what we saw yesterday was the expectation that finally the Russell 2000 comes out of its earnings recession, that you could see profit margin expansion and earnings growth.
6%.
It was up 6% yesterday, and today it's pulling back slightly. I still think you stay mid cap and large cap. You play the broadening out in mid cap and large cap, and let the Russell really prove itself that it's going to come out of that earnings recession.
All right, we'll come back to you guys in a second. To Deirdre Bosa now on what to expect with Airbnb and OT. D?
Hey, Scott, it's all about bookings and demand expectations. Last quarter, you might remember the company warned of slowing U.S. demand. The Paris Olympics likely provided a boost for its latest quarter, but most importantly, how is the upcoming holiday season looking? When I chatted with CEO Brian Chesky a few weeks ago, he said he was very confident over the long term that demand is going to remain strong. He's encouraged by the trends that he was seeing. So I'm curious to learn how he plans to capitalize on those trends, as well as how he will continue to build now that the company is in growth mode. Another area to watch is marketing spend, as Airbnb increasingly shells out to compete with the other OTA home sharing units, and how that could impact margins. Scott.
Dee, thank you. We'll see what happens. Deirdre Bosa. Mike, I'll turn back to you. I'm curious as to what you think about, the Fed chair is pretty confident that inflation is going back towards sustainable, I think is the word that he used. Gundlach thinks it may go lower than target. He's been pretty consistent on that quote. If we keep the price of oil around low 70s, we're going to see headline inflation below 2% in 4 to 5 months.
Right. I mean, I do think that's kind of where the math gets you, maybe at least on CPI. And sure, I mean, I think it was interesting in the press conference when Powell was asked about the removal of that phrase in the statement, where they had previously said they're confident that inflation is heading toward target. And he basically said, no, that wasn't really a coded signal to suggest that we're losing confidence or that the trajectory's changed. I think the market took some heart in that. Interestingly, too, he was also asked if they would like to see inflation go well below target for a while, spend some time there, because they had this idea a while back when inflation was too low that you had to let it sit higher than 2% for a while to even out the long term. He basically just threw cold water on that. It's like, nope, we're not playing that game. We're 2% to target, so we're not going to fight for super low inflation. So I think right now, those are all questions for once we get closer to target and closer to neutral in terms of the range.
I also thought Jeffrey Gundlach highlighted something that was important related to the difference between how the Treasury market might be trading, but how the corporate bond market is trading. The corporate bond market is trading incredibly well. Issuance is coming.
Spreads are tight.
Right, spreads are tight. Any new issuance, there's very strong demand for that new issuance, and we're going to see a lot of new issuance coming out on the other side. I also think we're going to go through this period here as we move into the new year, where the animal spirits return, where you see M&A return. And the other thing is, you have people that say, okay, well, potentially we're going to have a lower corporate tax rate, possibly, right? But we're not going to feel the effect of it. Yes, you are, because CFOs are going to see that. They're going to know it's coming, and that's going to increase CapEx.
In terms of high yield, the high yield trade, the animal spirits idea, introduces the idea of more risk taking. He was pretty clear that he wouldn't go too far out in the high yield curve here of thinking about where you want to take that
risk. If it's
risk.
CCC right now, something went wrong, right? In other words, it's not like you're going to go out and issue a lot of paper at CCC as a fresh deal. So I think what he's basically saying is, don't look at the broken merchandise. You got a decent risk reward and good yield.
Yeah, too much good out there, right? But you don't have to reach.
But that being said, this idea that animal spirits have been dormant is a joke. Okay, the market's been ripping for a long time. Credit spreads have been tight for a long time. Flows have been pretty healthy.
Only in M&A, it's not a joke.
Corporate activity.
And I think that's where we're focusing on, not in
Right.
equity market, please.
And that's probably good for small caps, because a lot of those companies, the way they lead the index is they get bought.
Right.
And it's probably good, and it's actually good for the investment banks. But by the way, Goldman Sachs stock has been going almost vertical, and yesterday it went literally vertical. Okay, so this is not underexplored territory here. We're here, guys. It's not the beginning of a cycle. It might be the acceleration of a cycle.
Well, it could be the beginning of.
Okay, folks, that's it for me. I got to run. I got a hard stop. Have a great evening, everyone. This is your host, Cousin Benny, coming to you from theclosingprint.com at the closing bell, Thursday, the 7th of November. Hope you have a good evening. Take care, and we'll see you in the morning, bright and early.